need to be cognizant of. The most important headwind is inflation. If inflation comes back, if interest rates go higher, the fact that India is creating a lot of import/supply side barriers, that surely will have a large impact on the way how RBI could move in coming years. There is abundant liquidity in the system. Banks are not lending, but PSU banks, given that this is a COVID year and IBC implementation has got delayed, they would be needing recapitalization again. So there has to be renewed interest and attention on bank recapitalization. And third, and the most important aspect which we need to be cognizant of, while we can say that global liquidity is low, the domestic investor is clearly not very excited or happy, looking at the way how Indian markets of late have only moved on FI flows. So this budget really has to be not a blend, but this budget has to be a clear indication that the finance minister is ready to take a giant step forward where she can convert this crisis into an opportunity like never before, where fiscal deficit number will be ignored, global tailwinds are abundant, and this budget, if implemented with the right reforms, I think can really change the course of India.
That's right, Nikunj, and what the two big numbers that the market always is fascinated with, and you see knee-jerk reactions coming in, is A, the fiscal deficit number, obviously, and B, of course, the disinvestment target as well. So let me quickly walk you through what is it that we're penciling in when it comes to the deficit figure first. First of all, a high number of 6.5 to 7% is already discounted by the markets. Also, it's important to note that India is not alone in missing the fiscal glide path. That's pretty much the same state across the globe and across emerging markets already, countries that is. FY22 expectations are running anywhere between about 5 to 5.5%, and just to put it into context, as a percentage of GDP, the fiscal deficit figure for FY18 stood at 3.4%, and for FY20 it was 4.59%. Now, to fund this fiscal deficit number, the government needs to raise resources. How are they going to do that? The big one, of course, is disinvestment. That has to be strong for the next year. Now, remember, for FY21, the shortfall was already there, which also means then aggressive FY22 target. Remember, ET Now exclusive, we told you first that FY22 disinvestment target is likely at about 2.5 to 3 lakh odd crore rupees. Now, strategic sales have not been easy, so that's the tricky part here. The budgeted for FY19 stood at about 8,000 odd crore rupees. The actuals went to about 8,472 crore rupees, and similar was the state for FY22 and FY21 so far as well. Now, the FY22 divestment roadmap is looking very promising. You've got a very long list, starting off from Air India to BPCL to Shipping Corp, BEML, Concor, LIC. I can go on with the list, but let's see what the finance minister has to say about this particular figure as well. But tell me, Nikunj, from a market's perspective, what is going to make the markets happy and unhappy? Because traditionally what one has seen is that the budget has increasingly turned out to be a non-event for the markets.
Markets are about sentiment. Markets are also about positioning. And markets are about anticipation. Even though this is an anticipated event and this is the first budget of this decade and it is coming when the backdrop is noisy and in general the economy is enjoying benefits of lot of tailwinds both locally and globally. Every data indicator is looking quite conducive and quite impressive. The markets have not really been very excited about this year's budget. In fact, last week Indian markets got smashed and I've been told that this is one of the biggest pre-budget sell-off which we've seen in almost a decade now. Historically also, on the budget day, the market movement now is getting slightly narrower and narrower. And that data point will just come up on your screen, that how exactly markets have moved in anticipation on the budget day. Post the budget day also, we've always seen a similar pattern. Volatility tends to rise and then volatility tends to come down. And I will not be surprised if you actually would see that kind of a phenomenon. Of course, just to remind our viewers, last year's budget was on a Saturday when institutional investors were not there. The reason why markets have been nervous sometimes ahead of the budget on the taxation front is that last couple of budgets have only increased the taxation on market participants. 2018, LTCG, which in a sense knocked the wind out of a lot of mid and small cap stocks which are yet to recover from 2018, which are yet to revisit their 2018 levels. Then there was tax on buyback, which made life slightly difficult for companies who were considering buyback, and a lot of boards now have decided not to go ahead with buybacks as it's not very viable. And then, I won't say the impossible happened, but now if you are a recipient of a dividend, you would be taxed, which in a sense is something promoters do not want to pay, because if promoters are in the ultra or super rich category, the dividend is going to only add to their taxable bracket. And as a result, companies now are generally reluctant of either doing buybacks or giving a lot of dividends. This is the reason why markets in a sense have not really got something which could be called as a bit pot of gold in last budget. But this time around, things are different. Things are different. Why? Because the government has to meet their fiscal targets. If they have to prioritize growth back, if growth is the holy grail and the biggest welfare which the government can do, then they need to sell government assets, which is why the disinvestment route. And disinvestment can only happen if the stock markets are very vibrant. So I doubt that the markets would like to do, the government would like to do anything in order to really hit the market sentiment very, very badly. So from a market standpoint, if this is a no harm budget also, I think markets would be mighty excited.
Let's also take a look at some of the other parameters that we've been tracking over the last 1 year, some of the other asset classes as well, and just see how those indicators have been shaping up and what we're really heading into this time around when we watch out for the budget. Now, the dollar index, if we take a look from last February 1st to this February, exactly a year, we've actually cooled off from about 97.4 to about 90.7. So we've seen that shift. We've all been tracking that move on the dollar index as well, taking a look at what kind of impact this could make, whether it be, of course, on export-related companies or industries, as well as, of course, on the overall situation with regards to the index and fund flows. Gold has been on a stellar rally, and that's something that we've been keeping track of as well. We're seeing it currently at 1839 per ounce, whereas a year ago it was at 1589 an ounce. So spectacular rise that we've seen in the asset class naturally as well, given the kind of volatility we've been going through over the last year. Crude, we saw that massive plunge in crude in 2020, but what a recovery. We've actually started to see crude climb back. So from 58.2 last February, we're now at 55 per barrel, which is still a relatively smaller gap than we saw a little earlier on in 2020. So crude definitely starting to see a little bit of a climb, but whether or not it actually moves higher from here is still questionable, given, of course, some of the concerns around global growth. The US 10-year yield, and let's take a look at that, from 1.5% to 1.11%. That's the difference in a year. The 10-year as well is from 6.6 to 5.9. A lot of wonders and queries, concerns about whether or not this is indicative of an impending recession, particularly on Wall Street, and a lot of continued speculation about the spate of easy money that's of course going to be continuing for a while. And just ever so recently, just up till a few weeks ago, again we saw that pressure building on the yield. So that's continuing as well, and that's another another indicator, of course, that we'll be monitoring going forward. Finally, the Indian market cap to GDP ratio, 0.9 a year ago, it's now 1.4. And we have, of course, been seeing a lot of indicators to do with the growth with regards to the capital markets, which have been completely gung-ho, as well as capex announcements from some of the key heavyweights, expansions, consolidation across major industries as well. So while there have been industries that have been hit very hard and have been lagging, there have been a fair few that are also keeping that balance and contributing to growth, which in the most recent predictions from the IMF, we could start to see back on track here in India. So those are some of the indicators we're watching out for. But while we take a look at everything else that may also be impacted this time around by the budget, let's go across to Nayantara. Infrastructure stocks, direct overseas listings, those could be on the radar for startups. Nayantara has that exclusive.
The expectation is Finance Minister Nirmala Sitharaman will announce measures to give a fillip to the real estate sector at large, which has started making signs of a comeback. The focus, of course, will be on housing. One of the big ideas that we understand that the Finance Minister had received a lot of proposals for and a lot of work that actually went into was to boost rental income, with the idea of bringing domestic capital and domestic corporates back to the real estate sector. So the idea is that you increase the income tax rebate on rental housing to 50% from the current 30%. So once that happens, it believes that it'll become attractive to the corporates. Go back to the days where the likes of ITC and the Reliances and the L&Ts provided housing to their employees. You also then address the entire problem of unsold inventory. So that seems to be one of the ideas. We're also being told that perhaps you could see an accelerated depreciation as far as commercial buildings go. And the standard one of a higher tax rebate when it comes to home loans. Some kind of an intent in announcement when it comes to direct listing overseas. This has been a huge ask by founders as well as by investors for Indian startups and unicorns to list at the NASDAQ in the United States or at Singapore or Hong Kong. Basically, where you already have depth when it comes to the tech companies, investors that understand SaaS companies, consumer internet companies, all of that. It's something the Prime Minister has hinted at in the past. So that is something that the expectation is that we could see being announced by Finance Minister. The question, however, is that will the listing overseas have to be mandated with a secondary listing in India? And that's what all founders and investors want to know. We are also being told that maybe it won't be the underlying share of Indian unicorns and startups that could be listed overseas, but a new creature, some kind of a hybrid model. Could it be, for example, depository receipts? And then you see ADRs, for example, being listed in the United States.
Okay. Sources also tell us that the government is likely to aim for an FY22 divestment target of 2.5 to 3 lakh crores. Ruchi is joining us with more on that story. Ruchi, what can be expected here?
Finance Minister Nirmala Sitharaman has her task cut out. Today, all eyes will be on her as she will look to push growth and she will look to spend more. Spend seems to be the mantra, and we at ET Now are given to understand that we are likely to see the highest ever spending being done by the Finance Minister in this budget. And in fact, sources tell us that about 15 to 20% of higher allocation is likely in sectors such as health as well as infrastructure. So these two are the focus areas. On the other hand, if she has to spend more, then she needs more money. So where does she get more money from? We're given to understand that this could be the time when the Department of Investment and Public Asset Management (DIPAM) may be given the highest ever target of anywhere between 2.5 to 3 lakh crore rupees. They already have a pipeline with BPCL, Shipping Corp, BEML as well as Air India. They have listing of LIC that needs to be done, a stake sale in IDBI Bank that has to be done, and we're given to understand that the budget today will be rolling out the all-important PSU privatization policy as well. The cabinet has already given it a go-ahead. It is all on now to the finance minister. Besides that, we're also given to understand that financial sector vulnerabilities are on top of the mind for finance minister, and which is why for the banking sector we could be seeing a high recap amount coming in. And besides that, looks like bad bank is an idea whose time perhaps may have come, and a national level AMC and an ARC could be on top of the mind for finance minister, as she's looking to spend more to get more money and also save the PSU banks.
Okay, that's a lot of budget buzz setting the context, but let's get back to action. What's the day looking like? As I see on my screens, you've got the SGX Nifty staring at a very flat move. But remember, just to put things into context, we're coming out of a 6-day massive sell-off for the market from that top of 14,700 in the Nifty and 50,000 in the Sensex. It's been a one-way spiral down. Having said that, it's not been alone. We're not alone in this weakness. You've also seen global markets come off with as much pace. So let's take it across to our chartists and find out what could be some lucrative budget trades for that matter. Kunal, Naresh, hi, good morning. Big day, and more importantly, first day of the new series on Friday. We've seen FIIs come out with a massive sell figure, the highest we've seen in the recent past. Is it even advisable, Kunal, firstly, to trade the budget today?
So good morning, Aisha. Let's hope we have a fantastic budget as per what the markets are expecting. Now, you have a very valid and a very right question that whether it makes sense to really trade the budget volatility and just to try and ride out this kind of volatility. Yes, I would completely agree that there is no hard and fast rule of trading the budget. And I for one believe that last 3-4 months have been just about a dream come true for many of the market participants, be it traders or be it investors as well. So just skipping out on a couple of days of trade would not be a bad idea. But then the markets would, the way in which the markets have entered into the budget has been on the more lucrative side, I believe, because what's happened in the last 1 week, 10 days is that the selling pressure has led to many of these stocks coming back into an extremely oversold territories. And when you have such kind of a scenario, it's like the back is behind the wall. And there's not too much of room for the markets to go, at least on the downside, in the very, very near term. Yes, budget volatility could probably happen, but then you have to look at it in a much more larger scope. A fall of almost 1,000 points on the Nifty, 3,000 points on the Bank 50, and the indicators already call back into the oversold territory. So I think that's where the advantage is, that if the budget is more on the positive side, then I believe you may not just see a one-day revival, but you could probably see a multi-week or a multi-month revival as well for many of the stocks and sectors. So it's going to be interesting day, because the markets, the way in which the markets have entered into the budget is more on a cautious note. But then the advantage could be on the bullish side if there is any kind of a tinge of positive aspect towards the budget today.
Right. Naresh, message morning firstly, don't try and be brave. It's fine if you sit on the sidelines, and if you have to really trade, wait for the budget speech and then take a call.
So the way to look at it is, if you look at some of the major budgets over the last 10 years, there were two critical budgets where basically the trends changed a lot. So that was one in February 2016, and then was one in February 2018. Now the difference is February 2016 is when there was rumor of a LTCG tax coming in, and February 2018 is when it actually came in. So what happened in February 2016 is we were down almost at 68.70. That was the same price almost 3 weeks before that. The markets across the world had already bounced back 5-7% by that point, and that was the bottom for the whole year. Same way, 2018 was the point where a dollar index plus global indices, a lot of topping out signs has happened. and at the same time we got LTCG in place. So what we see is unless there is something which is drastically something which the market does not expect, the budget ends up being just another day. It's only these 2 points which were there, which was again has to coincide with the global indices and the global trends also. So what we've seen is today's day could be seen with perspective to the fact that the global markets have also corrected, and they're also a little oversold in the near term. So there is not much to be done in terms of a trade as such, but as an investor, a good 7-8% from the peak is a time to start dipping into a bull market. So what we see is that 13,600, 700 is one place where you get in. And if there is something of a big reaction closer to 13,000, 13,300 is another price point for a long-term investor to get in. Because very well this could end up being a short-term bottom with and the markets are going pretty light into the trade today. So we have seen a good cut as well as the open interest levels or overall volumes, etc., have been much more lower going into this move. So stock specific, this could be a time to look out for entry. And overall, post the budget, if we see a follow-up action on the upside, that would be an indication of a short-term reversal. So we'll be watching out for where we close today and what actually happens the next day. So what we've seen is in February 2018, we actually saw the markets flat on that day or very nominally down, but the next day we saw a 3% downtick. So that was a confirmation of the markets not liking it. Same way in 2016, we had a gap up the next day. So I would prefer looking at the next day more than today, because today could be a lot of volatility, but tomorrow's trend could actually give you a very strong indication of where the markets are headed. So that's the way I would look at it for the day. And a couple of stocks which I would look out for right now is trying to be, one is if one is taking a risk is L&T, which has rallied a lot. It could be a risk reward stop loss at 1360 and a target was of 1280, 1250, because that was where there could be some volatility with the expectation of the budget. The other trade is one which is not dependent on the budget. It could be an UPL where it has shown relative strength. So that could be something which would go up to 600 and a stop loss at 545.
Sure. Okay, I just want to quickly highlight what's the global setup as well that we're staring at, given the 6-day sell-off that we've seen in the market and the fact that we've now reduced to 13,700, just about scratching that surface. It's critical to note that market participants, not just aligning themselves with the way the global markets were panning out, or for that matter, that, intermediate dollar strength which played out, and which is why you saw emerging markets as well come off. But the fact that ahead of the big event, that's the union budget, which is going to be tabled in just a few hours from now, market participants want to go light into this big domestic event as well. So take a look at the global market handover. While you've seen, again, big cuts on US markets overnight and Friday, about 2% pretty much across the board. Asia, though, is not quite mirroring the same sentiment. Asia is a much livelier picture this Monday morning. You've got a 1% uptick coming in for Japan, Shanghai marginally up in the green, about 1.25% up for Hong Kong as well, and the periphery markets are also floating in the green. Having said that, the SGX Nifty is lying absolutely flat. You're not seeing any move whatsoever, not reacting to the US markets, or for that matter, the momentum in Asia this morning going absolutely light into this big event. Just marginal uptick there, 13,759 thereabouts for the SGX Nifty right now. Tell you what, we're going to take a very quick break. Of course, in the next few hours, we've got the who's who from India Inc., from ministers as well as market participants joining in, telling us about what to expect from the union budget, and then, of course, thereof dissecting the finance minister's third full budget speech as well. All that coming up shortly. Take a break. Be right back.
App. That too without asking us. And you want to give him more money to spend.
I know, Baba, but instead of punishing him, maybe we can teach him this way.
Teach him what? कि और पैसे कैसे उड़ाते हैं?
He'll have his own card and he'll learn early on that if he spends, he need to return it also. It's a good idea. Think about it.
Okay, fine. We'll try it. But you're his guardian, not me.
हाँ हाँ मेरा बेटा है जल्दी समझ जाएगा.
अच्छा वो जो तुमने आज तक नहीं दिए.
A wise decision is wise only if you pass on the advice. Teach your children the value of investing and compounding early.
The world has been forced into a standstill. Every day, the battle becoming more uphill. Now, more than ever, it's easy to believe all the naysayers who say the Indian economy will struggle to recover. All the doomsdayers who think it's time to look for an exit strategy and cower. Well, no one believed India could win the 1983 World Cup. But we did. No one believed a man from rural India could develop an affordable sanitary product. But he did. No one believed India could send a satellite to Mars. But we did. Every single time we were backed into a corner, we came out swinging against all odds. Despite every obstacle, it's time again for a rematch. You ready for it?
Hello and welcome to Budget Day coverage live on India's #1 business channel ET Now. In less than 4 hours from now, Union Finance Minister Nirmala Sitharaman is expected to rise on the floor of the Parliament and present the first budget of this decade. A budget where she already has indicated and stated will be a budget like never before. Historically, we've always judged budgets based on a balance between fiscal prudence and financial growth. But this time, given that this is a pandemic year, the budget will be centered around healthcare, prioritizing reforms in the banking sector, and also kickstarting the economy. So let's look at the construct of the economy. The construct of the economy is that we still get 65% of our GDP from the services sector. This is one sector because of pandemic, lockdown, unemployment, job losses has taken a hit. And the best way to revive this sector is to perhaps focus on the vaccine rollout, which automatically will bring the fear back and will really kickstart or normalize the service sector in the country. The other most important tailwind which the finance minister will perhaps like to encash on is that according to the economic survey, for FY22, India's GDP is likely to grow in double digit, which means the nominal GDP could be in late teens and the tax collections could be going up exponentially, something which she is very cognizant of. Also, fiscal deficit. For a change, the hands of the finance minister are not tied because of fiscal constraints. Rating agencies, frankly, will not care about the fiscal deficit number, given that globally, all governments are running a high fiscal deficit. That is something which will encourage the finance minister to spend a bit more. If she has to prioritize growth, it can be done via government spending. Then global interest rates and stable oil prices. Oil prices were low, but I would say they are stable now. Given that now India has been a huge recipient of global flows, both FDI flows and FI flows, we have a high forex reserve. This is something which naturally is a big cushion in case you are looking at big bank borrowings. So multiple tailwinds can really be converted into an opportunity like never before. An opportunity when this budget can really alter the course of India's economy, not from survival to revival, but perhaps from revival to flourish. But what are the headwinds? And there are also headwinds which you need to be cognizant of. The most important headwind is inflation. If inflation comes back, if interest rates go higher, the fact that India is creating a lot of import/supply side barriers, that surely will have a large impact on the way how RBI could move in coming years. There is abundant liquidity in the system. Banks are not lending, but PSU banks, given that this is a COVID year and IBC implementation has got delayed, they would be needing recapitalization again. So there has to be renewed interest and attention on bank recapitalization. And third, and the most important aspect which we need to be cognizant of, while we can say that global liquidity is low, the domestic investor is clearly not very excited or happy, looking at the way how Indian markets of late have only moved on FI flows. So this budget really has to be not a blend, but this budget has to be a clear indication that the finance minister is ready to take a giant step forward where she can convert this crisis into an opportunity like never before, where fiscal deficit number will be ignored, global tailwinds are abundant, and this budget, if implemented with the right reforms, I think can really change the course of India.
That's right, Nikunj, and what the two big numbers that the market always is fascinated with, and you see knee-jerk reactions coming in, is A, the fiscal deficit number, obviously, and B, of course, the disinvestment target as well. So let me quickly walk you through what is it that we're penciling in when it comes to the deficit figure first. First of all, a high number of 6.5% to 7% is already discounted by the markets. Also, it's important to note that India is not alone in missing the fiscal glide path. That's pretty much the same state across the globe and across emerging markets already, countries that is. FY22 expectations are running anywhere between about 5 to 5.5%, and just to put it into context, as a percentage of GDP, the fiscal deficit figure for FY18 stood at 3.4%, and for FY20 it was 4.59%. Now, to fund this fiscal deficit number, the government needs to raise resources. How are they going to do that? The big one, of course, is disinvestment. That has to be strong for the next year. Now, remember, for FY21, the shortfall was already there, which also means then aggressive FY22 target. Remember, ET Now exclusive, we told you first that FY22 disinvestment target is likely at about 2.5 to 3 lakh odd crore rupees. Now, strategic sales have not been easy, so that's the tricky part here. The budgeted for FY19 stood at about 8,000 odd crore rupees. The actuals went to about 8,472 crore rupees, and similar was the state for FY22 and FY21 so far as well. Now, the FY22 divestment roadmap is looking very promising. You've got a very long list starting off from Air India to BPCL to Shipping Corp, BEML, Concor, LIC. I can go on with the list, but let's see what the finance minister has to say about this particular figure as well. But tell me, Nikunj, from a market's perspective, what is going to make the markets happy and unhappy? Because traditionally what one has seen is that the budget has increasingly turned out to be a non-event for the markets.
Markets are about sentiment. Markets are also about positioning. And markets are about anticipation. Even though this is an anticipated event and this is the first budget of this decade and it is coming when the backdrop is noisy and in general the economy is enjoying benefits of a lot of tailwinds both locally and globally. Every data indicator is looking quite conducive and quite impressive. The markets have not really been very excited about this year's budget. In fact, last week Indian markets got smashed, and I've been told that this is one of the biggest pre-budget sell-off which we've seen in almost a decade now. Historically also, on the budget day, the market movement now is getting slightly narrower and narrower. And that data point will just come up on your screen, that how exactly markets have moved in anticipation on the budget day. Post the budget day also, we've always seen a similar pattern. Volatility tends to rise and then volatility tends to come down. And I will not be surprised if you actually would see that kind of a phenomenon. Of course, just to remind our viewers, last year's budget was on a Saturday when institutional investors were not there. The reason why markets have been nervous sometimes ahead of the budget on the taxation front is that last couple of budgets have only increased the taxation on market participants. 2018, LTCG, which in a sense knocked the wind out of a lot of mid and small cap stocks which are yet to recover from 2018, which are yet to revisit their 2018 levels. Then there was tax on buyback, which made life slightly difficult for companies who were considering buyback, and a lot of boards now decided not to go ahead with buybacks as it's not very viable. And then, I won't say the impossible happened, but now if you are a recipient of a dividend, you would be taxed, which in a sense is something promoters do not want to pay, because if promoters are in the ultra or super rich category, the dividend is going to only add to their taxable bracket. And as a result, companies now are generally reluctant of either doing buybacks or giving a lot of dividends. This is the reason why markets in a sense have not really got something which could be called as a bit pot of gold in last budget. But this time around, things are different. Things are different. Why? Because if government has to meet their fiscal targets, if they have to prioritize growth back, if growth is the holy grail and the biggest welfare which the government can do, then they need to sell government assets, which is why the disinvestment route. And disinvestment can only happen if the stock markets are very vibrant. So I doubt that the markets would like to do, the government would like to do anything in order to really hit the market sentiment very, very badly. So from a market standpoint, if this is a no harm budget also, I think markets would be mighty excited.
Okay, in the next few hours, we'll have the finance minister deliver her first full budget speech. That's at 11 a.m. We've got a slew of ministers, market participants, India Inc. all join in to analyze what the budget could entail, and then after that to analyze the post-budget speech as well. But stay tuned. We've got a mega lineup right here in ET now. You can't afford to miss any minute of it. But Niku just wanted to understand, the trade setup for this morning. I know that we've had a one-way move up from the March lows, barring those few intermittent, knee-jerk reactions from the market. But increasingly, one feels that not just us, but the globe is setting into a bit of a risk aversion zone. Not just the way how we've moved in the last 6 days and that big FII sell figure, the largest that we've seen in the recent past, coming in on Friday on the first day of a new series. Now, whatever's happening with asset classes like a Bitcoin and the silver squeeze which is taking place.
Aisha, of course budget is important, of course budget is crucial, of course budget is a swing event. But even though markets have been on a one-way street from March low to, if I look at the mathematical graph here, it's been a one-way downward spiral in last 1 week. You could blame it on what's happening in global markets, all the confusion, chaos around first GameStop and now what is happening to silver, or you could just blame it on pure risk aversion and profit booking, which I think is now clearly evident in heavyweights like Reliance or even Infosys and TCS. Whatever may be the market positioning, Aisha, this time around, markets are telling you that the uniqueness of this budget will have a far-reaching impact on the economy, not just for 12 months, not just for 24 months, for next couple of years. Because for the first time, Aisha, markets will not be judging the budget on a binary outcome, which is growth versus fiscal prudence. This time, the budget in a sense would be judged, would be assessed, and would also be reviewed in the light of what is happening to the world and how essentially this budget can prioritize on a lot of reforms, some of the factors which we've discussed. So the point I'm trying to bring out, Aisha, is that unlike previous 3 or 4 budgets, where the budget day impact has lasted for a couple of days and at max a week to 10 days, this time you actually could see some large adjustment in stock prices. For example, if the disinvestment process is well defined, you could see re-rating in some PSU stocks. If banking sector reforms are introduced, RBI has already indicated that they are in principle okay if corporates, they get a stake in banks. That draft paper already is is already there. So then some of the mid-tier PSU banks could get re-rated. So depending on which way big and path-breaking reforms are done, the impact could be fairly long and lasting. Now for the day, I think it's very difficult to call, because you are stuck between rock and a hard surface. One side you got budget and the other side you got FI selling. Technically this market has taken a nosedive. So I don't think you can clearly judge the market mood based on budget. We are going through a very big churn in the global market, and that churn is happening not because of hedge fund volatility, that churn is happening because of what is happening with Robinhood traders and what is happening on Reddit forums. So it's very difficult to first get a handle of the global picture, and the global picture is not going to be moving because what's happened to India's budget. That is independent of what is happening. So locally you have 2 factors now: budget, which this time around is of obscene importance, and globally adjustment which is happening because of the chaos and the confusion, the give and take and the suspense and the admission, at least on some of the some of the Robinhood traders.
All right, let me also go across to Sandeep Sabharwal this morning. Sandeep, budget, while it's expected to be or has now been prone to being a non-event for the markets, the expectations this time so low. We've had the Prime Minister himself talk about how we've had 4 mini budgets over 2020, alluding to a slew of incremental reforms that they've tried to kind of put in place through the year. Will markets actually be perhaps relieved or reacting positively? Should we actually hear any kind of indicative steps towards future growth, towards capital outlay, whether it be on infrastructure, whether it be on further development? What could be the silver lining this time around?
So I think allocations to capital expenditure, etc., should increase. But I think the fact of the matter also is that in terms of fiscal deficit per se, so it's actually we need to look at figures. This year, the government is expected to borrow around 11.5 lakh crores, which is substantially greater than what they did last year, almost 4 lakh crores more than that. And next year, even with the improvement in growth, tax revenues, etc., the expected borrowing is still expected to be 2 lakh crores more than what it was in 2019-20. Now, as normalcy returns, as the extraordinary liquidity of the RBI gets removed, managing that borrowing program, I think that by itself becomes a challenge. So I think the next year is going to be, although the growth revival will be strong, the challenge will be to borrow non-disruptively so that interest rates in the economy don't go out. And I think that's where people will be interested to see what actually borrowing figures the government comes out with. And this doesn't include the state government borrowing, of course. So I think that's one critical part. The second is that this government has had a penchant for putting cesses, increasing taxes, etc., to take care of some event-led expenditures. So now, as per estimates, 50 to 70,000 crores will be required for the vaccination program, which the government will fund. I just hope that they don't come out with a cess for that. I don't think that will be taken positively at all at a time when we need to have for a revival in the consumption as well as the overall basket to happen. Any new cess introduction at a time when the economy is stabilizing and expected to recover will not be taken positively. So my hope is that they avoid that thing. They don't go in for another cess. The other factors obviously are that in terms of the disinvestment. Now, every year they come out with a huge figure which is not met. Now, there needs to be a serious attempt to achieve what they set out to do, and that can only be done through professional management of the disinvestment process. I don't think the bureaucracy is able to handle that. So there has been talk about some professional fund manager or a system being implemented to take care of the disinvestment process. I hope they go ahead and do that, because that's the only way they'll be able to get maximum value. Secondly, achieve the targets they set out for themselves. Except that, I think today the global events are much greater than an Indian budget.
Okay. I'm going to bring exactly that data out, that over the years the importance of budget is getting diluted. It's really getting diluted because a lot of reforms, a lot of processes have been implemented outside the budget, and this year is no different. Having said that, if I really look at the stock market, and Saurabh Mukherjee, good morning first, I'm just going to read out this graphic and coming to you for a reaction. The stock market really in last 3 budgets have got nothing. 2018, it was LTCG, then taxation on buyback, then taxation on dividend at the end of the receivable. So Saurabh, from a market standpoint, if I look at the budget has not really been very kind.
I think because we'll see the continuation of that today. I feel as I think your other experts are saying, the fiscal space is severely constrained. And B, I think that the challenge in Indian politics has become, if you're kind to the markets, you are immediately exposed to the charge of being, Sood Boot Ki Sarkar. So both from a political optics perspective and this year from a fiscal constraint perspective, it's very difficult for the government to show kindness to the stock market. I think the best we can hope for is we don't get further hikes on LTCGT and taxes on the rich. And I think you yourself mentioned a few minutes back that given that they need a hefty disinvestment target, my reckoning is they'll probably gun for a 3 trillion disinvestment target, given that they need to push through heavy duty disinvestment and privatization and stake sales. Hopefully they won't do anything to dampen the stock market. But completely agree with you. This sort of obsessive focus on the budget from a stock market perspective is a little beside the point. The stock market sort of now exists in a way independent of the budget. Plus, to give credit to the FM, she's already done so much through July, August, September last year that there is very little left to say in the budget.
Saurabh, my next follow-up question perhaps is on assumptions. And let's look at the three most important assumptions. The first is going to be assumption on tax collections. Second, fiscal deficit number. And third, the disinvestment number. Where would you say, and what are your numbers which would say, look, these numbers are realistic and they're not sky in the pie?
So let's start with the disinvestment one, right? We've had a 2 trillion type number for a few years now, and clearly for obvious reasons that number wasn't met or even approached in the current fiscal. Given the amount of money that the government needs, revenues that they need to raise, plus given that they mentioned BPCL, Concor a year or so back, I reckon they'll gun for a 3 trillion rupees disinvestment target. And you've got good assets on the table, an LIC IPO, a Concor disinvestment, a BPCL disinvestment, whatever you can get from Air India, etc. That does turn out to be a hefty amount. So at least to set the expectations right, I think they'll go for a big figure, a figure which will sort of startle us. I reckon 3 trillion is the sort of figure they'll go for. I don't think it'll have a 200, it'll have a 300, perhaps even more. On budget deficit, I think what they'll be very mindful of is there's no point creating needless angst in the FII community, especially in the bond investor community, by having a very high deficit target for next year. So I reckon they will say 6% target for the next fiscal. What the outturn will be is anybody's guess, but I think it'll be very strange if they don't have a target with a 6% or perhaps even 5.5% handle. There is no benefit to be had by stating a 7% budget deficit target for the next year. And what was the third point you raised, Nikunj? I forgot the third point you raised.
No, first was disinvestment, second was divestment, and third was assumption for tax growth.
Right. So I think on the assumption for tax growth, they will take a cue from the CEA number on growth. So CEA is saying, IMF is saying, everybody is saying that looking at real GDP growth of 11%, add 4-5% inflation, you're looking at 15-16% nominal GDP growth. If you ally that to corporate profitability bouncing back post-COVID, I don't see why they shouldn't have a corporate tax collection number of around 20%. GST is doing the job for them. GST numbers are gunning along quite nicely. I think they'll bump up the GST number by 10-15. I think in corporate tax collections, 20% growth is what would be wise to expect. Already, actually, you can see even in the December quarter numbers. And remember, the December quarter doesn't have a favorable base effect. So even without a favorable base effect, in the December quarter numbers, you're getting earnings growth in the vicinity of 15 to 25% for several large companies, right? The Ultratechs, the TCSs, HDFC Banks, Asian Paints, right? You're getting 15 to 25% earnings growth numbers, even without a favorable base effect in the December quarter. So once the base effects turn, very favorable from April, May, June onwards, you should be able to get 20% growth in corporate tax collections, mid-teens growth on GST, and hence I think somewhere between those two will be their total revenue collection growth number.
Gentlemen, stay with us. Let's take a very quick break. In less than half an hour, we'll get the first pre-open rates. In 45 minutes, we'll get the first rates. But here's a reminder to our viewers that even though markets have seen a V-shaped rally from the March low, it's been a downward spiral in the run-up to the budget, and there is no excitement in terms of in pre-budget built-up, something which may just help bulls if the budget does not disappoint.
He knows the market trends today and has mastered them over the last 15 years.
Bringing greed and fear and business analysis together, I think that's what day in, day out Nikunj does.
He tracks the biggest business stories that impact the growth of your wealth.
Forces you to come up with a specific recommendation and not just give general answers.
His keen market sense simplifies financial jargon to make you market ready.
A market opening without Nikunj Dalmia, A, is clearly unthinkable, and B, it will clearly be less enthusiastic.
He is most trusted by market veterans and India Inc. alike.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing.
Nikunj, I must say you have good memory, or you're refreshing up from past recordings.
This is a sensitive question, a question which is absolutely critical to us.
No, beautiful question.
Very good insight.
A name synonymous with Indian stock markets. Nikunj Dalmia on ET Now.
With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do. We continue to be very well diversified across product lines. The general health of the company continues to be very strong. We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge.
Lockdown, there is someone playing on your fears and emotions. Online fraudsters. Let me share 3 ways in which they exploit your fears and trick you. They pretend to be bank telecallers and offer to help you secure a loan deferment as put out by the RBI. They will have your personal information and will try and gain your trust by asking you to verify those personal details. They will then ask you to download an app or click on a link and then share with them your OTP and PIN to avail of the deferment. But once you do it, your money will be siphoned out of your bank account. They will send you a message with a link pretending to show you a location or a heat map of COVID-19 positive patients near you, or even say getting access to unemployment fund. Chances are, out of fear, you click on the link or even download the app. But once this app is installed, your smartphone becomes remotely controlled and
Budget 2021. The Finance Minister is going to table which at 11 a.m. So shortly, we should see all the budget excitement kick in. And of course, the market open is also going to be important. Having said that, just the context that we're in currently, the fact that you've got a weak handover from US Qs, Asia though is buoyant this morning. You've got a big rebound play out in silver. Gold continues to be flat, but the silver squeeze which is played out, silver has moved 3,000 rupees in just the last two trading sessions itself. And to add to that, the 6-day sell-off that we've seen in the markets, optically it may not look as steep given the kind of phenomenal recovery that's played out from the March lows, but just successively and more importantly, the FII figure really. The fact that first day of the new series on Friday, just a day of the budget, we've seen a large, massive sell figure to the tune of about 5,930 odd crore rupees. Will the FII selling at least abate, if not turn net buy post the budget? Can the budget really pull that trick? I think that is something that we really need to see from a directional perspective for the market. But that's anyone's guess. Saurabh, just looking at taxation for market participants, the last 3 consecutive years have had something negative for market participants. Starting off from 2018 when LTCG was introduced, then of course, the levy of the buyback tax on listed stocks in 2019, and on 2020 you also had the levy of dividend tax in the hands of receivers. Will the Finance Minister let go of any taxation on market participants this time, or is there some expectation on some tweak here and there?
Look, I think to expect relief for the stock market in a year like this will be a little, I think, excessive. The best we can hope for, I think, as you're alluding to, is that we don't get further taxation on the stock market, especially the long-term capital gains tax number. I think if we do see that, that will be a near-term dampener. The main reason I don't think the FM will try to whack the stock market with higher LTCG at this juncture is the disinvestment point of view, which we were discussing a few minutes back. The government needs to expedite heavy disinvestment. It hasn't happened so far. This is probably the last election they will get. This is the last budget they will get without major state elections. I know we have Tamil Nadu and West Bengal, but the heavy-duty state elections, the heavy-duty assembly elections start in the next fiscal. This is probably the last chance you get to shore up the fisc before we enter the heavy-duty end of the political cycle. So my hope is that because of the need to disinvest heavily, the government will not hurt the stock market through higher taxes this time.
Yeah, makes sense. Saurabh, great to have you on the show. I'm going to let you go on that note. Good having you on the show as always. Sandeep, we've discussed this time and again. Disinvestment has been on the rollout for a while. Okay, unfortunate as it may be, the pandemic, of course, pushed back the entire process. But let's see what the government actually delivers this time around. An FY21 shortfall obviously is going to mean that there is going to be a very aggressive FY22 disinvestment target. Let's see what the Finance Minister has announced. But here's Vijay Kedia with his thoughts on the budget and what his budget trades are.
Which company in India, spends, say, 10% of their revenue every year on year in R&D. Tejas is one of such company. Once again, I will tell you, it is not at all a recommendation. My buying was at 40 rupees, 45, 50 rupees, up to 60 rupees. So I'm not saying, I cannot say at 110 or 120 or 30, you go and buy Tejas. Please do your homework. So what I'm just sharing, whatever points actually made me invest in this company, is that 10% of R&D spend year on year. And so far, they have invested more than 1,000 crores in their R&D, maybe 1,000 crore, 1,300 crore. And, in the month of June or July, stock was available at a market cap of 400 crore or 500 crore. And company has 300 crore cash in the bank. And they have developed a product. As I said, it takes time. A product you can't develop if you have to compete with Nokia or Ericsson or Huawei and all, which what Tejas is doing, then it takes time, because in India, R&D spends are very less. nothing, compared to what international companies are doing. So now this is what what Tejas has developed, and the application of the product which they have really developed, they are used in like fiber to home and 3G, 4G, and 5G. So I think they have good technical knowledge and competing with all Fortune 500, Fortune 50 company in the world. So, and because of this Atmanirbhar and whatever Mr. Modi's vision of India, Skill India or whatever, I think their time has come, and that is why I have bought the shares. I may go wrong, I don't know, but you have to be in the market.
Staying with the budget, and IMF's chief economist Geeta Gopinath spoke exclusively with your channel just a few days back about the need for tackling current fiscal financial crisis in this budget, and of course an aggressive disinvestment push as well from the government, amongst many other things that she is expecting from the budget. Listen in.
Budget will have to do two things, which is first, it will have to tackle the current crisis, and at the same time doing it with an eye on the future, which is putting in place the necessary reforms that are needed to accelerate the recovery and put India on a faster growth trend. Now, what exactly would that be? So firstly, if you look at the social sector, I think for now, there is a good argument to extend some of the pandemic support measures that were provided, which were lifelines to poor households, that in kind and in cash, that expired in 2020, that there's a good argument for extending that for 2021. Similarly, in the case of Manrega, they had expanded the scope of Manrega in 2020, keeping that expanded scope for another year. Maybe a useful thing to do, given again that the economy has not fully recovered. And remember, the numbers that we have usually don't capture well the informal sector, which has been very hard hit, and medium and small enterprises that have been hard hit during these times. And then on the health front, they have, expenditure has been put in now to make sure that the vaccinations roll out at a faster pace. I mean, that would be what is needed now. But again, then looking forward, India is a country that needs to scale up its allocation to health. It's about 1% of its GDP is typically what gets spent by the government on the health sector, which is much lower than its peers in terms of emerging markets. You need to ramp that up. A healthier population is a more productive population. It helps with poverty reduction. So that would be the forward-looking piece of it. The bad bank idea.
All right. The former RBI Governor Raghuram Rajan giving his blueprint for the budget, talking about the need for further spending, particularly on infrastructure, and a more collaborative process from the government, listening into consultations and different viewpoints. That's really his perspective, saying that more spending will really help to ramp up the economy.
The word prioritization is obviously very important. It has to prioritize spending, which means focus on what is essential. And I would start with relief to the poorer households and ensure that there is adequate relief to the small and medium enterprises. But then move on to how do you get the economy back on track? And clearly, one of the best ways the government has of getting the economy back on track is, doing the spending on infrastructure, much of which is done by state governments rather than central governments. So getting the money out to the states is quite important. This is the wrong time to starve the states. But making that kind of push, ensuring that the government has paid all its bills so that the liquidity goes back to companies who can use that for investment. Those are all aspects of what the government needs to do. So where does it cut? Well, it has to find places to cut. Typically, it starts with, okay, we're not going to use as much paper in the printers. Those are low ticket items. You have to find out, bigger places you can cut. But the greater sort of source of reducing the deficit may be in selling assets. And one of the things the government promises every time and defaults on is, selling government companies. They call it privatization. Nothing really has been privatized. What you've done is share sales. But even that, I mean, look,
Well, we're bringing you fresh visuals right from outside North Block this winter morning, waiting, of course, for the budget to be unveiled. The countdown is on. It will be presented in just a couple of hours now, and fresh visuals that we're showing you just outside North Block, the scene this morning, and how, of course, preparations are on, and we're just awaiting, of course, the Finance Minister to also present the budget at 11 a.m. this morning. This is the third budget that she's going to be presenting, and all eyes really on what's in store this time around. Let's in fact go across to a comment coming in from our consulting editor, Swaminathan Iyer. He also spoke to us about the kind of steps the government could take, possibly on special types of bonds or ordinary bonds to smooth the vaccination process. That was an unusual suggestion coming in, but exploring some of the different kinds of solutions that the government could possibly play with this time around.
It should certainly not be a cess or a tax, because in my view that's the wrong approach. Because a cess or a tax will be reducing demand, and that is not what we want to do at this point of time. We want to keep demand up. So basically you need to finance it through deficit financing, through a bond issue. It can be a special kind of bond issue of the time that you have market stabilization bonds, which you, to be clever, you may or may not bring it onto the budget. But ultimately it needs to be government borrowing financed by the Reserve Bank of India through whatever window you want to make. There are technical ways of keeping it on or off the books. But it needs to be special bonds or even ordinary bonds. But let it be money that flows fast. The Reserve Bank just finances it, and it flows from the central government to the state governments, to the districts, to every single vaccination center smoothly and quickly.
Here's an update. More exciting. People can have access to your OTP PIN and all your personal data that is stored on your phone. Some fraudsters may even create dozens of similar sounding UPI IDs to try and trick you into donating for so-called COVID-19 patients or charities. Make sure to check the fund details twice yourself from authentic sources before you actually donate any money. Stay home, stay secure, be alert. Times Network is fighting fear with facts.
Hi.
Hi, welcome back.
Thank you.
Coffee?
Yes, long day today. Very tired.
I'll just get it. Thank you.
Hey, you did not pick up Arav today?
His teacher texted.
Huh?
He has extra classes today.
Thank you. Really? Oh, is he still angry?
He is a little.
I think $1,000 के लिए ना we scolded him too much here.
Ravi, बात 1000 रुपए की नहीं है. He needs to learn.
I know. You know, I was actually thinking उसके लिए एक bank account खुलवाते हैं. What do you say?
Bank account? Why?
See, he's been hinting एक महीने से that he wants pocket money. So I was thinking, why not?
Ravi, he just spent 1000 rupees on a random app. That too without asking us. And you want to give him more money to spend.
I know, Baba, but instead of punishing him, maybe we can teach him this way.
Teach him what? कि और पैसे कैसे उड़ाते हैं?
He'll have his own card, and he'll learn early on that if he spends, he need to return it also. It's a good idea. Think about it.
Okay, fine. We'll try it. But you're his guardian, not me.
हाँ, मेरा बेटा है, जल्दी समझ जाएगा.
अच्छा, वो जो तुमने आज तक नहीं दिया.
A wise decision is wise only if you pass on the advice. Teach your children the value of investing and compounding early.
The world has been forced into a standstill. Every day, the battle becoming more uphill. Now, more than ever, it's easy to believe all the naysayers who say the Indian economy will struggle to recover. All the doomsdayers who think it's time to look for an exit strategy.
The SGX Nifty rather tempered this Monday morning, counting down to the big event, that's the Budget 2021. The Finance Minister, by the way, has already reached the North Block. Shortly, we should see some more visuals coming in from the North Block Live, and we're going to cut to that as well. But manufacturing has come back, but services sector is yet to recover post the pandemic. But for that, vaccination really needs to pick up. What will the vaccination math be in this budget? My colleague Tamanna joins in with more perspective.
The biggest question facing everyone ahead of Budget 2021 is, will we see an additional cess or tax of some kind due to COVID-19? So we see a COVID cess? Well, it will depend on the answer to the other big question. Will vaccines be free for all? The vaccine dilemma is truly a big one which faces Finance Minister Nirmala Sitharaman. The government has to decide whether the first batch of 30 crore people identified for vaccination will be receiving it free, and will the rest pay for it, or will those even among these 30 crores who can afford to pay for the vaccine go ahead and pay? Will some Indians pay more to subsidize the rest? Well, while that is being determined, let's take a look at what India's healthcare budget allocation usually looks like. And that's going to be in sharp focus because the track record, frankly, has not been too great. It's one of the fourth lowest in the world, and the allocation as a percentage of GDP between the years 2008 and 2020 have been a meager 1 to 1.1% only. It's expected that for this financial year FY22, the budget allocation could increase by 1.5%. In fact, the National Health Mission envisages us increasing our budget healthcare allocation to 2.5% of the GDP by 2025. Many experts are asking whether we can actually wait that long. It becomes an even bigger question this year because we have to pay for the vaccines. So here's a bit of the vaccine math and how it works. 3 crore people are being vaccinated in just the first phase. This is your healthcare workers and your frontline workers, and we know that this is something that the government will be paying for. 6 crore doses are required for these 3 crore people at the rate of about 200 rupees per dose approximately between Covaxin and Covishield. So that means close to 1200 crore rupees are required just for the first phase. There are some estimates that a total COVID vaccine rollout may cost the government between 60 to 65,000 crore rupees. An additional $30 to $80 million will be required for transportation, storage and administration of the whole vaccine process, because that is an additional cost as well. So the question is, who foots the bill? Now, health is technically a state subject, but when it comes to vaccination, this has all been happening so far from a central government perspective, whether it is permissions or procurement of vaccinations or distributions. So it's not clear as of this moment whether the central government will subsidize vaccines from its kitty or...
Okay, Tamanna, we'll leave it at that. The SGX Nifty, I just want to quickly revisit those rates because it's indicating a very quiet start for us. Nikunj, not taking heat from what the US handover was, which was weak. The silver recovery that we've seen in 2 days, or for that matter, the fact that Asia is actually buoyant this morning, going extremely light into the event.
Aisha, unlike what we saw in the month of December and early Jan in terms of pent-up demand, excitement, a tad of euphoria, overbought conditions, that's not the current positioning, both in terms of open interest, the Nifty move, and also where the mid-cap positioning is. Markets are not really approaching this important event with very high positioning, and positioning and sentiment are two very important things in the market which will tell you what will happen in the near-term direction. So if the budget is something which markets don't like, which is it is hard hitting on taxes, the fiscal numbers do not add up to what markets are expecting, the borrowing numbers do not add up to what currently we are working with, if the assumptions are completely unbelievable and very aggressive, the markets may sell off. But if the market sell-off may be restricted because nobody in the market is really approaching the event with fat positions. In fact, once the budget volatility is over, I actually worry about global cues and the kind of up and down which is happening in individual global stocks and asset classes. So for me, that really would be a bigger and an important talking point. But there are two things which I would like to really bring it out for our viewers, Aisha, since this is the budget day. The financial sector reforms, that's the need of the hour. Whether it is bank recap, making a framework or a clear framework as to what will bank do for other PSUs where consolidation has not happened. And third, what essentially is government's thought on bad bank. These are very important things, whether there is going to be a AQR which would be structured, whether there would be AIFs would be allowed to invest in bad bank. That I think is going to be, from a banking standpoint, that is very important. And then disinvestment, Aisha. I mean, if the market conditions are vibrant and if the tailwinds are clearly evident in terms of global liquidity, this is the best time then government uses the tailwind to their advantage to maximize. And that could be easily done by the disinvestment route. Now, the disinvestment number last 2 or 3 years has not been great. Of course, this is it's COVID, but before that also the disinvestment number was achieved because of HPCL, ONGC buying HPCL, the merger of PFC and REC. Those are not clean disinvestments. Clean disinvestment is that when you raise assets or sell stakes in assets which are strategic in nature. And for that, the government needs a vibrant stock market. So I think the finance minister is very well aware of it, that you do not want to do anything in order to kill or curb the stock market level or the stock market excitement. So I don't think from a stock market standpoint, if you need stock market to raise a lot of capital, you really want to puncture the sentiment there. But how can the process of disinvestment be made easy? I think if there is some direction which comes in this budget, I think that will go down very well from a market standpoint. So it's not about intent. When it comes to disinvestment, it is about implementation, and that's where I think the entire disinvestment process, in a sense, has got lost. Why was PPCL not sold? Was it COVID or because of the process? Why has Air India not been sold in last 3 years? Is it intention or is it process? Why have we not seen a firm movement in LIC when so many companies have gone public? Is it process or is it really the entire approval timeline? If that approval timeline or process, in a sense, is defined, let me tell you, PSU stocks will start doing cartwheels.
Time for action. By the way, I must point out the recovery that you're seeing in the SGX Nifty after what looked like it's going to be a very sedate, quiet kind of day. The SGX Nifty is now holding up over 90 points as we speak. So we've already made it to that 13,800 mark. But again, early days, this is just indicative of how the Nifty futures on the Singapore exchanges are moving. So let's see what the, the normal trading actually kicks in for us. But Nikunj, I guess all the parameters that you just talked about, the point here is that the budget, while no one's expecting it to be a great budget, it shouldn't be a bad budget. And right now for the market, that in itself is going to be okay. Just, looking at how the context has been and the kind of FII-DI dichotomy that one has seen, the fact that since last budget, irrespective of it being a pandemic year, we've seen FII net buy to the tune of over $24 billion, and DIIs have been net sellers to the tune of about 50,000 odd crore rupees. And in any case, since the March recovery, they've not participated much. And especially in the last 5 months, they've been net sellers by huge margins. That said, the context in the last 6 days, Nikunj, the fact that on Friday alone you've had one of the largest FII sell figures in the recent history to the tune of about 5,930.7 crore rupees to be precise. Can the budget really, sort of turn this sentiment around for the FII selling? Or is it just that it's global in nature, so we got to align ourselves to it purely because of the way the dollar has been strengthening off late?
I think it's clearly the latter, Aisha. While budget is going to be important, crucial, indicative, but if there is an adjustment happening at global level because of FII selling and other factors, they're not going to just you will not move independent of what is happening in the world in the short term, irrespective of what the budget today is. But this year's budget, in a sense, has a very different proposition, and the proposition is different, Aisha, because you can easily divide the budget in 2 parts. First, what happens in the next 12 months, assumptions on revenue, assumptions on tax collection, outlook on expenditure, and the number on fiscal deficit. That's a 12-month to an 18-month kind of an outlook which you will get from budget. But this time around, for the first time, the finance minister has a lot of elbow room and the tailwind of a V-shaped recovery in the economy, which she can really use to make some large reforms. The reforms in the manufacturing sector, reforms in the banking sector, a new charter in the entire banking system per se. If some of those factors, in a sense, are implemented, then this becomes a budget which really will take India's course from revival to flourish. So the way I look at economy, Aisha, we've come from survival to revival. Now from revival to flourish, if you have to move, that really needs to be done because of reforms and a lot of other external stimulus which you would require. So I think that really for me is the key proposition of the budget, that outside the preview of 12 months, outside the number crunching, outside the maths, what is going to be that big push which could kindle things really back on track for us?
Okay, let's also go across to Ajay now, get a sense of the different sectors, what could be in store for various industries, particularly the ones that have been more hard hit, where we could see some stimulus or a push coming in as well. Ajay?
Well, that's correct. The market is eagerly awaiting which are those sectors where there will be much more emphasis than usual from the finance minister. Clearly, as you guys are just talking about, PSUs is definitely an area where there is a lot of buzz, some commentary has been coming, but any further roadmap, a concrete roadmap of divestment and which are the strategic, non-strategic kind of PSUs which could be there, on that list is something the street is actually waiting very eagerly. In fact, this is an area which has done pretty well in the last 1 month going into the event as well. So PSUs is an area to watch. The other big area, as Nikunj was speaking about, is the entire PSU bank space. PSU banks, whether there is a bad bank formation, whether there's recapitalization roadmap, or even a slightest of hint of any kind of enhanced private sector participation in PSU banks, is something which the street is going to watch out for very closely. So PSU banks is definitely an area. Apart from that, in the last 1 year, we've seen heightened commentary from government agencies and various ministries on rural outlay. And we've seen the tractor sector, the fertilizer, agrochem, that entire rural pack, kind of pack, which has done pretty well. Expectations are very high. Any increased outlay on rural side would fire up or excite that space. Not only that, capital goods PLI scheme, expansion of PLI scheme, or any kind of a further addition is going to fire up capital goods and manufacturing related plays. Again, there is a lot of expectations over there. CVs and auto ancillary is also kind of a roadmap, kind of a step down of manufacturing and PLI, and we have broken exclusive stories around it that there's all likelihood to be that particular area to be expanded. And finally, cement, the kind of volumes which have been, the sector has been clocking, infrastructure, cement, any kind of a privatization of assets beyond roads, be it rail or even power assets, the entire infra play, including roads and cement, is an area which the street is watching out for. These are 4 or 5 areas or sectors where expectations are high and direct impact in the stock market is likely if there is higher emphasis by Finance Minister.
Okay, Nikunj also caught up with Howard Marks on the sidelines of the CFA India conference, speaking about global liquidity, India as an investment destination, and a lot more. Here's an excerpt of that exclusive conversation.
I think that India has great potential. It has enormous resources, especially human resources. It has good respect for education. The people that I meet in India are impressive and disciplined and intelligent. And I think that India has a bright future. It has to kind of get itself together and operate well. But we have a group in Singapore which is we're devoting significant resources. We're active in India, and I'm optimistic about it. I came back from my trip a few years ago, very impressed. And I look forward to my future with India.
What is your view on China, considering that China one policy is something which is part of the boardroom narratives now? China is no longer, the Chinese economy is no longer expanding the way it was. Is that a challenge that China may not be the big superpower or the big driver now?
Well, I think that China also has a great future. I think that they too have great resources. They are very organized. They have a benign autocratic government which makes decisions and implements them effectively and promptly. It is true that their growth rate is decelerating, but it is still very high relative to the rest of the world. They can produce 6+% GDP growth, and that is very much above average for the world. U.S. is at present less than half that, so now they have some difficult transitions. It's hard to transition from 12% growth to 6%. It's hard to transition from an economy that has been accelerated by very strong availability of financing for fixed investment which maybe has produced excessive fixed investment, and they have to make financing less available and have less fixed investment take place and transition to a consumption economy. They have to transition from an export-oriented economy to a domestic consumption-oriented economy. So there are a lot of transitions that they have to make, but so far they seem to be making them well. And they did quite well in 2020 compared to much of the rest of the world, and seem to be coming out ahead of much of the world in 2021. Again, we're optimistic on China. Now, I always say that the U.S., for example, is a mature adult, and India and China are adolescents. And I've had adolescents at home, and the world with the adolescent is rather tempestuous and up and down and volatile. But the outlook is very positive for the adolescent. And I think that's true of India, and I think it's true of China. And we're very happy with our activities there, which are substantial.
And since your book always refers to cycle, given that right now interest rates are low, do you think the importance of cycle gets defeated? Because there is no inflation, rates are low. It is quite contrary to the previous cycles we've seen where inflation comes back and inflation comes back and rates go higher.
Yes, well, I'm not convinced that inflation is not coming back. And I'm not convinced that rates aren't going higher. And the people who are sure that you can inject massive amounts of liquidity into an economy and sure that you can run enormous deficits and increase your debts and not have any inflation, I think their confidence is misplaced. I'm not a forecaster.
Okay, let's also go across to Avan now, get a sense of what else we're tracking ahead of the budget, and a whole host of budget trivia also that she has in store. In fact, Avan, take us through some of that. All right, we'll go back to Avan in just a moment. We're also just playing out some visuals for you on your screen. Counting down, of course, to the FM presenting the budget. There she is, looking splendid in her sari, and of course with the speech tucked in there under her arm. And we've got a couple of hours to go, surrounded, of course, by some of the key ministers of state as well, and doing their customary address towards the cameras just ahead of course, entering into North Block and getting ready to present it. The Bahi Khata, as you can see there, and under this government, it has been in this new envelope as opposed to the earlier briefcase, looking quite regal, and she's smiling. So let's hope that there is something exciting in store this morning with regards to budget 2021, her third budget, and we've got lots to expect. I wonder how long this one's going to go as well. We had quite an extensive speech the last time, so let's see as well, how much detail they go into this time around. The Prime Minister already alluding to these mini budgets through the year, but while there may not be any expectations built in, there are still always going to be some hopes that we may see some push, particularly on the likes of infrastructure, or relief for certain beaten down sectors, and so forth. Okay, posing for those pictures, we'll hop back across there shortly, but lots of budget trivia we have for you as well. And Avan, it's a good time, because talking about the length of that speech, I think you know the exact minutes it took to relay the budget last time around.
Yes, indeed. The lady in red certainly steals the show when it comes to the award for the longest budget speech, Abha. And it was by Nirmala Sitharaman just last year. 1st of February is when we all sat with bated breath through a speech that went on for, get this down, 2 hours and 40 minutes. Are we bracing ourselves for a similar length in speech this time around, largely owing to the pandemic? We'll just have to find out. But nonetheless, it was the very longest long speech, a total of 160 minutes to be precise, the longest ever by a finance minister. Now, when it comes to the maximum budgets that have been presented by a finance minister, well, there's two contenders for that. The top contender is Morarji Desai. Do remember that he has presented the most, and remember he served as a finance minister between the years 1977 all the way to 1979 is when he had served as the prime minister, and then when it came to the finance minister, 10 whole budgets is which he presented as the finance minister, and that was followed by P. Chidambaram, where he presented the union budget a total of 8 times. Remember, he was finance minister starting May 2004 through 2014, except for a 3.5-year stint in the middle when he was the home minister. Meantime, just until the year 2016, actually, the date of the budget has altered in the last 4 years. So till the 2016 year, the budget was presented on the last working day of February, which everyone was very accustomed to, either the 28th or the 29th. And now it has changed since the year 2016. That was the last time, and it is presented on the 1st of February. And finally, aren't we going digital? So is the budget. I know you saw Nirmala Sitharaman holding that red briefcase and budget document, but this time around it is not going to be printed for the first time ever, and that's because of the COVID pandemic. So this is the first time ever that the actual budget document will not be printed. So that's some interesting budget trivia as we walk into today's union budget.
And that's probably why that folder was looking so slim, Avan. Even I was wondering. All right, we're just counting down to market open, barely a minute to go, Nikunj, but I think this is what we're all wondering. Will markets ignore the budget? Will it be a neutral budget? Will there be some kind of relief rally, or you know, an acceptance of any kind of silver lining and an uptick on that front? You know, really, how closely are market men watching the budget this time around?
Look, budget is important, and this budget, given the backdrop, I think is crucial. One is the 12-month assumption, the 18-month indication on basic maths, fiscal deficit, what will happen to the entire borrowing number, and where essentially the tax collection would settle. That's how you always judge the budgets, and I think it's not going to be any different this time. But healthcare surely is going to be in priority sector. Now, budget speech is expected to start in less than 2 hours now, and we've not had a great handover from US markets from Friday. You got that entire confusion when it comes to some of the big stocks in US. That confusion continues. The markets are off to a good start, and that's largely could be a function of the kind of numbers we've got over the weekend. ICICI Bank, Tata Motors, some of these numbers have been good. So banks are off to a good start. Banks is where a lot of reforms and other measures are expected. The market breadth is looking extremely charged up, so the advance decline ratio well in favor of advances. You got market breadth 1:5, which means for every one stock that is going higher, every 5 stocks which are going higher, only 1 stock is going down. I want to look at specific stock movers here, and the first one has to be ICICI Bank, which has come out with good set of numbers. Given the valuation, there is a case for re-rating, and I think that is what is happening. It could be a big day for some of the non-obvious PSU stocks in case there is some announcement on government intention on owning a majority stake in some of them. So Bank of Maharashtra, Bank of you could see UCO Bank. I could throw in something like a central bank also, some of the crucial names where you could see some excitement. That's the way how the budget maths is shaping up for ICICI Bank. I'm going to quickly move to Tata Motors because that's another company, another stock which has been in the throes of excitement, and that one has also done rather well in terms of a performance and the indication which has come from the government. So Tata Motors also, not the government, from the company, I beg your pardon. So 268 rupees for Tata Motors, it is reacting to numbers. There is a buzz which my colleague Nayantara has reported that FDI and insurance could be increased. Now this may not really change life for big insurance companies because frankly they do need capital, but There are other small insurance companies. Exide has an insurance subsidiary. Aditya Birla Financial has an insurance subsidiary. Tata, Edelweiss has an insurance subsidiary. So those stocks could be on everyone's radar because those companies need capital to be competitive in this kind of a market. And then PSUs. If there is a very standout, clear policy, not intention, not sloganeering, not an indication or number on how the disinvestment process would move, I think PSU stocks could be in for a mini re-rating. So the cartwheel moment, Aisha, for the market really could be if we get a very well-defined policy, not a number, on divestment.
Yeah, and I just want to quickly see what the PSU candidates are up to right now, because you're not really seeing much of an excitement built in on the PSU names. So let's quickly start off with visiting some of the PSU names, and BPCL really comes to the top of your mind. You've got a Concor, etc. as well, holding up, but you're not seeing very big excitement coming in. I just want to quickly mark what the market as well is up to. We started off with fair amount of green that got a little bit sold into, and again we're settling around that 0.5% gain mark. Again, early days, post budget, all of this could really change. So like our chartists were earlier alluding to the fact that don't try and be brave, don't try and attempt at trading these pre-budget upticks, because the budget swings could be very, very wild. Having said that, it's a much livelier day for the broader markets. You got 96 stocks standing to the advances with 46 to the declines. Quickly, some of the earnings reactions. ICICI Bank, it's been a strong performance, growth outlook only getting stronger. You've got a solid uptick coming in on ICICI Bank this morning. It's one of the top performers. As I see, it's a solid 3% uptick coming in there. Then, of course, you've got Sun Pharma numbers, exceptional profitability. You've got Cipla as well, which has been an all-round beat, PAT at a record high, though you're not seeing much excitement in the stock. Remember, this has already been one of the biggest movers in the March recovery, or for that matter, from last budget to this. Then you've got Dabur, stellar performance, volume growth at 18%. This should keep the street happy. I just want to revisit what Dabur as well is up to. And Nikunj was talking about Tata Motors. JLR, the India business is clearly on revival path. Debt reduction is in place. The stock has already run up about 30 to 40% in the last quarter, or rather fortnight or so. Let's see whether you see more excitement on Tata Motors. Tata Motors still a great gainer as we speak right now. And then Dr. Reddy's, which also posted a subdued quarter, so that should be reacting to its earnings. It's okay, Nikunj, this morning. 0.5% uptick. We're not going cracking into the budget as was the case up until Friday. IndusInd Bank, your top performer. ICICI Pru holding up 2%. Chola Finance looking good. Titan, DLF, PVR, they're all holding out okay. And you're seeing smart earnings reactions coming in, Nikunj.
Madhu Kela now joins us. Good morning, Madhu. Thank you for joining us. What is your gut call? Are we in for a good day, bad day, flat day? Just a gut call.
I think we are in for a good day, Nikunj. That the gut call is that the market is going in the budget with very little expectation, I would say. We have had a decent correction, which is what I was expecting could happen. And over and above that, we have had very, very good set of numbers. So if you look at all large cap companies, whether it is ICICI Bank, Tata Motors, Cipla, all of them have reported very, very good set of numbers. So my gut call is that limited downside and budget could positively surprise.
Okay, even if budget positively surprises, do you think the overhang of global cues could be far more dangerous than a decent budget outcome? What are the chances that we could say the following at the end of the day, that budget अच्छा है, but global cues की वजह से market गिर रहा है?
See, that is entirely possible, Nikunj, because what is happening globally is completely unprecedented. Something like a game shop going up from $20 to $400, and hedge funds which have huge reputation built over the years, they getting squeezed. So global markets are in a too much jittery. We don't know what the outcome of all that eventually will be, but we need to watch out the global market, that is for sure, and watch out very, very closely. And Nikunj, just coming to our budget, this time around, what I see that there is really no expectation. There is not much talk. On a contrary, there is more of a negative talk that short-term capital gains बढ़ जाएगा, long-term capital gains बढ़ जाएगा. There is some kind of a cess which is being talked about. There is weird talk of some kind of a state duty coming in. I don't think any of that will happen. And consider that, the finance minister herself said that this will be a budget to watch in 100 years. Once you say all of this and then you do any of this or all of it, will be very, very surprising. So I think expectation very low. Markets already corrected significantly. I would say the individual stocks have corrected quite a lot. Corporate performance has been very, very good in the last quarter. GST numbers are very good. And even the headline numbers which we track, Nikunj, there is expectation of over 7.5% fiscal deficit for 21 and around 5.5-6% fiscal deficit for 22. I think there is a room for positive surprise here as well.
Great point. Disinvestment number, Madhu, we understand that the disinvestment number is going to be a very big number, and mathematically you could say it could be one of the highest number. What else would market like to hear on the disinvestment front? Because just by putting a big number out there does not mean that disinvestment is going to be done and disinvestment is going to be a good one. We've seen in the case of how HPCL, ONGC bought HPCL, or what happened to PFC and RSC. Government achieved the disinvestment target, but they were not done exactly the way market envisaged. Do you expect anything to hear on the disinvestment number in terms of in process apart from just the headline number?
So Nikunj, they have to elaborate, because if you see there is a significant miss on disinvestment number. Even last year, we were emphasizing 210,000 crores, and maximum it could be 40-50,000 crores. We can give COVID as a main reason. But what I would watch as a market participant is very clearly what is their intent to strategically divest companies, because you cannot achieve these kind of numbers. And this time again, you just have to add the simple mathematics. The disinvestment number could be even above 2 lakh crores for this year also. Now, unless you strategically divest and you divest aggressively, these numbers are not possible to be achieved by selling minority stakes in already existing public sector companies. So this will be actually the key thing to watch. What do they say? And what is the intent and how it gets elaborated and how it will get achieved. So this will be the key thing to watch in today's budget.
Madhu, hi, morning. 2018
Hi.
LTCG got introduced, then there was a buyback tax in 2019, 2020 there was a dividend tax in the hands of the receiver. Whoever I've been chatting with is saying, bas taxes pe kuch na aaye. What is your expectation?
See, there could be, Aisha, good morning, there could be some marginal increase somewhere for, ultra-rich people. But I don't think that they will, do any new tax or they will increase these taxes. Because see, let's understand that they need good markets more than us here. If you have to do more than 2 lakh crore rupees of disinvestment, I think, and also if you have to revive the growth and bring back the animal spirit, which is what the CA has been also talking about, and finance minister also hinted, in that kind of environment to go and do anything which will dampen the sentiment significantly looks very difficult to me. And again, this is all, our gut calls and the experience which we have had in 30 years. But, having said that, fiscal situation is very challenging. The budget deficit, which was expected to be 3.5%, is going to be more than 5% even for next year. So, can they do any kind of taxation to improve the numbers? Possible, but I don't think they will do anything which will really smash the sentiment.
But Madhu, just the messaging and the tonality of taxation on the super rich theoretically will not go down well with the market.
It will not go down, but ultimately you need revenue numbers, Aisha, isn't it? but budget is a fine act of balancing expenditure and revenue. So you have to have revenue increase from somewhere. And this year, undoubtedly, the government is stretched because of the fiscal stimulus which they have given even for COVID. So we have to see where else can they get revenue from. There was someone who was telling me that could be some kind of a turnover tax on all these new economy e-commerce companies. Now, obviously, they don't pay any taxation. Most of them are making losses. But it is entirely possible and not unthinkable that can there be a small turnover tax on those companies. Hello?
Madhu, certain sectors, of course, will be eyeing the budget very closely. Infrastructure, we watch out for this every time, and given the limited scope to spend, what really do you feel could be in store when it comes to a push on development and infrastructure this time?
So, what we are hearing that there could be two possibilities. One, of course, they have to push infrastructure. I don't think there is any choice. And we are just 2 years behind election also in 24. Again, there will be talk of election. So we have to do something in this budget only, then only it will kick off. The other thing what I hear is that there is a very strong possibility of they coming from some kind of a development finance bank, which can have as high a corpus of 1 lakh crores. And there could be there could also be a possibility of one dedicated financial institution which is only focusing on infrastructure. Now let's understand, none of this will actually require it to go through budgetary support. This capital could come from a lot of institutions, which is not like a budgetary support. So these kind of things are possible. There is also a strong possibility of some kind of a bad bank, whatever form or shape, being set up, so that all these public sector banks which have already provided significantly, they could once and for all clean up their balance sheet, and they are ready for an aggressive growth in their lending, right? And that is again a need of the hour. So there is a lot which can be done, and I think there should be a lot which should be done, because if the IMF is talking about 11.5% growth of GDP, economic survey is hinting of 11% real growth of GDP next year. All of this will not be possible unless the government and the policies are very, very supportive for this growth.
Okay, those are clearly the two key points we're going to be watching out for, as Madhu also just highlighted. But Madhu, coming back to taxes, but looking at it from a different perspective in terms of really where the government has room to boost consumption, and how critical do you feel that is also going to be in order to drive growth going forward?
So all of it which we spoke, when you focus on infrastructure, when you basically give room to the banks to essentially say that you can go out and lend. And also, one thing which we have seen in the last 2-3 years, even corporate balance sheets are significantly deleveraged. A lot of these debt-ridden companies have paid off debt very, very meaningfully, specifically in core sectors. So there is a possibility that, with revival of sentiment, some amount of capex cycle revival will also happen. So net-net, I am quite positive, given that the markets have already corrected meaningfully. But as Nikunj pointed out, one thing which is not in our hand or which we can't conceive is the global market and their reaction. So, but from the budget side, I don't think there should be anything really negative from a market stand perspective.
So Madhu, if markets today fall for volatility, positioning, XYZ factors, will you be a buyer? Do you think we are in a bull market and every decline will qualify as a buy? Because we are already down 5-6%. And if indeed we are in a bull market, this market will not oblige you with a 15-20% correction. I mean, if you want to participate, you have to buy on a bad day and when a bad patch is there, and now the bad patch is there?
Nikunj, undoubtedly, I would be a buyer, which last week when I spoke, I had this lingering feeling of this correction, but I'll be a selective buyer. You don't go and buy out all of it in one day, but I will certainly be a selective buyer. Nikunj, I think the corporate performance is just too good. If you look at the underlying numbers of a lot of these large companies, they look really good to me, and the valuation given this performance is not very challenging. So wherever you have real margin of safety and one can at least see that the next 1 to 3 year numbers are going to be good and the balance sheets are solvent and the intent of the promoter is very, very good, I think we have to buy. And as you rightly said, we can only buy with margin of safety in this kind of correction. At 14,800, everything looked good. At 13,600, there are a lot of challenges which are looking. So when in a bull market, these corrections are always going to be swift, and there will always be a lot of worry when the indexes there is a correction of this nature, because at that point of time we'll all tend to extrapolate कि और ये बहुत ज़्यादा घट सकता है ये ABC reason के कारण. But if you are truly in a bull market, which I believe we are, then we have to utilize this kind of corrections only to buy. So even though the indexes may have fallen 5-6%, but if you look at individual companies, there is correction of even up to 15-20% in some of the companies.
A classic case. I just want to bring it out for our viewers that how much Reliance is down from October. This was the immortal stock which nobody wanted to sell. So Reliance is not only underperforming, it is now at the bottom of the pyramid in terms of an index return in last 1 month. Madhu, outside the budget, we've not spoken about healthcare. The priority of this budget has to be healthcare. While we've looked at budget only from the binary lens of a prudence balance between growth and fiscal deficit, this time healthcare will take a lot of center stage. How can one really participate from a stock market standpoint, assuming that it's a no-brainer that commitment towards healthcare in a COVID crisis will go higher?
Yeah, so there is only 3 ways to participate, Nikunj. One is the insurance sector, which there is increased need and increased realization. The other is hospitals, and third are the pharma companies. So I like all these segments, and again, you've seen the results of a lot of the pharma companies. If you view the results and see the prices, even though the stocks have appreciated quite a lot in last 1 year, but given these numbers, they don't look in any euphoric valuation zone. They still look reasonable.
Why were numbers not that great, Madhu? Just a very small follow-up question. I mean, let's say numbers from Lupin or the indications which we got from Dr. Reddy. I expected numbers to be very strong because of the COVID business and API and other pricing advantages. The numbers were not great. They were not blowout set of numbers what you got last week.
But Nikunj, this is company specific. If you look at numbers of Sun Pharma, you look at number of Laurus, I think some of those companies actually declared better results than what even last quarter and what even market circles were expecting. So this is more company specific rather than sector as a whole. And that is where your art of investing and art of picking lies, that which are the companies which are expected to surprise the market even from here, and where there is skepticism and valuations are not very high. That is where you have to bet, right?
Okay, you know what, Madhu, just stay with us. I'm going to quickly revisit where the market has settled in at. What looked like it's going to be a 0.5% uptake, we've tempered down since then. And by the way, the breadth of the market as well has completely reversed hands, and now its advantage declines. UPL on the futures has fallen 7.5%. IDFC First is down 6%. Dr. Reddy's is down about 4% as we speak right now. You've got TechM, BEL, both are down anywhere between about 3.5% to 3% apiece. Tata Motors, I want to quickly bring up the intraday graph of this one. Much fancied a stock right now, just about everyone's chasing the recovery that you've seen in JLR, the India business, the revival path that they are at, and more importantly, debt reduction at Tata Motors, which the market is liking right now. The first signs of a profit-taking setting in for Tata Motors, although negligible if you were to put into context the 35% run-up that the stock has seen in the last fortnight or so. Madhu, the market is seeing its first meaningful correction since March only in the last 6 days. The point is, from a longer-term perspective, what to buy? Do you buy again IT pharma, or this time around, do you think newer leaders will emerge from newer spaces?
So, Aisha, it's again a question is that you have to build a constructive, proper portfolio. And IT, pharma, and some of these stable sectors have to be part of your portfolio. But my tilt is more towards buying, things which are linked to economy, things which are like forgotten heroes, where there is a lot of value. And I'm selectively willing to take that chance. So I'm looking at, infrastructure, I'm looking at manufacturing, I'm looking at real estate. Again, don't mistake me, these are not sectors to buy, but individual companies from these sectors. I'm even looking at public sector banks. So and these are not consensus trades. There are still a lot of skepticism, doubt in all of these sectors and companies. And in my career, we have made money whenever there is you're buying skepticism and not buying consensus. And if you look at performance of a lot of these companies on the ground and what the numbers they are reporting, and view it in the overall economic prospects, which one is assuming like 10% plus GDP growth rate for 2022. If I put all of this together, there is a good margin of safety in selective stocks in some of these sectors.
Madhu, you're living it up with the famous dialogue from a series all of us have watched, Risk Hai to Ishq Hai.
Absolutely, absolutely. And we have to take our chances, Aisha, because if you buy anything which is fashionable, then you would not have been able to put it more aptly what my sentiments are and feeling about investing is, as of now.
Yeah, absolutely. You have to be brave and you have to take that gut call and invest when no one has discovered that name, and Madhu's clearly mastered that. Madhu, great to have you on the show as always, and we'll chat again post-budget as well. Good speaking with you.
Aisha, just one small thing. We spoke about a lot of sector, individual companies. Please run the right disclosures, for the sake of everyone. Thank you so much.
Absolutely. All the stocks and sectors that Madhu spoke about come with a disclaimer. Please do your own research. These are not recommendations made by him. Very quickly then to the market texture. We've settled down and we're absolutely flat now on the Nifty. In fact, we're back to pretty much the levels that we were at on Friday. 13,700, just about staying put at that level, and the breath has now completely turned hands. Your good 105 stocks, in fact, standing to the declines as we speak. Only 35 names standing to the advances right now. IndusInd Bank, ICICI Bank surely doing their magic. You got a PVR as well, which is holding up 4%. Chola Finance had a great day last week as well. Still continues its up move. Lalpath Labs has seen fair amount of traction on Friday, and today as well is holding up 2.5%. But under pressure for IDFC First, for Dr. Reddy's, for Techem, Mahindra Finance, Apollo Tyres, after the run-up that auto and ancillaries have seen just last week. Today you're seeing Apollo Tyres being one of the top losers. That's down about 1.6%. You've got Tata Motors as well, which is down about 2.6% as we speak. But you know what? Here's Vijay Kedia. He's also been known as the mid-cap maverick. Here's him with his two recommendations as we step into the big event of Budget 2021.
2040 price of Sudarshan was 40 rupees. Okay. In 2017 or 18, the price of Sudarshan was 600 rupees. So 15 times in just 3 years and 4 years. That time, all these chemical shares were there only at 2014 level or maybe 15 level. So they started their journey, earlier. So that is why now they are resting. This is what I tell myself. As it is, I'm not going to buy other chemical shares which are, having a P ratio of 40 or 50 and 60. I can't digest that. So solution is okay. It is valued, reasonably valued, and although I have sold some shares, let me tell you, in this mayhem and all, I have sold some shares because that was the only liquid shares which I could sell. So, but I don't know. I can't tell you now, looking at the scenario world around, I can't tell you that I am going to hold for 5 years or 10 years. That commitment I don't want to give as of now. Which company in India, spends, say, 10% of their revenue every year on year in R&D. Tejas is one of such company. Once again, I will tell you, it is not at all a recommendation. My buying was at 40 rupees, 45, 50 rupees, up to 60 rupees. So I'm not saying, I cannot say at 110 or 120 or 30, you go and buy Tejas. Please do your homework. So what I'm just sharing, whatever points actually made me invest in this company, is that 10% of R&D spends year on year. And so far they have invested more than 1,000 crores in their R&D, maybe 1,000 crore, 1,300 crore. And, in the month of June or July, stock was available at a market cap of 400 crore or 500 crore. And company has 300 crore cash in the bank. And they have developed a product. As I said, it takes time. Product you can't develop if you have to compete with Nokia or Ericsson or Huawei and all, which what Tejas is doing. Then it takes time. Because in India, R&D spends are very less, nothing, compared to what international companies are doing. So now this is what what Tejas has developed, and the application of the product which they have really developed, they are used in like fiber to home and 3G, 4G and 5G. So I think they have good technical knowledge and competing with all Fortune 500, Fortune 50 company in the world. So, and because of this Atmanirbhar and whatever Mr. Modi's vision of India, Skill India or whatever, I think their time has come, and that is why I have bought the shares. I may go wrong, I don't know, but you have to be in the market.
Completely flat for the equity markets. Apollo Tyres, Dr. Reddy's, IDFC First, Tata Motors and TechM, the key pressure points, and the breadth as well is completely in favor of the declines right now. UPL being a key pressure point, that's down about almost 8%. Besides that, within the Nifty, there's also Cipla, there's HCL Technologies, there's SBI Life, Axis, TCS, Kotak Bank, Divi's Labs, ITC, M&M, Maruti. They're all which are weighing heavy on the index as we speak. Tell you what, we'll take a very quick break, but come right back. Lots of big market voices joining in to tell you how to trade the budget and what to do from a long haul perspective.
And cover. Well, no one believed India could win the 1983 World Cup. But we did. No one believed a man from rural India could develop an affordable sanitary product. But he did. No one believed India could send a satellite to Mars. But we did. Every single time we were backed into a corner, we came out swinging against all odds. Despite every obstacle, it's time again for a rematch. You ready for it?
He knows the market trends today and has mastered them over the last 15 years.
Bringing greed and fear and business analysis together, I think that's what day in, day out Nikunj does.
He tracks the biggest business stories that impact the growth of your wealth.
Forces you to come up with a specific recommendation and not just give general answers.
His keen market sense simplifies financial jargon to make you market ready.
A market opening without Nikunj Dalmia, A, is clearly unthinkable, and B, it will clearly be less enthusiastic.
He is most trusted by market veterans and India Inc. alike.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing.
Nikunj, I must say you have good memory, or you're refreshing up from past recordings.
This is a sensitive question, a question which is absolutely critical to us.
No, beautiful question. Very good insight.
A name synonymous with Indian stock markets. Nikunj Dalmia on ET Now.
With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do. We continue to be very well diversified across product lines. The general health of the company continues to be very strong. We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge.
Even in this time,
back with Budget 2021, counting down to the big event. Could it really spell the magic, and could it really reverse the selling spree that FIIs have been in? Of course, much of it is global in nature. We've not been alone in the weakness, and especially the big sell figure that you saw from the FIIs just on Friday alone, the fact that it's been the biggest one in the recent past to the tune of about 5,930 crore rupees. Let's see what the budget has in store for us. For now, that uptick that the market started off with has gotten completely sold into. We weren't anticipating anything different than that. Each and every uptick is going to get sold into. That was the prediction from our technical chartists any which way. And the clear messaging seems to be, don't be cute, don't be brave, don't try and trade these volatility swings. It's fine to hold off your trades for today and maybe take a call tomorrow or post-budget for that matter. because there'll be lots in the fine print. 78 stocks now standing to the declines as we speak, marginal improvement in the breadth of the market. But I can't really draw up a directional trend right now. UPL, Dr. Reddy's, Techem, Cipla, TCS, Axis Bank, Divi's, they're your key losers. On the flip side, Innocent Bank has spurred up 7.5%. ICICI Bank up 4% as we speak right now. Very strong performance over the weekend, growth outlook getting stronger, and that's what the street has been liking. A lot of other earnings reactions as well. Dabur is stellar performance is what they've seen. Volume growth of 18%. Sun Pharma numbers, exceptional profitability. So the street is trying to absorb in the thick of earnings and, of course, anticipating what the budget could entail. To chat about exactly that, we have with us Nilesh Shah from Kotak AMC joining in. Nilesh, hi, morning. There are a lot of numbers and a lot of expectation throwing around. But Nilesh, you've been famous for coming up with the most creative and unique ideas for the finance minister. I'll recall about a few years back, you were saying, why don't we let out Taj Mahal for weddings? Anything unique, anything creative that you have as a suggestion for the finance minister today?
Well, it's not creative, it's often repeated. But I think it is time to raise resources without raising taxes. And gold amnesty scheme or a gold disclosure scheme could be a big move. There is more than 25,000 tons of gold held by Indians, but most of it is in Tijori in black economy. If we can bring a disclosure scheme whereby gold can move from Tijori to white economy, government gets taxes and businessmen gets equity capital in their balance sheet. The savings of $2 trillion which remains frozen in the Tijoris can be part of the formal economy, can be part of the white economy. This can change India's growth orbit.
Indeed. From a market messaging point of view as well, Nilesh, what is it that you're hoping to hear? I was just chatting with Madhusudan Kela as well, and he said that, you know, there is an expectation that the super rich could be taxed. Purely in terms of a messaging, what is it that the markets would like and dislike?
So as Madhubai mentioned, since this year income growth will be lower, probably there will be temptation to raise taxes on the wealth side. However, my feeling is that the budget should focus on creating growth foundation beyond FY22. Because of FY21's negative and lower base, FY22 will be double-digit growth. But we need to extend it beyond FY23. And for that, we have to raise resources without raising taxes. We have to spend money to stimulate that sector of economy which is impacted by COVID-19 so that this recovery truly becomes broad-based and V-shaped. And we have to maintain path of fiscal prudence so that we can become oasis in the desert of the world, where every other peer group country is splurging on fiscal deficit, and we will maintain path of fiscal prudence. So our focus should be to create growth, growth, and growth.
Nilesh, what are some of the ways in which they can do that? I mean, instead of any kind of tax, if anything, you know, there is hope that there will be some relief or concession so that one can actually see some uptick in spending, driving consumption, and you know, really contributing to growth in that manner. Possibly. Is that an option? Do you feel that there are ways in which the government can possibly look at doing this, considering that they're otherwise quite stretched on the fisc?
There are multiple ways to raise resources. For example, in the world full of liquidity and low interest rates, India can pursue aggressive monetization of assets. There are land parcels available within Defense Department, Railway Department. There are fixed assets available in the form of roads, ports, transmission towers. There are more than 9,000 real estate available under custodian of enemy property. Both India and Pakistan came out with custodian of enemy property way back in the 60s. They divested their real estates and other assets in 1971. We are full 5 decades behind them. I think it is time to monetize those assets. India has been pursuing path of market divestment where on a regular basis we have been selling shares in PSU companies to meet annual target. This regular supply has resulted into PSU stocks trading below book value. The market trades at 3 times price to book. PSU portfolio trades at 66% discount to that. History teaches us that strategic divestment and public-private partnership results into far better realization and value creation for PSUs. Hindustan Zinc was divested for about 769 crore in 2003. Today, dividend income on Hindustan Zinc for the residual stake is more than 769 crore. So pursue the path of strategic divestment and public-private partnership to create value in PSUs so that by divesting a little, you can raise lots of resources. Ethical hacking is a way of life for giant software companies where they invite experts to plug loopholes in their programs. Why not invite best and brightest of India to plug loopholes in taxation side? For example, in capital market, there is a cottage industry to convert interest income taxable at 43% to long-term capital gain at 10% by issue of zero coupon listed debentures. Invite best and brightest of India to plug the tax loopholes in our policies, and I'm sure our tax compliance will improve. A gold amnesty scheme I talked about. Even bringing underground activities which fund criminals to mainline economy, like betting, legalize betting and gambling, make them from criminal activity to responsible industries. They will create growth, they will pay taxes, and they will behave responsibly rather than like criminals. So there are multiple ways to raise resources and stimulate the economy without compromising on fiscal prudence.
All right, the finance minister has reached the parliament. Her motorcade has arrived, and then in less than an hour from now, the finance minister would be standing on the floor of the parliament and presenting the first budget of the decade. A budget like never before. That's the tagline she's been using. And unlike a lot of other budgets which have been measured on the prudence, or which have been measured only with just one prism, what is the balancing act between fiscal prudence and growth, this time the budget could be different. There could be a prioritization of healthcare. We are not talking about it while we continue to focus on the budget in terms of numbers and borrowing targets and expenditure assumptions. It has to be healthcare. India's GDP is 60% in service sector, and there could be no single biggest reform in the country if you really prioritize the COVID vaccine rollout. That automatically is going to curb the fear and start normalizing the economy. So I would be very eagerly watching that what the plan of the vaccine rollout is, something which markets are not talking about, something economists are not writing about, but something which I feel, or we feel at ET now, should be a priority. Mr. Sanjeev Bajaj now joins us to talk about what India Inc. and his sector expects from this year's budget. Mr. Bajaj, good morning. Thank you for joining us. I can assure you I would have loved to ask you a question on Bajaj Finance, but since you're joining us in the capacity of CII, I will restrict you to the sector. Now, what the COVID crisis has done, Mr. Bajaj, it has divided the economy into two. The topmost, which have got more, and their saving rates have become higher, and the bottom of the pyramid people, which have lost because of jobs and because of other factors. What do you think this budget can do to equalize and protect the MSCs and SMEs?
Morning, Nikunj. And as you said, you did that other interview anyway a few months ago. What we at CI hope is to see a balance for lives, for livelihood, and for growth, and over a 3-year window, so that we can go from recovery to solid growth on these parameters. We have seen the government already focus on the recovery mode, whether it's for people at the lowest, the bottom of the pyramid with the food support, the money support, some of them that will require to continue. Lives should move to the next stage now with significant investment on the healthcare side. I would even put education with that, because in many ways that improves the quality of lives. Livelihood is about jobs, and there is so much promise over here from Atmanirbhar India to Make in India, the PLI schemes. We need to work hand in hand with the government and see how do we now take these great ideas into execution starting right away. And I hope the budget addresses that. And if we can get this right, then there is no reason why we should not go back to consistent growth, because the importance is not just growth for the coming year, that's almost a given. The important focus is going to be how do you continue that growth going into FY23 and beyond.
Mr. Bajaj, what is your understanding of how things are shaping up? You know, we are going through a, touch wood, a huge comeback in the economy. Now, how does one understand that this economic recovery is sustainable, it is real, and this is something which will sustain?
I would say here the first thing, Nikunj, and you yourself talked about that, is we need to make sure now that this pandemic is behind us. We've stayed away from a second large wave. We can't afford for that to happen. We know what that has done for other economies in the Western world. So yes, the vaccine rollout, the distribution of that so that it reaches everybody as fast as possible. This is important so that no additional variant gets the chance to grow exponentially. If that happens, then we are seeing most sections of business coming back to quite close to normalcy. And with the continued focus of the government, see, at times when the private sector still is not able to invest, but is coming now to a stage where capacities are being reached, the government has to chip in for some time, and infrastructure support can be such a big move. It's something that took us through the last decade, I would say the decade before the last now, of the 2000s, and there is no reason why it should not take us ahead over there. There are a few segments still. We know the informal economy got hurt really bad. We know that SMEs and MSMEs got a lot of support to stay afloat from the government, but will need more support to go back into growth mode. And certain large sectors of industry have got hurt, the obvious ones. These need clinical support again from the government, but everything else is growing in the right direction. And I can tell you, when we are looking in, even in Bajaj Finance at our loan book, the quality is coming back. It is looking better than what it looked 6 months ago.
Talk about your sector, Mr. Bajaj. It's a sector where chop and churn has happened. Big players have become large and large players have become mega. The smaller NBFCs are suffering. Some of them have got liability problems, some of them have got an asset problem, some of them have got both. Now, if you're representing CII, and if you have to, let's say, give a recommendation that how can the smaller players in the NBFC space be protected and how can they be restarted again, what should one do?
So there are a few fundamental issues over here. What immediately RBI did last year was open a liquidity window for NBFCs, and this was done only the second time in, I think, 15 or 20 years. So that was to take care of any urgent requirements. We now basically have to see credit coming back into the system because the smaller NBFCs, by and large, raise their money from banks. Now, the challenge that we have is that our large public sector banks, which have really held various portions of the economy over periods of time, are hurting right now. And that's where this thought of multiple bad banks comes out, so that you take that bad cholesterol outside of their system, put in some capital, allow them to lend to extend credit again. This is important for it to get started. And then as CI, as we are saying, other than a few strategic PSBs that the government would want to hold a majority stake in, the rest, make your intention clear that you will go 50. The market will open up for them. These will professionalize in coming years so that you don't have the same situation coming up again. On the private side, you can see private banks and even large NBFCs, including our own, are incrementally lending more. So they're doing their bit. But we need all of them to work together in unison.
Mr. Bajaj, Bajaj Finance was an NBFC, but it is on course to become a fintech company. But not NBFC, every NBFC company is becoming a fintech company. There is innovation happening in the fintech world. The challenge is that in India, the innovation in the fintech world or the startup world is getting funded only by PE investors, and when they need capital, they are going outside the shores of India. Do you think a lot of retooling and relook needs to be done about the laws and startup and the listing norms there, because that's one space which needs constant capital?
Here, Nikunj, what is important is that traditionally in the last 10 years, when we talk of fintech companies, these are startups, very innovative, which have made some, I would say, leeway in the financial services world, but mainly by leveraging technology. So while fintech has become the common word, they are more tech fin companies, and that is why they don't have too many skills, experience on the financial services side, say on the lending side or on the insurance side. Most of them end up being distributors. If you see whether it's the payment banks, whether it's some of the web aggregators, they're mainly distributors. The opportunity that we see for some of the large banks or NBFCs like Bajaj Finance is that some of us can truly be fintech that is born as a finance business, but leveraging technology today, which is imperative in this digital era, but providing that experience to customers for at least a large part of our products and services where you can minimize human interaction, where you can leverage technology, algos, data to provide intelligent, interesting solutions. So that's where Bajaj Finance is coming from. But yes, you do need a set of rules to manage those companies that are born purely as tech or that are doing, I would say, discrete activities in the financial services chain rather than the whole activities. But you have to always keep in mind that a lot of this innovation comes when the regulation is light. And that's why what RBI has also suggested now for large NBFCs, the staging by size and the additional supervision is pragmatic, so that when you're small, you stay flexible, lighter regulations, innovate. That's how we really build our future. But as you get larger, you have to get more responsible.
Will CII welcome a COVID cess if it is implemented? I'm putting words in your mouth, I know that, but I'm a journalist. My job is to get a reaction about a buzz.
I'm not clear. When you say welcome a COVID test, for what purpose?
COVID cess for healthcare funding. If there's a COVID cess on super rich or a corporate surcharge in form of COVID cess, will you welcome it?
As CI, we believe that what the government has done with taxes in the last couple of years, we must stay consistent with that and not unnecessarily tweak that, including adding to it. We saw last month's numbers on GST, Nikunj, 1.2 lakh crore. Numbers are growing. We need some patience rather than tweaking this all the time. Instead, there is a flip side to it, that the government owes a lot of money in delayed payments to businesses. Yeah, so it owes a lot of this money to businesses. There are tax refunds that are due. If the government just pays that out, that itself will create another demand boost. So we would hope that happens and we stay steady with taxes.
Good morning, Mr. Sanjeev Bajaj. This is Nayantara Rai. My one question to you is that, according to you, what would be a good budget? What would get a thumbs up from you as far as this union budget goes?
Morning, Nayantara. I would say three things. One is continued support to certain sections of industry. Second is clear executable plans on infrastructure, health, education, which will provide us that fillip for growth over the coming years. It will bring our fiscal deficit down to manageable numbers. And third is a clear intent to cleaning up, stabilizing the banks through raising capital in public sector banks and introducing the bad bank as a focus area to clean up the existing bad loans in public sector banks. And the government must seriously think of a development financial institution which will help us with long-term infrastructure projects. If we see these announcements, I think a combination of this takes us from recovery to growth, ensuring lives, livelihood, and growth all over the next coming years.
Mr. Bajaj, because you've mentioned a lot of things that will get a thumbs up as far as financial services go, multiple bad banks, etc. There is a strong buzz that, will budget 2021 increase the FDI cap for insurance to 74%. It is seen as a politically difficult decision to take, but there is another view that this is the time and you do need the capital, etc. Are you expecting an FDI cap hike?
Well, as at CII, we are waiting to see what all gets announced. We've always felt that we must attract capital from all over the world, have a consistent set of rules over here. At the same time, strategic businesses need to stay under eventual control over here. Now, I'm personally biased, given that I'm in this industry. So we'll wait and watch to see what comes out today, and then maybe we can talk about it.
Okay, so let's all watch out for that. Mr. Bajaj, it's been a pleasure having you this morning before the budget. 45 minutes to go before the Central Exchequer will begin her budget speech. With that, we're going to take a short commercial break. Stay tuned. We're going to be back after that commercial break with the ET Now Budget Think Tank, a power-packed think tank to analyze the union budget for all of you.
Of lockdown, there is someone playing on your fears and emotions. Online fraudsters. Let me share 3 ways in which they exploit your fears and trick you. They pretend to be bank telecallers and offer to help you secure a loan deferment as put out by the RBI. They will have your personal information and will try and gain your trust by asking you to verify those personal details. They will then ask you to download an app or click on a link and then share with them your OTP and PIN to avail of the deferment. But once you do it, your money will be siphoned out of your bank account. They will send you a message with a link pretending to show you a location or a heat map of COVID-19 positive patients near you, or even say getting access to unemployment fund. Chances are, out of fear, you click on the link or even download the app. But once this app is installed, your smartphone becomes remotely controlled and people can have access to your OTP PIN and all your personal data that is stored on your phone. Some fraudsters may even create dozens of similar sounding UPI IDs to try and trick you into donating for so-called COVID-19 patients or charities. Make sure to check the fund details twice yourself from authentic sources before you actually donate any money. Stay home, stay secure, be alert. Times Network is fighting fear with facts.
Hi.
Hi, welcome back.
Thank you.
Coffee?
Yes, long day today. Wait,
I'll just get it.
Thank you. Hey, you did not pick up Arav today?
His teacher texted.
Huh?
He has extra classes today.
Thank you. Really? Oh, is he still angry?
He is a little.
I think $1,000 के लिए ना we scolded him too much here.
Ravi, बात 1000 रुपए की नहीं है. He needs to learn.
I know. You know, I was actually thinking उसके लिए एक bank account खुलवाते हैं. What do you say?
Bank account? Why?
See, he's been hinting एक महीने से that he wants pocket money. So I was thinking, why not?
Ravi, he just spent 1000 rupees on a random app. That too without asking us. And you want to give him more money to spend?
I know, Baba, but instead of punishing him, maybe we can teach him this way.
Teach him what? कि और पैसे कैसे उड़ाते हैं?
He'll have his own card and he'll learn early on that if he spends, he need to return it also. It's a good idea. Think about it.
Okay, fine. We'll try it. But you're his guardian, not me.
हाँ, मेरा बेटा है. जल्दी समझ जाएगा.
अच्छा, वो जो तुमने आज तक नहीं दिया.
A wise decision is wise only if you pass on the advice. Teach your children the value of investing and compounding early.
The world has been forced into a standstill. Every day, the battle becoming more uphill. Now, more than ever, it's easy to believe all the naysayers who say the Indian economy will struggle to recover. All the doomsdayers who think it's time to look for an exit strategy and cover. Well, no one believed India could win the 1983 World Cup. But we did. No one believed a man from rural India could develop an affordable sanitary product. But he did. No one believed India could send a satellite to Mars. But we did. Every single time we were backed into a corner, we came out swinging against all odds. Despite every obstacle, it's time again for a rematch. You ready for it?
He knows the market trends today and has mastered them over the last 15 years.
Well, in less than 45 minutes, Nirmala Sitharaman is expected to stand on the floor of the parliament and present the first budget of the decade, a budget like never before. That is what she has indicated in her pre-budget press conferences. Will it be a budget like never before? So let's discuss that. I think the Prime Minister also has arrived. There you see the Prime Minister is at the parliament now, and there's a special gate through which the Prime Minister always reaches the parliament. The Finance Minister is already there at the parliament. He's walking on the corridor of the parliament. So I think everything is as per schedule. 11 o'clock is when we should expect that Finance Minister should be taking the floor of the parliament and presenting her third budget and the first budget of this decade. Let me take a moment to introduce our Think panel. It doesn't get bigger than this. You've got Puneet Chitwal of Indian Hotels, Mr. Rajesh Sharma of Capri Global. You've got Mehdi Busunmat, ET Now's consulting editor. It gives me great pleasure now to bring on board Mr. Rajneesh Kumar, former chairman of SBI. Vibhaji, good morning to you. Always a pleasure to have you. Amongst all ready to roar. He's expecting something for the healthcare sector. Shefali, good morning to you as well. And Mr. Sondi, thank you. Wave your hand, Mr. Sondi. You're joining us live from the headquarters of Amul.
Yeah.
Okay, everyone's ready. So I'm going to take and throw the first question at Mr. Chatwal. Mr. Chatwal, you are already making your notes. Looks like your sector is one sector which needs a lot of support from the government. What are you expecting? Because it's a no-brainer to imagine that the healthcare, the hospitality sector will not get anything.
Yeah, good morning, Nikunj, and good morning to everyone else on this panel. When you hear the words like never before, it does sound that maybe tourism gets some reflection in the budget, because I don't think ever before it has been reflected. But that was on a lighter note. I think hospitality has a direct correlation with the GDP, and the GDP growth has a direct correlation with stimulating demand. And I think indirectly, through the demand factor and the growth of GDP is always positive for our sector. And if we can get some of the things that we have represented to the government for on the policy, on the taxation, and on stimulus for demand, then we would be very pleased with the outcome.
Umang, while healthcare has been an important element of budget, but healthcare, Umang, has always been a state subject. But this time, given that we are in a pandemic year, do you think the budget will have a very strong focus towards healthcare, and especially do you expect a big number on the vaccine rollout front?
Yes, I think I do expect that, Nikunj. I'm quite clear that I think we are going to see vaccines for sure getting a large share of the kitty. And I actually even think corporates may be asked to begin to try and see if they can help out in this drive as well, which is good for the overall country. I think there's going to be some focus on health. And I would definitely want to raise healthcare spending over 1.2 to 2.5, 3% of GDP. I also think that Mediclaim, the fact that insurance is going to get a big boost, is a big one here, this budget. In fact, my opinion would be that possibly is going to be a big shift that the government's going to make. More Mediclaim deduction, more amounts of regulations to make sure, relaxing of regulations to make sure that insurance coverage increases. I think there's one theme though, Nikunj, that is very important. And one of the things that we may be sitting on in the world is the definition of superpowers is beginning to change. I think a superpower is a country that can come out of a crisis successfully, because these crises will keep coming in this whole global and interconnected world. And if you really look at that, at the substance, at the center of all of this is self-reliance. So in some way, the institutions that India has built, whether it's in the pharmaceutical, consumer, our courts, our everything, right? I think that is going to get a huge focus. I expect a lot of benefit for manufacturing sectors. I expect a lot of benefit for services, for self-reliant sectors. And we're looking forward to that. I hope the government in the future also takes a look at innovation very, very strongly. Because one is to be able to have capacity to produce vaccines and everything else. The second is to produce your own vaccines and medicines indigenously. So I expect a boost to innovation as well. But yes, I expect a much more healthcare access and leaning budget this time.
Well, it's such a powerful comment that a superpower is the one which can sustain a crisis, and given India's positioning, we are on course to change our course. First it was survival, now it's revival, but how can we go to thrive? And Mr. Kumar, good morning to you once again. For India to really grow, you need support of banks. The challenge is that every year government has been recapping PSU banks, and if numbers are anything to go by, government has recapped PSU banks to the tune of about 3 lakh crore in last 5 years. Given that we are in a COVID year, do you still expect that the recap number will continue?
Yeah, some recapitalization will be required. I'm not aware of that, how much it will be provided for, but the requirement, there are various estimates, and the nearest is about 42,000 crore. So public sector banks, given their valuations today, it is very difficult for them to raise the capital from the market, and there is no option left but to provide capital in the budget. Now, how much provision that will be? So we have to wait, but I feel that definitely there will be provision for recapitalizing some of the public sector banks. Not every bank will need it, and but some of them will definitely need it.
Okay, you know what? Before we go across to our next set of speakers, I quickly want to mark the kind of volatility that you're seeing in the market. Started off quiet, picked up in the green, that got sold into, flattened out completely. And now again, you're seeing a 0.5% uptick coming in the market. It's really been all over the place. Wild swings, as predictably, traditionally is the case on any given budget day. And similar is the state with the broader end of the market as well. It's being thrown to the left and right. Right now, it's the advances which are taking over by a slim margin. Let's see whether this uptick as well gets sold into. Maitli, I understand from family in New Delhi that it's a warm and sunny day. It's goodbye to the fog and cold winter days. Could it be as warm as sunny and from the finance minister as well today?
Well, one hopes so, but I think she has as difficult a task as the sun fighting with the clouds in winters in Delhi. So let's see, fingers crossed, because as I said, she has an unenviable job, Aisha. I really do not think anybody would want to be in her shoes, because how do I manage in a year like this when your revenues are bound to be low, your vaccine is, I mean, there is a vaccine, yes, but how do you manage the rollout? Where do you find the money? So it's a very, very tough job for her. So I think we have to be a little sympathetic to the job that she's trying to do.
Vibha, hi, good morning. It's going to be a tough task this time around for the finance minister to try and balance the revenues and expenditure, no doubt. But purely talking about your own sector, Vibha, you know, a lot of chatter and murmurs that perhaps there is going to be an FDI uptick coming in for insurance. From your sector perspective, Vibha, what is it that you would want the finance minister to do?
Hi, good morning, everyone. Yes, absolutely. Very tough task ahead of her. A few things on the insurance front, and I just want to put this into context. One is that if you're talking about next year, post-pandemic, being a great year, one can't do that without people being well, people's homes and their own health, as well as their lives being secured. Any major health event or a life event sets back a family by one generation, if not two. And India is very underpenetrated. So in all of that, it just means that some level of a carve out of and away from ATC, because it is overcrowded. People don't buy insurance, unfortunately, first thing in the morning when they wake up and say, I've got to buy it. So there needs to be that little bit of a sweetener, a nudge, at least for a period of maybe 3 years post the pandemic. So that is number one. Also, when you look at the other end of the spectrum of people outliving their savings, given where inflation still is, it means that they don't the calamity that they could face by just outliving their savings. So that's the other end. So some of the asks are in terms of how does one give some sort of a relief on not taxing annuity again, because it's already born out of a tax income base. How does one give a par with people who choose to annuitize and people who choose not to do so, who choose to who don't. So when you look at vast numbers of people, including government servants, including people in public sector undertakings coming up to retirement, this could again give them a fillip, and this Atmanirbhar can really go down well in their own families and little units and their cells, so that all other things fall in place in terms of GDP growth and the outlook being fairly robust.
Right. Vibha, stay with us. Lots more questions coming up for you, and I would urge all our panelists as well to stay put. Umang, if you can just stay back for 5 odd minutes or so. We've got a couple of questions coming your way as well. I'm going to take a very quick break. We've just got half an hour to go for the budget speech. Take a break, but come right back. We've got a lot of questions for our other panelists as well.
ingredient fear and business analysis together. I think that's what day in, day out Nikunj does.
He tracks the biggest business stories that impact the growth of your wealth.
Forces you to come up with a specific recommendation and not just give general answers.
His keen market sense simplifies financial jargon to make you market ready.
A market opening without Nikunj Dalmia, A, is clearly unthinkable, and B, it will clearly be less enthusiastic.
He is most trusted by market veterans and India Inc. alike.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing.
Nikunj, I must say you have good memory, or you're refreshing up from past recordings.
This is a sensitive question, a question which is absolutely critical to us.
No, beautiful question. Very good insight.
A name synonymous with Indian stock markets. Nikunj Dalmia on ET Now.
With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do. We continue to be very well diversified across product lines. The general health of the company continues to be very strong. We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge.
Lockdown, there is someone playing on your fears and emotions. Online fraudsters. Let me share 3 ways in which they exploit your fears and trick you. They pretend to be bank telecallers and offer to help you secure a loan deferment as put out by the RBI. They will have your personal information and will try and gain your trust by asking you to verify those personal details. They will then ask you to download an app or click on a link and then share with them your OTP and PIN to avail of the deferment. But once you do it, your money will be siphoned out of your bank account. They will send you a message with a link pretending to show you a location or a heat map of COVID-19 positive patients near you, or even say getting access to unemployment fund. Chances are, out of fear, you click on the link or even download the app. But once this app is installed, your smartphone becomes remotely controlled and people can have access to your OTP PIN and all your personal data that is stored on your phone. Some fraudsters may even create dozens of similar sounding UPI IDs to try and trick you into donating for so-called COVID-19 patients or charities. Make sure to check the fund details twice yourself from authentic sources before you actually donate any money. Stay home, stay secure, be alert. Times Network is fighting fear with facts.
Hi.
Hi, welcome back.
Thank you.
Coffee?
Yes, long day today. Wait.
right, welcome back. We're in conversation with our think tank, and Mr. Sodhi, let me also come across to you. You know, last year we still had some incentives to boost investment when it came to the dairy sector. This year there's a different kind of wish list. Incentives that put dairy farmers on par with agricultural farmers. That's one. Also, of course, looking at further benefits or tax benefits when it comes to nutritional foods. Share with us what you're watching out for this time. Mr. Sodhi?
Unmute.
Okay, I'll go back across to Mr. Sodhi in a moment. Shefali, all right. Shefali, talking about agriculture though, and really when it comes to the rural segment, you know, there have been, queries in terms of how perhaps they can maintain a balancing act, try and improve on inefficiencies while managing sensitivities. Is this also going to be a component that will be critically eyed this time?
That's true, but doesn't look likely that we'll touch much on the taxation front there. I think we need to do a lot more in the other industries, such as logistics, infrastructure creation, which gives them better access to the market. Maybe I think we'll see more focus of the budget on the fiscal incentives for investments in these sectors. But unlikely that I think they would bring in any new tax on the agriculture at this point.
Okay. Mr. Sodhi, I think you're back with us as well. I wanted to get your views in and really what your sector would be watching out for this time around. Yeah,
you're right. Being an employee of millions of farmers, what stimulus we expect from the budget is that disparity between the urban family income and the rural family income is reduced a little bit, although it is 1:5. And that is only possible if you provide some stimulus for more rural jobs, matching the skills available in the rural India. And coming to the animal husbandry sector, like you had mentioned, what we only one demand, please include animal husbandry in the definition of agriculture. Whatever benefits you are giving, we do not want MSP, we do not power subsidy, we do not want irrigation subsidy, we want just to include so that farmers can get like income tax. Dairy farmers to pay the income tax, but agriculture farmer 100 acre of land has not to pay the income tax. So these are some stimulus we expect so that average income of dairy farmer can increase.
Shefali, so let's talk about the area of expertise, taxation. Nobody is expecting a big change in the corporate tax rates. But what are the additional taxes which do you think this time could be out there in terms of a negative surprise? You know, for us, a good budget as taxpayers is when tax rate goes down. But the compulsions are such that tax rates will not go down. In fact, if anything at all, we are expecting a COVID cess. What do you think on the taxation front could be a dangerous tax?
So Nikunj, I think COVID cess is something that you already talked about, right? I think there is an apprehension that will come in more on the higher income brackets, at least so that, at least we are not impacting the lower to middle class population. We are also hearing a lot of murmurs about wealth tax being reinstated, although it looks like a bad timing if that has to be brought in now. We do have some other countries that have introduced similar taxes, like we've seen Argentina introduce a millionaire's tax, which is a one-time tax of a 3% or a 2 to 3% tax on the assets up to, beyond a certain level. So we are apprehending some such tax, and especially since we keep hearing that this is once in a century type of a budget, there are concerns around that. Although I would say that, the tax rates per se, at least for the corporates, have already been reduced to a great extent. So we are not really expecting them to be tinkered with much. But other incentives, such as, we have the minimum alternate tax, right? And there has been a long-standing demand that having lowered the rates now, we should do away with MAT completely. And especially at least on the startups and some of the impacted sectors like hospitality or some of the other ones, maybe give relief for some time so that they are not impacted by MAT. Also, there is a expectation about ease of doing business. So easing out the rules, like for the Indian companies being listed overseas, coming out with a clear-cut tax regime for that, so that gives it a boost. For the startup sector, there is also the expectation to ease out the fund flow into the startup sector, so that it just gives them more money to do business in, and especially whether it is agriculture or hospitality or healthcare. We do see a lot of small units being set up everywhere, and we've already streamlined the process of registration. But in terms of the tax incentives, killing the angel tax once and for all, that's one of the asks. And if they do some of those things, it will give a very conducive regime.
Right. Right. Vibha, I distinctly remember same time last year, we were in a different setup, not that digital. We were in the studio proximity, and there were changes which were done to the insurance sector, and it is no longer the go-to instrument for tax savers. What has been your experience in this year? Has that really impacted insurance as a category?
Say that that's not the case at all. At least for us, if you remember, Nikunj had mentioned that now the tax has moved from perhaps number 1 or 2 ago to maybe number 7th or 8th. So really happy to say that, because tax is never a good enough insurance. One also needs to understand that this is a protection product. Yes, there is a sweetener, but that can't be the main reason. Because down the line, one could say, this is not what I was looking for. The horizon is much longer than what I was looking for. So the persistency of business and the quality of business is a lot better if underlying reason. Yes, returns also are good, but again, so fortunately, a bit of a storm in the teacup.
Okay, that's that. Counting down to what the finance minister is going to present. We've got about 15 odd minutes left to go before the union budget gets tabled in Parliament. Tell you what, we'll take a very quick break and come right back with more.
I'll just get it. Thank you.
Hey, you did not pick up Arav today?
His teacher texted.
Huh?
He has extra classes today.
Thank you. Really? Oh, is he still angry?
He is a little.
I think $1,000 के लिए ना we scolded him too much यार.
Ravi, बात 1000 रुपए की नहीं है. He needs to learn.
I know. You know, I was actually thinking उसके लिए एक बैंक अकाउंट खुलवाते हैं. What do you say?
Bank account? Why?
See, he's been hinting एक महीने से that he wants pocket money. So I was thinking, why not?
Ravi, he just spent 1000 rupees on a random app. That too without asking us. And you want to give him more money to spend.
I know, Baba, but instead of punishing him, maybe we can teach him this way.
Teach him what? कि और पैसे कैसे उड़ाते हैं?
He'll have his own card, and he'll learn early on that if he spends, he need to return it also. It's a good idea. Think about it.
Okay, fine. We'll try it. But you're his guardian, not me.
हाँ, मेरा बेटा है. जल्दी समझ जाएगा.
अच्छा, वो जो तुमने आज तक नहीं दिया.
A wise decision is wise only if you pass on the advice. Teach your children the value of investing and compounding early.
The world has been forced into a standstill. Every day, the battle becoming more uphill. Now, more than ever, it's easy to believe all the naysayers who say the Indian economy will struggle to recover. All the doomsdayers who think it's time to look for an exit strategy and cover. Well, no one believed India could win the 1983 World Cup. But we did. No one believed a man from rural India could develop an affordable sanitary product. But he did. No one believed India could send a satellite to Mars. But we did. Every single time we were backed into a corner, we came out swinging against all odds. Despite every obstacle, it's time again for a rematch. You ready for it?
He knows the market trends today and has mastered them over the last 15 years.
Bringing greed and fear and business analysis together, I think that's what day in day out Nikunj does.
He tracks the biggest business stories that impact the growth of your wealth.
Forces you to come up with a specific recommendation and not just give general answers.
His keen market sense simplifies financial jargon to make you market ready.
A market opening without Nikunj Dalmia, A, is clearly unthinkable, and B, it will clearly be less enthusiastic.
He is most trusted by market veterans and India Inc. alike.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing.
Nikunj, I must say you have good memory, or you're refreshing up from past recordings.
This is a sensitive question, a question which is absolutely critical to us.
No, beautiful question. Very good insight.
A name synonymous with Indian stock markets. Nikunj Dalmia on ET Now.
With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do. We continue to be very well diversified across product lines. The general health of the company continues to be very strong. We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs in ET is
Been all over the place for the markets. Less than 10 minutes and we should hear from the finance minister as to what the union budget 2021 is going to entail. 13,800 here on the Nifty right now. We're holding out quite okay for the Sensex as well, but this could all change. I hope not. Fingers crossed on this one. And I hope we only move much higher and close at those levels post the budget as well. Joining me right now, a slew of market experts as well to try and figure out what the budget could entail. Sunil Singhania, Nilesh Shah, as well as A. Balasubramaniam. Gentlemen, morning. Sunil, hi. Counting down to the budget, what would go down as a good budget or a no-harm budget, at least given the context of the 6-day correction that we've been staring at?
Hi, good morning, Aisha. I think one thing is, as you rightly mentioned, we have already seen a healthy 7.5%, 8% correction over the last 7-8 days of trading. And I think that is healthy because, you are moving into a budget season, which is normally a very volatile time with already positions being light. I think as far as budget is concerned, frankly, the relevance of budget from an equity market perspective over the years has started to go down. And I would say even in this budget, if there is nothing which is sort of disruptive, I think it would be a very good budget from an equity market perspective. So I think at the margin, we are quite constructive on the markets, irrespective of how the budget pans out.
Bala, hi, good morning. Each time I think of you or speak to you, now I'm only getting hungry. But for those of you who are feeling a little clueless, Bala treated some of us to some delicious Pongal lunch. But that aside, Bala, how do you think the finance minister can take care of hunger pangs of investors who've had a great run from the March recovery and who don't want this state to be broken, especially given the turn that we've seen in the FII sentiment and the large figure that we've seen from the FIIs, a sell figure at that, as of last Friday?
Yeah, sorry. Thanks, Aisha, for the initial remark. Definitely, the government has done a lot of stuff in the last 9 months during COVID period to bring back the confidence back. So therefore, continuing a similar kind of confidence booster to the budget, I think something would be extremely critical to drive back the economic growth. And second is, this is the first time ever the economic survey has gone on record to say that given the fact that real rate of interest is negative, therefore, there is a need for giving a lot of booster in the form of spending. That's something is now a universal voice that is coming across the board, which essentially means how the government is actually keep aside the expenditure budget this year towards certain sectors that has got a great potential to drive back the economic growth, both on the spending side as well as on driving the rural consumption growth. Therefore, the budget is largely, I think, is going to be centered around that. And also given the fact that many steps have been taken related to the tax angle or capital market related angle, as Sunil mentioned about, not much can be expected that can specifically to the stock market, but all the steps that is being taken in the budget or maybe the provisions that are being made are more, I would assume, to be in the nature of the steps that is being taken to bring back the economic growth in various sectors. That's something I would probably see could be a roadmap that could come from the budget.
I want to request our producer to fire a graphic on the Nifty positioning before the budget. Now, ladies and gentlemen, I may just want to remind everyone that this year around, we've not had any pre-budget rally. Markets may have done whatever they've done from, let's say, October to January, but October to January in absolute terms, but from 25th of January today, this market has just gone one way, which is down. F&O positioning is low. Mid-cap stocks have seen a sizable sell-off already. So even the budget, a half-decent budget is capable of surprising the market. That is something which I just want to remind everyone. Markets in the short term are about positioning, they are about sentiment, they are also about open interest and what has happened in the run-up to the budget. Nilesh, this time, we are 3 minutes away from the budget and nobody has even argued, debated or discussed LTCG hatao, dividend tax hatao, buyback tax hatao. Not even a single expert is demanding this or is expecting this.
Yeah, Nikunj, I think clearly this time around, I believe that the market fraternity is really not expecting, any kind of those taxes to go away. If at all, broadly, I think I'm quite sure everybody's praying or wishing that this remains a no-harm budget, that there are no fresh taxes. There have been all kinds of rumors and buzzes around, fresh taxes coming in on your net worth or your income for the very high income category and those kind of things. I think we all have to just keep our fingers crossed and hope and pray that, those kind of things don't happen. So clearly, I think if that itself happens, in the sense that there is no harm, I think that itself will be a very, very good cheer for the markets. In addition to that, of course, if LTCG goes away or is rationalized or cut and all of that, obviously that is going to trigger another fresh wave an up move in the market. But I think for now, let's all basically just hope and pray that there are no more fresh taxes on investments or capital gains or on higher income.
Nikunj, if you can just come in here, I think Nilesh just mentioned the second point about the long-term capital tax if it goes off. I would probably assume, given the fact the finance minister has been approaching entire provisioning of various taxes, from the angle of how much is actually contributing to the exchequer and how significant it is, assuming you go by that kind of analysis, definitely LTCG has not added much to the government in terms of exchequer contribution. Therefore, there is high probability such kind of positive surprise could come, given the fact that there is need for vibrant capital market for next year to fulfill the divestment target. This is one of the assumption I'm making, that such kind of surprises could come.
Bala, very important, if the government anywhere has to reach to their assumptions, they need the divestment to work for them, which has frankly not worked for them this year because of COVID, last year because of what all they tried to do in terms of ETF selling and merging some government companies into the other. So the disinvestment has been more like a paper tiger, and this year we are nowhere close to what is envisaged. Sunil, ultimately what markets want are two things: a booster to earnings and a booster to cash flows. That's what markets ultimately want. They can digest a one-day fall, they can digest a 10-day volatility, that's par for course. What can this budget do to really indicate to the market that corporates will make more profits and cash flows will increase?
I think, Nikunj, you're perfectly right that it's all about earnings and cash flows. But if you see, with this low interest rate regime, and hopefully, if there are certain policies which clearly indicate the time frame of the fiscal deficit, which is expected to touch 6.5% going back to its normalization, we might have a move again in the bond side, and that means the yield will go down. Already the corporates are enjoying the benefit of lower interest rates, which is boosting their profit and which is also boosting demand because it becomes more affordable. I think that trajectory goes on. The government has also reduced income tax last year on new manufacturing entities. I think that also is adding to corporate profitability. But ultimately, I think what is needed is one big, disinvestment to go through. And then there will be a lot more confidence that multiple disinvestments will go through. So I think despite all the attempts, what we have missed last 1 year, despite maybe because of COVID and whatever, we have not seen a single large strategic disinvestment going through. I think what the market is just waiting for is one of them going through. And then the government has been very clear that except 5-6 strategic PSUs, they would be more than willing to divest a lot of them. So, we need a little bit of luck with one PSUs going through as far as strategic disinvestment is concerned. And the good thing is, with global liquidity being so high, with global interest rates being so low, the risk-taking ability globally is pretty high. And I would give it the benefit of doubt that in the next 3 months, you would definitely have at least one big bang strategic divestment going through.
Nilesh, I'm going to ask you a very quick one and perhaps a direct one, okay? You already have pictures coming from Lok Sabha TV. We would be cutting to Lok Sabha TV the minute the finance minister will be standing on the floor of the parliament. So just, any second now, literally. Sunil Singhania, age I can see is acting. You have to wear your glasses, 50 plus, yes. You have to wear your glasses to watch television screen now. No, it's just that I saw Sunil Singhania wearing his glasses. So I'm
maybe
just
this is
saying
my
that
30th budget, I don't know.
I must share with our viewers that we've been friends for a while now. Our acquaintance goes for more than 20 years with Nilesh and with Bala and Sunil. It's just so fascinating knowing all of them. Nilesh, the orientation of the market is changing towards infra and cyclicals. Will that be the go-to sector now in the near term?
That definitely looks to be a great opportunity. Clearly, we seem to be on the cusp of the investment cycle coming back to life. That's one space which is pretty much, and it looks like with the kind of government's focus on infrastructure, there seems to be a very strong resolve.
Honorable Speaker, I present the budget for the year 2021-2022. As introduction, Honorable Speaker, the preparation of this budget was undertaken in circumstances like never before, We knew of calamities that have affected a country or a region within a country. But what we have endured with COVID-19 through 2020 is sui generis. When I presented the budget 2020-2021, we could not have imagined that the global economy, already in throes of a slowdown, would be pushed into an unprecedented contraction. We could not have also imagined then that our people, as those in other countries, would have to endure the loss of near and dear ones and suffer hardships brought about due to a health crisis. The risk of not having a lockdown was far too high. Within 48 hours of declaring a 3-week-long complete lockdown, the Prime Minister announced the Pradhan Mantri Garib Kalyan Yojana, valued at 2.76 lakh crores, that provided free food grain to 800 million people, free cooking gas for 80 million families for months, and cash directly to over 400 million farmers, women, elderly, the poor, and the needy. Even as a large section of citizens stayed home, milk, vegetables, fruit suppliers, health and sanitary workers, truck drivers, railways and public transport workers, bank employees, electricity workers, annadatas, police, firemen and the armed forces all had to go about their work as normal, but with the additional anxiety of the virus hanging over them. We recognize this, and I think I speak on behalf of everybody in this august house when I express my heartfelt gratitude to these men and women for how they were able to carry out their work and duty to provide for the nation's basics over those crucial months. Speaker, sir, for public good, honorable members of parliament and members of legislative assemblies too offered their salaries. In May 2020, the government announced the Atmanirbhar Bharat package. To sustain the recovery further into the year, we also rolled out 2 more Atmanirbhar packages, 2 and 3. Total financial impact of all the Atmanirbhar Bharat packages, including measures taken by the RBI, was estimated to be about 27.1 lakh crores, which amounts to more than 13% of our GDP. As a government, we kept a watch on the situation and were proactive in our responses. The government, led by the Prime Minister, stretched its resources to deliver for most vulnerable sections of our society, the poorest of the poor, the Dalits, the tribals, the elderly, the migrant workers and our children. The Pradhan Mantri Garib Kalyan Yojana, the 3 Atmanirbhar packages and announcements made later were like 5 mini budgets in themselves. The Atmanirbhar packages accelerated our pace of structural reforms, redefinition of MSMEs, commercialization of the mining sector, agriculture and labor reforms, privatization of public sector undertakings, One Nation, One Ration Card, production-linked incentive schemes are some of the notable reforms carried out during this period. Faceless income tax assessment, DBT, and financial inclusion are the others. Today, India has 2 vaccines available and has begun medically safeguarding not only her own citizens against COVID-19, but also those of 100 or more countries. It is added comfort to know that 2 or more vaccines are also expected soon. Honorable Prime Minister launched the vaccination drive by crediting and thanking our scientists. We are ever grateful for the strength and rigor of their efforts. Having said that, we are all reminded time and again that our fight against COVID-19 continues into 2021. Now, just as it happened after the 2 world wars, there are signs that the political, economic, and strategic relations in the post-COVID world are changing. This moment in history is the dawn of a new era, one in which India is well poised to truly be the land of promise and hope. I borrow the words of Rabindranath Tagore. Faith is the bird that feels the light and sings when the dawn is still dark. Faith is the bird that feels the light and sings when the dawn is still dark. In this spirit, I can't help but recall the joy that we as cricket-loving nation felt after the Team India's recent spectacular success in Australia. It has reminded us of all the qualities that we as a people, particularly our youth, epitomize of having abundant promise and the unsuppressed thirst to perform and to succeed. Today, data shows that India now has one of the lowest death rate of 112 per million population and one of the lowest active cases of about 130 per million. This has laid the foundation to the revival we are seeing now in the economy. This budget will be the first of this new decade. This budget will also be a digital budget, and that has happened with all your support. So far, only 3 times has a budget followed a contraction in the economy. All such contractions earlier were as a result of situations typical to India. This time, the contraction in our economy is due to a global pandemic, just like in several other countries. Having said that, I want to confidently state that our government is fully prepared to support and facilitate the economy's reset. This budget provides every opportunity for our economy to raise and capture the pace that it needs for a sustainable growth. 2021 is the year of many important milestones for our history. I mention a few of these. It is the 75th year of independence, 60 years of Goa's accession to India, 50 years of the 1971 India-Pakistan War. It will be the year of the 8th census of independent India. It will also be India's turn at the BRICS presidency, the year for our Chandrayaan-3 mission, and the Haridwar Mahakumbh. Honorable Speaker, before I commence Part A of the budget, I want to take a moment to acknowledge how isolating and distancing seemed like insurmountable challenges for a country like ours that has people coming together in times of crisis. It hurts us in many ways. It hurt us in many ways. I bow my head in respect to every citizen for the endurance shown in facing what was an undeniably a tough year for all our physical and mental well-being. Part A. In Part A, I wish to lay a vision for Atmanirbhar Bharat. Atmanirbhar Bharat or Atmanirbharta is not a new idea. Ancient India was largely self-reliant and equally a business epicenter of the world. Atmanirbhar Bharat is an expression of the 130 crore Indians who have full confidence in their capabilities and skills. We are already part of international groupings such as the G20 and the BRICS, the Coalition for Disaster Resilient Infrastructure, and the International Solar Alliance are realities today due to India's efforts. The proposals in Part A will further strengthen the sankalp of nation first, doubling farmers' income, strong infrastructure, healthy India, good governance, opportunities for youth, education for all, women empowerment, and inclusive development, among others. Additionally, also on the path to fast implementation are the 13 promises we had made in the budget of 2015-16, which were to materialize during the Amrit Mahotsav of 2022 on the 75th year of our independence. They too resonate with the vision of Atmanirbharta. The budget proposals for 21-22 rest on 6 pillars: health and well-being, physical and financial capital and infrastructure, inclusive development for aspirational India, reinvigorating human capital, innovation and R&D, and as 6th, minimum government and maximum governance. I now move to talking about the first pillar, health and well-being. Even at the outset, I would like to say that the investment on health infrastructure in this budget has increased substantially. Progressively, as institutions absorb more, we shall commit more. Taking a holistic approach to health, we focus on strengthening 3 areas: preventive, curative, and well-being. Health systems. A new centrally sponsored scheme, PM Atmanirbhar Swasth Bharat Yojana, will be launched with an outlay of about 64,180 crores over 6 years. This will develop capacities of primary, secondary, and tertiary care health systems, strengthen existing national institutions, and create new institutions to cater to detection and cure of new and emerging diseases. This will be in addition to the National Health Mission. The main interventions under the scheme are support for over 17,000 rural and 11,000 urban health and wellness centers, setting up integrated public health labs in all districts, and 3,382 block public health units in 11 states, establishing critical care hospital blocks in 602 districts and 12 central institutions, strengthening of National Center for Disease Control, its 5 regional branches and 20 metropolitan health surveillance units, expansion of the integrated health information portal to all states and UTs to connect all public health labs, operationalization of 17 new public health units, and strengthening of 33 existing public health units at points of entry, that is, at 32 airports, 11 seaports, and 7 land crossings, setting up of 15 health emergency operation centers and 2 mobile hospitals, and setting up of a National Institution for One Health, a regional research platform for WHO, World Health Organization, Southeast Asia Region Office, 9 biosafety level 3 laboratories, and 4 regional national institutes for virology. Nutrition. To strengthen nutritional content, delivery, outreach, and outcome, we will merge the supplementary nutrition program and the Poshan Abhiyan and launch the Mission Poshan 2.0. We shall adopt an intensified strategy to improve nutritional outcomes across 112 aspirational districts. Universal coverage of water supply. The World Health Organization has repeatedly stressed the importance of clean water, sanitation, and clean environment as a prerequisite to achieving universal health. The Jal Jeevan Mission Urban will be launched. It aims at universal water supply in all 4,378 urban local bodies with 2.86 crores household tap connections, as well as liquid waste management in 500 Amrit cities. It will be implemented over 5 years with an outlay of 2,87,000 crores. Swachh Bharat and Swasth Bharat. For further Swachhata of urban India, we intend to focus on complete fecal sludge management and wastewater treatment, source segregation of garbage, reduction in single-use plastic, reduction in air pollution by effectively managing waste from construction and demolition activities, and bioremediation of all legacy dump sites. The Urban Swachh Bharat Mission 2.0 will be implemented with a total financial allocation of 1,41,678 crores over a period of 5 years from 2021. Clean air. To tackle the burgeoning problem of air pollution, I propose to provide an amount of 2,217 crores of rupees for 42 urban centers with a million plus population in this budget. Scrapping policy. We are separately announcing, Honorable Speaker, a voluntary vehicle scrapping policy to phase out old and unfit vehicles. This will help in encouraging fuel-efficient, environment-friendly vehicles, thereby reducing vehicular pollution and oil import bills. Vehicles would undergo tests in automated fitness centers after 20 years in case of personal vehicles and after 15 years in case of commercial vehicles. Details of the scheme will be separately shared by the ministry. Vaccines. The pneumococcal vaccine, a made-in-India product, is presently limited to only 5 states. It will be rolled out across the country. This will avert more than 50,000 child deaths annually. Honorable Speaker, I have provided 35,000 crores of rupees for COVID-19 vaccines in this year 21-22. I am committed to provide further funds if required. So the budget outlay for health and well-being is 2,23,846 crores in this BE 21-22 as against the BE of only 94,452 crores, and it marks an increase of 137%. The details of the same are at Annexure 1 of the speech. Honorable Speaker, I now move to the second pillar, physical and financial capital and infrastructure. Atmanirbhar Bharat, production-linked incentive schemes are things which I would like to place an emphasis. For a $5 trillion economy, our manufacturing sector has to grow in double digits on a sustained basis. Our manufacturing companies need to become an integral part of global supply chains, possess core competence and cutting-edge technology. To achieve all of the above, PLI schemes to create manufacturing global champions for an Atmanirbhar Bharat have been announced for 13 sectors. For this, the government has committed nearly 1.97 lakh crores over 5 years starting this financial year. This initiative will help bring scale and size in key sectors, create and nurture global champions, and provide jobs to our youth. Textiles. To enable the textile industry to become globally competitive, attract large investments, and boost employment generation, a scheme of Mega Investment Textile Park will be launched in addition to the PLI scheme. This will create world-class infrastructure with plug-and-play facilities to create global champions in exports. 7 textile parks will be established over 3 years. Infrastructure. The National Infrastructure Pipeline, which I announced in December 2019, is the first of its kind. Whole of government exercise ever undertaken by Government of India. The NIP was launched with 6,835 projects. The project pipeline has now expanded to 7,400 projects. Around 217 projects worth rupees 1.10 lakh crores under some key infrastructure ministries have been completed. The NIP is a specific target which this government is committed to achieving over the coming years. It will require major increase in funding from both the government and the financial sector. In this budget, I propose to take concrete steps to do this in 3 ways. Firstly, by creating the institutional structures. Secondly, by a big thrust on monetizing assets. And thirdly, by enhancing the share of capital expenditure in central and state budgets. Infrastructure needs long-term debt financing. A professionally managed development financial institution is necessary to act as a provider, enabler, and catalyst for infrastructure financing. Accordingly, I shall introduce a bill to set up a development financial institution. I have provided a sum of 20,000 crore rupees to capitalize this institution. The ambition is to have a lending portfolio of at least 5 lakh crores for this DFI within 3 years' time. Debt financing of InvITs and rates by foreign portfolio investors will be enabled by making suitable amendments in the relevant legislations. This will further ease access of finance to InvITs and rates, thus augmenting funds for infrastructure and real estate sectors. Asset monetization. Monetizing operating public infrastructure. Monetizing operating public infrastructure assets is a very important financing option for new infrastructure construction. A national monetization pipeline of potential brownfield infrastructure assets will be launched. An asset monetization dashboard will also be created for tracking the progress and to provide visibility to investors. Some important measures in the direction of monetization are National Highways Authority of India and the PGCIL each have sponsored one InvIT that will attract international and institutional investors. 5 operational roads with an estimated enterprise value of 5,000 crores of rupees are being transferred to the NHAI InvIT. Similarly, transmission assets of value 7,000 crores will be transferred to the PGCIL InvIT. Railways will monetize dedicated freight corridor assets for operations and maintenance after commissioning. A next lot of airports will be monetized for operations and management concessions. Other core infrastructure assets that will be rolled out under the asset monetization programs are NHAI operational toll roads, 2 transmission assets of PGCL, 3 oil and gas pipelines of GAIL, Gas Authority of India Limited, IOCL and HPCL, Airports Authority of India airports in Tier 2 and 3 cities, other railway infrastructure assets, warehousing assets of CPSE, such as the Central Warehousing Corporation and NAFED, among others, and sports stadiums. sharp increase in capital budget. In the BE 2020-21, we had provided for 4.12 lakh crores for capital expenditure. It was our effort that in spite of resource crunch, we should spend more on capital, and we are likely to end this year at around 4.39 lakh crores, which I have provided in the RE of 2020-2021. For 21-22, I propose a sharp increase in capital expenditure and thus have provided 5.54 lakh crores, which is 34.5% more than the BE of 2020-2021. Of this, I have kept a sum of more than 44,000 in the budget head of the Department of Economic Affairs to be provided for projects, programs, or departments that show good progress in capital expenditure and are in need of further funds. Over and above this expenditure, we would also be providing more than 2 lakh crores to states and autonomous bodies for their capital expenditure. We will also work out specific mechanisms to nudge states to spend more of their budget on creation of infrastructure. Roads and highways infrastructure. More than 13,000 kilometer length of roads at a cost of 3.3 lakh crores has already been awarded under the 5.35 lakh crores Bharatmala Pariyojana project, of which 3,800 kilometers have been constructed. By March 2022, we would be awarding another 8,500 kilometers and complete an additional 11,000 kilometers of national highway corridors. To further augment road infrastructure, more economic corridors are also being planned. Some are 3,500 kilometers of national highway works in the state of Tamil Nadu at an investment of 1.03 lakh crores. These include Madurai-Kollam corridor, Chittoor-Tachur corridor, and construction will start next year. Second, 1,100 kilometers of national highway works in the state of Kerala at an investment of 65,000 crores, including 600 kilometer section of Mumbai-Kanyakumari corridor in Kerala. Third, 675 kilometers of highway works in the state of West Bengal at a cost of 25,000 crores, including upgradation of existing road Kolkata-Siliguri. National highway works of around 19,000 crores are currently in progress in the state of Assam. Further works of more than 34,000 crores covering more than 1,300 kilometers of national highways will be undertaken in the state in the coming 3 years. Some of the flagship corridors and other important projects that would see considerable activity in 2021-22 are in Annexure 2 to my speech. I am also providing an enhanced outlay of 1,18,101 lakh crores, 1,18,101 crores for Ministry of Road Transport and Highways, of which 1,08,230 crores is for capital, the highest ever provided. Railway infrastructure. Honorable Speaker, sir, Indian Railways have prepared a National Rail Plan for India 2030. The plan is to create a future-ready railway system by 2030, bringing down the logistic costs for an industry is at the core of our strategy to enable Make in India. It is expected that Western Dedicated Freight Corridor and Eastern Dedicated Freight Corridor will be commissioned by June 2022. The following additional initiatives are also proposed. The Sonnagar-Gomo sections, 263 kilometers of Eastern Dedicated Freight Corridor will be taken up in PPP mode in this year itself. Gomo-Dankuni section of 274.3 kilometers will be also taken up shortly in short succession. We will undertake future dedicated freight corridor projects, namely East and North-South corridor from Itarsi to Vijayawada. Detailed project reports will be undertaken in the first phase. Broad gauge route kilometers, RKM as I referred to, electrified is expected to reach 46,000 kilometers, 46,000 RKM. That is 72% by end of 2021 from 41,548 RKMs on 1st October 2020. 100% electrification of broad gauge routes will be completed by December 2023. For passenger convenience and safety, the following measures are being proposed. We will introduce the aesthetically designed Vista Dome LHB coach on tourist routes to give better travel experience to passengers. The safety measures undertaken in the past few years have borne results. To further strengthen this effort, high-density network and highly utilized network routes of Indian Railways will be provided with an indigenously developed automatic train protection system that eliminates train collision due to human error. I am providing a record sum of 1,10,055 crores for railways, of which 1,07,100 crores is for capital expenditure only. Urban infrastructure. We will work towards raising the share of public transport in urban areas through expansion of metro rail networks and augmentation of city bus services. A new scheme will be launched at a cost of 18,000 crores to support augmentation of public bus transport services. The scheme will facilitate deployment of innovative PPP models to enable private sector players to finance, to acquire, to operate, and to maintain over 20,000 buses. The scheme will boost the automobile sector, provide fillip to economic growth, create employment opportunities for our youth, and enhance ease of mobility for urban residents. A total of 702 kilometers of conventional metro is operational, and another 1,016 kilometers of metro and RRTS is under construction in 27 cities. 2 new technologies, that is Metro Light and Metro Neo, will be deployed to provide metro rail systems at much lesser cost with same experience, convenience and safety in Tier 2 cities and peripheral areas of Tier 1 cities also. Central counterpart funding will be provided to Kochi Metro Railway Phase 2 of 11.5 kilometer at a cost of 1,957.05 crores. Chennai Metro Railway Phase 2 of 118.9 kilometers at a cost of 63,246 crores. Bengaluru Metro Railway Project Phase 2A and 2B of 58.19 kilometers at a cost of 14,788 crores. Nagpur Metro Rail Project Phase 2 and Nashik Metro at a cost of 5,976 crores and 2,092 crores respectively. Power infrastructure. The past 6 years have seen a number of reforms and achievements in power sector. We have added 139 gigawatts of installed capacity, connected an additional 2.8 crore households, and added 1.41 lakh circuit kilometers of transmission lines. The distribution companies across the country are monopolies, either government or private. There is a need to provide choice to the consumers by promoting competition. A framework will be put in place to give consumers alternatives to choose from among more than one distribution companies. I read that sentence again. A framework will be put in place to give consumers alternatives to choose from among more than one distribution company. The viability of distribution companies is a serious concern. A revamped, reforms-based, results-linked power distribution sector scheme will be launched with an outlay of 3,05,984 crores over 5 years. The scheme will provide assistance to DISCOMs for infrastructure creation, including prepaid smart metering, feeder separation, upgradation of systems, etc., tied to financial improvements. Prime Minister, while speaking at the third Reinvestment Conference in November 2020, had announced plans to launch a comprehensive national hydrogen energy mission. It is now proposed to launch a hydrogen energy mission in 2021-22 for generating hydrogen from green power sources. Ports, shipping and waterways. Major ports will be moving from managing their operational services on their own to a model where a private partner did it for them. For the purpose, 7 projects worth more than 2,000 crores will be offered by the major ports on private-public partnership mode in FY 21-22. A scheme for promoting flagging of merchant ships in India will be launched by providing subsidy support to Indian shipping companies in global tenders floated by ministries and CPSCs. An amount of 1,624 crores will be provided over 5 years. This initiative will enable greater training and employment opportunities for Indian seafarers, besides enhancing Indian companies' share in global shipping. India has enacted Recycling of Ships Act in 2019 and acceded to the Hong Kong. Around 90 ship recycling yards at Alang in Gujarat have already achieved HKC compliant certificates. Efforts will be made to bring more ships to India from Europe and Japan. Recycling capacities of around 4.5 million light displacement ton LDT will be doubled by 2024. This is expected to generate an additional 1.5 lakh jobs for our youth. Petroleum and natural gas. Our government has kept fuel supplies running across the country without interruption during the COVID-19 lockdown period. Taking note of the crucial nature of the sector in people's lives, the following key initiatives are being announced. 1. Ujjwala scheme, which has benefited 8 crore households, will be extended to cover 1 crore more beneficiaries. We will add 100 more districts in next 3 years to the city gas distribution network. A gas pipeline project will be taken up in the Union Territory of Jammu and Kashmir. An independent gas transport system operator will be set up for facilitation and coordination of booking of common carrier capacity in all natural gas pipelines on a non-discriminatory open access basis. Financial capital. I propose to consolidate the provisions of the SEBI Act 1992, Depositories Act 1996, Securities Contracts Regulation Act 1956, and Government Securities Act 2007 into a rationalized single securities markets code. The government would support the development of a world-class fintech hub at the GIFT IFSC. To instill confidence amongst the participants in corporate bond market during times of stress and to generally enhance secondary market liquidity, it is proposed to create a permanent institutional framework. The proposed body would purchase investment-grade debt securities both in the stressed and normal times and help in the development of the bond market. In the budget 2018-19, government had announced its intent to establish a system of regulated gold exchanges in the country. For the purpose, SEBI will be notified as the regulator, and Warehousing Development and Regulatory Authority will be strengthened to set up a commodity market ecosystem arrangement, including vaulting, assaying, logistics, etc., in addition to warehousing. Towards investor protection, I propose to introduce an investor charter as a right of all financial investors across all financial products. To give a further boost to the non-conventional energy sector, I propose to provide additional capital infusion of 1,000 crores to Solar Energy Corporation of India and 1,500 crores to Indian Renewable Energy Development Agency. I propose to amend the Insurance Act 1938 to increase the permissible FDI limit from 49% to 74% in insurance companies and allow foreign ownership and control with safeguards. Under the new structure, the majority of directors on the board and key management persons would be resident Indians, with at least 50% of directors being independent directors and specified percentage of profits being retained as general reserve. Stressed asset resolution by setting up a new structure. The high level of provisioning by public sector banks of their stressed assets calls for a measure to clean up the bank books. An asset reconstruction company limited, an asset management company would be set up to consolidate and take over the existing stressed debt and then manage and dispose of the assets to alternative investment funds and other potential investors for eventual value realization. Recapitalization of PSB. To further consolidate the financial capital capacity of PSBs, further recapitalization of 20,000 crores is proposed in 21-22. Deposit insurance. Last year, government had approved an increase in the deposit insurance cover from 1 lakh rupees to 5 lakhs for bank customers. I shall be moving amendments to DICGC Act 1961 in this session itself to streamline the provision so that if a bank is temporarily unable to fulfill its obligations, the depositors of such bank can get easy and time-bound access to their deposits to the extent of the deposit insurance cover. This would help depositors of banks that are currently under stress. To improve credit discipline, while continuing to protect the interests of small borrowers, for NBFCs with minimum asset size of 100 crores, the minimum loan size eligible for debt recovery under the Securitization and Reconstruction of Financial Assets and Enforcement of Security Interests SARFAESI Act 2002, it is proposed to be reduced from the existing level of 50 lakhs to 20 lakhs. Company matters. The decriminalization of the procedural and technical compoundable offences under Companies Act 2013 is now complete. I now propose to take up decriminalization of the Limited Liability Partnerships Act 2008. Honourable Speaker, I propose to revise the definition under the Companies Act 2013 for small companies by increasing the threshold for paid-up capital from not exceeding 50 lakh to not exceeding 2 crores and turnover from not exceeding 2 crores to not exceeding 20 crores. This will benefit more than 2 lakh companies in easing their compliance requirements. As a further measure which directly benefits startups and innovators, I propose to incentivize the incorporation of one-person companies by allowing one-person companies to grow without any restriction on paid-up capital and turnover, allowing their conversion into any other type of company at any time, reducing the residency limit for an Indian citizen to set up an one-person company from 182 days to 120 days, and allow also non-resident Indians to incorporate OPCs in India. This will be a big boost for startups. To ensure faster resolution of cases, the NCLT framework will be strengthened, e-court system shall be implemented, and alternate methods of debt resolution and special framework for MSMEs shall be introduced. During the coming fiscal, we will be launching data analytics, artificial intelligence, machine learning driven MCA 2.1 version to MCA 21 version 3.0. MCA 21 version 3.0. This version 3.0 will have additional modules for e-scrutiny, e-adjudication, e-consultation, and compliance management. Disinvestment and strategic sale. In spite of COVID-19, we have kept working towards strategic disinvestment. A number of transactions, namely BPCL, Air India, Shipping Corporation of India, Container Corporation of India, IDBI Bank, Bharat Earth Movers Limited, Pavan Hans, Neelachal Ispat Nigam Limited, among others, would be completed in 21-22. Other than IDBI Bank, we propose to take up the 2 public sector banks and 1 general insurance company in the year 21-22. This would require legislative amendments, and I propose to introduce the amendments in this session itself. In 21-22, we would also bring the IPO of LIC, for which I am bringing the requisite amendments in this session itself. In the Atmanirbhar package, I had announced that we will come out with a policy of strategic disinvestment of public sector enterprises. I'm happy to inform the House that the government has the government has approved the said policy. The policy provides a clear roadmap for disinvestment in all non-strategic and strategic sectors. We have kept 4 areas that are strategic, where bare minimum CPSEs will be maintained and rest privatized. In the remaining sectors of all CPSEs will be privatized. The main highlights of the policy are mentioned in Annexure 3. To fast forward the disinvestment policy, I'm asking NITI to work out on the next list of centre public sector companies that would be taken up for strategic disinvestment. To similarly incentivize states to take to disinvestment of their public sector companies, we will work out an incentive package of central funds to states. Idle assets will not contribute to Atmanirbhar Bharat. The non-core assets largely consist of surplus land with government ministries and departments and public sector enterprises. Monetizing of land can either be by way of direct sale or concession or by similar means. This requires special abilities, and for this purpose, I propose to use a special purpose vehicle in the form of a company that would carry out this activity. In order to ensure timely completion of closure of sick or loss-making CPSEs, we will introduce a revised mechanism that will ensure timely closure of such units. I have estimated 1,75,000 crores as receipts from disinvestment in BE 21-22. Government financial reforms. Under the Treasury Single Account, the TSA system, autonomous bodies directly draw funds from the government's account at the time of actual expenditure, saving interest costs. We will extend the TSA system for universal application from 21-22. On the recommendation of the 15th Finance Commission, we have undertaken a detailed exercise to rationalize and bring down the number of centrally sponsored schemes. This will enable consolidation of outlays for better impact. The government is committed to the development of multi-state cooperatives and will provide all support to them. To further streamline the ease of doing business for cooperatives, I propose to set up a separate administrative structure for them. So the third pillar of Atmanirbhar Bharat, inclusive development for aspirational India. Honorable Speaker, sir, under this pillar, I will cover agriculture and allied sectors, farmers' welfare and rural India, migrant workers and labor, and financial inclusion. Agriculture. Our government is committed to the welfare of farmers. The MSP regime has undergone a sea change to assure price that is at least all commodities. The procurement has also continued to increase at a steady pace. This has resulted in increase in payment to farmers substantially. In case of wheat, a total amount paid to farmers in 2013-14. Honorable Speaker, sir, the data that I give now is important for all honorable members to kindly hear. In case of wheat, the total amount paid to farmers in 2013-14 was 33,874 crores. In 2019-20, it was 62,802 crores. And even better, Honorable Speaker, in 2020-2021, this amount paid to farmers was 75,060 crores. Honorable Speaker, again an important fact, the number of wheat growing farmers that were benefited increased in 2020-21 to 43.36 lakhs compared to 35.57 lakhs in 2019-20. That much of an increase within 1 year. For paddy, again an important data. For paddy, the amount paid in 2013-14 was 63,928 crores. In 2019-20, this increased to 1,41,930 crores. Even better, in 2020-2021, this is further, in 2020-21, this is further estimated, and I'm saying this is further estimated because the procurement is ongoing, and therefore I can't give you the final figure. This is further estimated to increase to 1,72,752 crores. The number of farmers benefited increased from 1.24 crores in 2019-20 to 1.54 crores in 2020-21. In the same way, Honorable Speaker, sir, in the case of pulses, the amount paid in 2013-14 was 236 crores. In 2019-20, this was increased to 8,285 crores. Now in 2021, it is at 10,530 crores. More than 40 times increase from 2013-14. The receipts to cotton farmers have seen a stupendous increase from 90 crores in 2013-14 to 25,974 crores I'm giving you data as of 27th January 2021. This is bound to increase. From 90 crores for cotton farmers in 2013-14 to 25,974 crores in 2021. All the details in complete narration is available in Annexure 4 to my speech. Early this year, Honorable Prime Minister had launched the Swamitva scheme. Under this, a record of rights is being given to property owners in villages. Up till now, about 1.80 lakh property owners in 1,241 villages have been provided cards. I propose during 21-22 to extend this to cover all states and union territories. To provide adequate credit to our farmers, I have enhanced the agricultural credit target to 16.5 lakh crores in this year. We will focus on ensuring increased credit flow to animal husbandry, Pashupalan, dairy, and to Matsyakar, to the fisheries. We are enhancing the allocation to the Rural Infrastructure Development Fund from 30,000 crores to 40,000 crores. The Micro Irrigation Fund, with a corpus of 5,000 crores, has been created under NABARD. I propose to double it by augmenting it by another 5,000 crores. To boost value addition in agriculture and allied products and their exports, the scope of Operation Green Scheme, that is presently applicable to only tomatoes, onions, and potatoes, will be enlarged to include 22 perishable crops. Around 1.68 lakh crore farmers, around 1.68 crore farmers are registered, and 1.14 lakh crores of rupees trade value has been carried out through e-NAMs, the National Agricultural Market. Keeping in view the transparency and the competitiveness that e-NAM has brought into the agricultural market, 1,000 more mandis will be integrated with e-NAM. Honorable Speaker, sir, with all this, the Agricultural Infrastructure Fund would be made available to the APMCs for augmenting their infrastructure facilities. Fisheries. I am proposing substantial investments in the development of modern fishing harbors and fish landing centers. To start with, 5 major fishing harbors, Kochi, Chennai, Visakhapatnam, Paradip, and Petua Ghat, will be developed as hubs for economic activity. We will also develop inland fishing harbors and fish landing centers along the banks of rivers and waterways. Seaweed farming is an emerging sector with potential to transform the lives of coastal communities. It will provide large-scale employment and additional incomes. To promote seaweed farming and cultivation, I propose a multi-purpose seaweed park to be established in Tamil Nadu. Migrant workers and laborers. We have launched the One Nation, One Ration Card scheme, through which beneficiaries can claim their rations anywhere in the country. Migrant workers in particular benefit from the scheme. Those staying away from their families can partially claim their ration where they are stationed, while their family in their native places can claim the rest. I am happy to inform you that One Nation, One Ration Card plan is under implementation by 32 states and union territories, reaching about 69 crore beneficiaries. That's a total of 86% beneficiaries covered. The remaining 4 states and UTs will be integrated in the next few months. To further extend our efforts towards the unorganized labor force, migrant workers in particular, I propose to launch a portal that will collect relevant information on gig workers, building and construction workers, among others. This will help formulate health, housing, skill, insurance credit, and food schemes for all migrant workers. We will conclude a process that began 20 years ago with the implementation of the 4 labor codes. For the first time globally, social security benefits will be extended to gig and platform workers. Minimum wages will apply to all categories of workers, and they will all be covered by the Employees State Insurance Corporation. Women will be allowed to work in all categories and also in the night shifts with adequate protection. At the same time, compliance burden on employers will be reduced with a single registration and licensing and online returns. Financial inclusion. To further facilitate credit flow under the scheme of Stand Up India for the scheduled castes and scheduled tribes and also women, I propose to reduce the margin money requirement from 25% to 15% only, and to also include loans for activities in allied sectors in allied activities in agriculture. We have taken a number of steps to support the MSME sector. In this budget, I have provided 15,700 crores to this sector, more than double of the last year's B. Honorable Speaker, sir, I now go to the fourth pillar, reinvigorating human capital. The national education policy announced recently has had good reception. In school education, more than 15,000 schools will be qualitatively strengthened to include all components of the national education policy. They shall emerge as exemplar schools in their regions, hand-holding and mentoring other schools to achieve the ideals of policy. 100 new Sainik schools will be set up in partnership with NGOs, private schools, and states. Higher education. In Budget 2019-20, I had mentioned about the setting up of a higher education commission in India. We would be introducing the legislation this year to implement the same. It will be an umbrella body having 4 separate vehicles for standard setting, accreditation, regulation, and funding. Many of our cities have various institutions, universities, and colleges supported by the Government of India. Hyderabad, for example, has about 40 major institutions. In 9 such cities, we will create a formal umbrella structure so that these institutions can have better synergy while also retaining their internal autonomy. A glue grant will be set aside for this purpose. For accessible higher education in Ladakh, I propose to set up a central university in Leh. The other important projects to be taken up as a part of the NEP are listed in Annexure 5. Scheduled caste and scheduled tribes welfare. We have set ourselves a target of establishing 750 Eklavya model residential schools in our tribal areas. I propose to increase the unit cost of each such school from 20 crores, which is what it is now, to 38 crores, and for hilly and difficult areas to 48 crores. This would help creating robust infrastructure facilities for our tribal students. We have revamped the post-metric scholarship scheme for the welfare of scheduled caste students. I have also enhanced the central assistance in this regard. We are allotting 35,219 crores for 6 years till 25-26 to benefit 4 crores scheduled caste students. Skilling. In 2016, we had launched the National Apprenticeship Promotion Scheme. The government proposes to amend the Apprenticeship Act with a view to further enhancing apprenticeship opportunities for our youth. We will realign the existing scheme of National Apprenticeship Training Scheme for providing post-education apprenticeship, training of graduates and diploma holders in engineering. Over 3,000 crores will be provided for this purpose. An initiative is underway, Honorable Speaker, in partnership with the United Arab Emirates to benchmark skill qualifications assessment, and certification, accompanied by the deployment of certified workforce. We also have a collaborative inter-training program between India and Japan to facilitate transfer of Japanese industrial and vocational skills, techniques, and knowledge. We will take forward this initiative with many more countries also. Innovation and R&D. In my budget speech of 2019, I had announced the National Research Foundation. We have now worked out the modalities, and the NRF outlay will be of 50,000 crores over 5 years. It will ensure that the overall research ecosystem in the country is strengthened with focus on identified national priority thrust areas. There has been a manifold increase in digital payments in the recent past. To give a further boost to digital transactions, I earmarked 1,500 crores for a proposed scheme that will provide financial incentive to promote digital mode of payment. We will undertake a new initiative, National Language Translation Mission. This will enable the wealth of governance and policy-related knowledge on the internet being made available in major Indian languages. The new Space India Limited, a PSU, under the Department of Space, will execute the PSLV CS-51 launch, carrying the Amazonia satellite from Brazil, along with a few smaller Indian satellites. As part of the Gaganyaan mission activities, 4 Indian astronauts are being trained on generic spaceflight aspects in Russia. The first unmanned launch is slated for December 2021. Our oceans are a storehouse of living and non-living resources. To better understand this realm, we will launch a deep ocean mission with a budget outlay of more than 4,000 crores over 5 years. This mission will cover deep ocean survey exploration and projects for the conservation of deep sea biodiversity. I come to the 6th pillar, Honorable Speaker, minimum government, maximum governance. Honorable Speaker, sir, this is the last of the 6 pillars. This will outline plans for reforms in one of our core principles of minimum government, maximum governance. We have taken a number of steps to bring reforms in tribunals in the last few years for speedy delivery of justice. Continuing with the reforms process, I now propose to take further measures to rationalize the functioning of tribunals. We have introduced the National Commission for Allied Healthcare Professionals Bill in Parliament. National Commission for Allied Healthcare Professionals Bill in the Parliament, with a view to ensure transparent and efficient regulation of 56 allied healthcare professionals. Additionally, to bring about transparency, efficiency, and governance reforms in the nursing profession, the National Nursing and Midwifery Commission Bill will be introduced by the government for passing. To have ease of doing business for those who deal with government or CPSEs and carry out contracts, I propose to set up a conciliation mechanism and mandate its use for quick resolution of contractual disputes. This will instill confidence in private investors and contractors. Honorable Speaker, sir, the forthcoming census could be the first digital census in the history of India. For this monumental milestone marking task, I have allocated 3,768 crores in this year, 21-22. Honorable Speaker, Goa is celebrating the Diamond Jubilee year of the state's liberation from Portuguese rule. From the Government of India's side, I propose to grant 300 crores to the Government of Goa for the celebration. I propose to provide 1,000 crores for the welfare of tea workers, especially women and children in Assam and West Bengal. A special scheme will be devised for the same. Fiscal position. Fiscal position. In these last few paragraphs of part A of my speech, I draw the attention of this august House to the fact that at the beginning of the current financial year, the pandemic's impact on the economy resulted in a weak revenue inflow. This was combined with high expenditure to provide essential relief to vulnerable sections of the society, especially the poor, the women, scheduled castes and scheduled tribes. Unlike many other countries, we opted for a series of medium-sized packages during the pandemic so that we could calibrate and target our response according to the evolving situation. Once the health situation stabilized and the lockdown was being slowly lifted, we switched to ramping up government spending so as to revive domestic demand. As a result, against an original BE expenditure of 30.42 lakh crores for 2020-21, our RE estimates are 34.50 lakhs. 30.42 now within the year going up to 34.5 lakh crores. We have maintained quality of expenditure. The capital expenditure estimated in the RE is 4.39 lakh crores as against 4.12 lakh crores in the BE stage. So the beginning of the year we had marked only 4.12 lakh, whereas it is 4.39 lakh crores as we end the year. Fiscal deficit in RE 2020-2021 is pegged at 9.5% of the GDP. Fiscal deficit in RE 2020 to 2021 is pegged at 9.5% of GDP. We have funded this through government borrowings, multilateral borrowings, small saving funds, and short-term borrowings. We would need another 80,000 crores, for which we would be approaching the market in these 2 months. We would be needing another 80,000 crores, for which we would be approaching the markets in these 2 months. To ensure that the economy is given the required push, our BE estimates for expenditure in 21-22 are 34.83 lakh crores. This includes 5.54 lakh crores as capital expenditure, an increase of 34.5% over the BE figure of 2020-2021. The fiscal deficit in BE 21-22 is estimated to be 6.8% of the GDP. The gross borrowing from the market for the next year would be around 12 lakh crores. We plan to continue with our path of fiscal consolidation and intend to reach the fiscal deficit level below 4.5% of the GDP by 2025-2026, with a fairly steady decline over the period. We hope to achieve the consolidation by first increasing the buoyancy of tax revenue through improved compliance, and secondly by increased receipts from monetization of assets, including public sector enterprises and land. The Contingency Fund of India is being proposed to be augmented. The Contingency Fund of India is being proposed to be augmented from 500 crores to 30,000 crores through finance bill. In accordance with the views of the 15th Finance Commission, we are allowing a normal ceiling of net borrowing for the states at 4% of GSDP for the year 21-22. A portion of this ceiling will be earmarked to be spent on incremental capital expenditure. Additional borrowing ceiling of 0.5% of the GSDP will also be provided subject to conditions. States will be expected to reach a fiscal deficit of 3% of GSDP by 2023-24 as recommended by the 15th Finance Commission. In the July 2019-20 budget, I introduced the Statement 27 on extra budgetary resources. It disclosed the borrowings of the government agencies that went towards funding Government of India schemes and whose repayment burden was on the government. In my 2020-21 budget, I enhanced the scope and coverage of that statement by including the loans provided by government to the FCI, the Food Corporation of India. Taking a step further in this direction, I propose to discontinue the NSSF loan to FCI for food subsidy, and accordingly, budget provisions have been made in RE 2020-21 and in the BE 2021-22. The extra budgetary resource details are at Annexure 6. We know that the FRBM Act mandates fiscal deficit of 3% of GDP to be achieved by 31st March 2020-2021. The effect of this year's unforeseen and unprecedented circumstances has necessitated the submission of a deviation statement under Sections 4 of Subclause 5 and Section 7, Subclause 3b of the FRBM Act, which I am laying on the table of the House as part of the FRBM documents. Towards achieving central government fiscal deficit along the broad path that I have already indicated, I will be introducing an amendment to the FRBM Act. Honorable Speaker, on the 9th of December 2020, the 15th Finance Commission submitted its final report covering the period 2021 to 2026 to the Rashtrapati Ji. The government has laid the Commission's report along with the explanatory memorandum in the Parliament, retaining the vertical shares of the states at 41%. We recognize our commitment to fiscal federalism and propose, therefore, to adhere to this recommendation. Jammu and Kashmir in the 14th Finance Commission was entitled to get devolution being a state. Now the funds of the UTs of Jammu Kashmir and Ladakh would be provided by the centre. I have also provided on the Commission's recommendation 1,18,452 crores as revenue deficit grant to 17 states in 21-22 as against 74,340 crores to 14 states in 2020-21. Honourable Speaker, I would now move to Part B of my speech. Honourable Speaker, the world is facing a serious challenge of the pandemic and its aftershock. In these trying times, when many economies are struggling to revive, our people and our industry have exhibited remarkable resilience. As I mentioned already, post-pandemic, a new world order seems to be emerging, one in which Asia is poised to occupy a prominent position, and India will have a leading role therein. In this scenario, our tax system has to be transparent, efficient, and should promote investments and employment in our country. At the same time, it should put minimum burden on our taxpayers. I borrow the words of Thiruvalluvar, the saint. Yetralum, Eatalum, Kathalum, Katha Vaguthalum, Nalla Valladarasu. A king or a ruler is the one who creates and acquires wealth, protects and distributes it for common good. Tirukkural. Direct tax proposals. Keeping this in mind, the words of Tirukkural, our government introduced a series of reforms in the direct tax system for the benefit of our taxpayers and the economy. Few months prior to the pandemic, in order to attract investments, we slashed our corporate tax rate to make it among the lowest in the world. The dividend distribution tax too was abolished. The burden of taxation on small taxpayers was eased by increasing rebates. In 2020, the return filers saw a dramatic increase to 6.48 crores from 3.31 crores in 2014. In the direct tax administration, we had recently introduced the faceless assessment and faceless appeal. I now seek to take further steps to simplify the tax administration, ease compliance, and reduce litigation. Relief to senior citizens. I begin my direct tax proposals by offering my pranam to our senior citizens. Many of them, despite having foregone several basic necessities of their own, have strived to build our nation. Now in the 75th year of independence of our country, when we continue our endeavor with renewed vigor, we shall reduce compliance burden on our senior citizens who are 75 years of age and above. For senior citizens who only have pension and interest income, I propose exemption from filing their income tax returns. The paying bank will deduct the necessary tax on their income. Reduction in time for income tax proceedings. This is a very key announcement if you are asking. Honorable Speaker, presently an assessment can be reopened up to 6 years and in serious tax fraud cases for up to 10 years. As a result, taxpayers have to remain under uncertainty for a very long time. I therefore propose to reduce this time limit for reopening of assessments to 3 years from the present 6 years. In serious tax evasion cases too, only where there is evidence of concealment of income of 50 lakh or more in a year. In serious tax evasion cases too, only where there is evidence of concealment of income of 50 lakh or more in a year can the assessment be reopened up to 10 years. Even this reopening can be done only after the approval of the Principal Chief Commissioner, the highest level of income tax department. Setting up the Dispute Resolution Committee. Honorable Speaker, it has been the resolve of this government to reduce litigation which mars the present taxation system. The government came out with the Direct Taxation Vivad Se Vishwas scheme to give taxpayers an opportunity to settle long-pending disputes and be relieved to further strain on their time and resources. The response from taxpayers has been the best ever, as over 110,000 taxpayers have already opted to settle tax disputes of over 85,000 crores under the scheme. To further reduce litigation for small taxpayers, I propose to constitute a dispute resolution committee for them, which will be faceless to ensure efficiency, transparency and accountability. Anyone with a taxable income up to 50 lakh and disputed income up to 10 lakh shall be eligible to approach the committee. Faceless IT-AT. For ease of compliance and to reduce discretion, we are committed to make the taxation processes faceless. The government has already introduced faceless assessment and appeal this year. The next level of income tax appeal is the Income Tax Appellate Tribunal. I now propose to make this tribunal faceless. We shall establish a national faceless Income Tax Appellate Tribunal Center. All communication between the tribunal and the appellant shall be electronic. Where personal hearing is needed, it shall be done through video conferencing. Relaxations to NRI. When non-resident Indians return to India, they have issues with respect to their accrued incomes in their foreign retirement accounts. This is usually due to mismatch in taxation period. They also face difficulties in getting credit for Indian taxes in foreign jurisdictions. I propose to notify rules for removing their hardship of double taxation. Exemption from audit. Currently, if your turnover exceeds 1 crore, you have to get your accounts audited. In February 2020 budget, I had increased the limit for tax audit to 5 crores for those who carry out 95% of their transactions digitally. To further incentivize digital transactions and to reduce compliance burden, I propose to increase this limit for tax audit for such persons from 5 crores to 10 crores. Relief for dividend. In the previous budget, I had abolished the dividend distribution tax in order to incentivize investment. Dividend was made taxable in the hands of shareholders. Now, in order to provide ease of compliance, I propose to make dividend payment to rate and InvIT exempt from TDS. Further, as the amount of dividend income cannot be estimated correctly by the shareholders for paying advance tax, I propose to provide that advance tax liability on dividend income shall arise only after the declaration or payment of dividend. Also, for the foreign portfolio investors, I propose to enable deduction of tax on dividend income at lower treaty rate. Attracting foreign investment into infrastructure sector. In the last budget, for attracting foreign investment in the infrastructure sector, we had granted 100% tax exemption, subject to certain conditions, to foreign sovereign wealth funds and pension funds on their income from investment in Indian infrastructure. We have noticed that few of such funds are facing difficulties in meeting some of the conditions. In order to ensure that a large number of funds invest in India, I propose to relax some of these conditions relating to prohibition on private funding, restriction on commercial activities, and direct investment in infrastructure. In order to allow funding of infrastructure by issue of zero-coupon bonds, I propose to make notified infrastructure debt funds eligible to raise funds by issuing tax-efficient zero-coupon bonds. Affordable housing. Affordable housing and rental housing. This government sees housing for all and affordable housing as priority areas. In July 2019 budget, I provided an additional deduction of interest amounting to 1.5 lakh for loan taken to purchase an affordable house. I propose to extend the eligibility of this condition by 1 more year to 31st March 2022. The additional deduction of 1.5 lakh shall therefore be available for loans taken up to 31st March 2022 for the purchase of affordable houses. Further, to keep up the supply of affordable houses, I propose that the affordable housing projects can avail a tax holiday for one more year till 31st March 2022. These are available now for projects also. We are committed to promote supply of affordable rental housing for migrant workers. For this, I propose to allow tax exemption for notified affordable rental housing projects. Tax incentives to IFSC. As I mentioned in Part A of this speech, the government is committed to making the International Financial Services Center in GIFT City a global financial hub. In addition to the tax incentives already provided, I propose to include, among others, tax holiday for capital gains for aircraft leasing companies, tax exemption for aircraft lease rentals paid to foreign lessors, tax incentive for relocating foreign funds in the IFSC, and to allow tax exemption to the investment division of foreign banks located in the IFSC. Pre-filling of returns. Honorable Speaker, in order to ease compliance for the taxpayer, details of salary income, tax payments, TDS, etc. already come pre-filled in income tax returns. To further ease filing of returns, details of capital gains from listed securities, dividend income, and interest from banks, post office, etc. will also be now pre-filled. Relief to small trusts. We hope to reduce compliance burden on small charitable trusts running educational institutions and hospitals. So far, there is a blanket exemption to such entities whose annual receipt does not exceed 1 crore of rupees. I now propose to increase this amount to 5 crores. Labor welfare. We have noticed that some employers deduct the contribution of employees toward provident funds, superannuation funds, and other social security funds, but do not deposit these contributions within the specified time. For these employees, this means a loss of interest or income. In cases where an employer later becomes financially unviable, non-deposit results in a permanent loss for the employees. In order to ensure that employees' contributions are deposited on time, I reiterate that the late deposit of employees' contribution by the employer will not be allowed as deduction to the employer. Incentives for startups. In order to incentivize startups in the country, I propose to extend the eligibility for claiming tax holiday for startups by 1 more year, till 31st March 2022. Further, in order to incentivize funding for the startups, I propose to extend the capital gains exemption for investment in startups by 1 more year, till 31st March 2022. Sir, I now come to indirect tax proposals. GST. Before I come to my indirect tax proposals, I would like to appraise the House on GST. The GST is now 4 years old, and we have taken several measures to further simplify it. Some of the measures include nil return through SMS, quarterly return and monthly payment for small taxpayers, electronic invoice system, validated input tax statements, pre-filled editable GST return, and staggering of returns filing. The capacity of GSTN system has also been enhanced. We have also deployed deep analytics, and artificial intelligence to identify tax evaders and fake billers and launched special drives against them. The results speak for themselves. We have made record collections in the last few months. The GST Council has painstakingly thrashed out thorny issues. As chairperson to the Council, I want to assure this House that we shall take every possible measure to smoothen the GST further and to remove anomalies such as inverted duty structure. Custom duty rationalization. Our custom duty policy should have the twin objective of promoting domestic manufacturing and helping India get on to global value chain and export better. The thrust now has to be on easy access to raw materials and exports of value-added products. Towards this, last year, we started overhauling the customs duty structure, eliminating 80 outdated exemptions. I also thank everyone who responded overwhelmingly to a crowdsourcing call for suggestions on this revamp. I now propose to review more than 400 old exemptions this year. I repeat, I now propose to review more than 400 old exemptions this year. We will conduct this through extensive consultations, and from 1st October 2021, we will put in place a revised customs duty structure free of distortions. I also propose that any new customs duty exemptions, therefore, henceforth will have validity up to 31st March, following 2 years from the date of the issue. Electronic and mobile phone industry. Domestic electronic manufacturing has grown rapidly. We are now exporting items like mobiles and chargers. For greater domestic value addition, we are withdrawing a few exemptions on part of chargers and sub-parts of mobiles. Further, some parts of mobiles will move from nil rate to a moderate 2.5%. Iron and steel. MSMEs and other user industries have been severely hit by a recent sharp rise in iron and steel prices. Therefore, we are reducing customs duty uniformly to 7.5% on semis, flats, and long products of non-alloy, alloy, and stainless steels. To provide relief to metal recyclers, mostly MSMEs, I am exempting duty on steel scrap for a period up to 31st March 2022. Further, I am also revoking ADD and CVD on certain steel products. Also, to provide relief to copper recyclers, I am reducing duty on copper scrap from 5% to 2.5%. Textiles. The textile sector generates employment and contributes significantly to the economy. There is a need to rationalize duties on raw material inputs to man-made textiles. We are now bringing nylon chain on par with polyester and other man-made fibers. We are uniformly reducing the BCD rates on caprolactam, nylon chips, nylon fiber, and yarn to 5%. This will help the textile industry, MSMEs, and also overall exports. Chemicals. We have calibrated customs duty rates on chemicals to encourage domestic value addition and to remove inversions. Apart from other items, we are reducing customs duty on naphtha to 2.5% to correct inversion. Gold and silver presently attract a basic customs duty of 12.5%. Since the duty was raised from 10% in July 19, prices of precious metals have risen sharply. To bring it closer to previous levels, we are rationalizing customs duty on gold and silver. Renewable energy. In Part A, we have already acknowledged that solar energy has huge promise for India. To build up domestic capacity, we will notify a phased manufacturing plan for solar cells and solar panels. At present, to encourage domestic production, we are raising duty on solar inverters from 5% to 20% and on solar lanterns from 5% to 15%. Capital equipment and auto parts. There is immense potential in manufacturing heavy capital equipment domestically. We will comprehensively review the rate structure in due course. However, we are revising duty rates on certain items immediately. We propose to withdraw exemptions on tunnel boring machine. It will attract a customs duty of 7.5% and its parts a duty of 2.5%. We are raising customs duty on certain auto parts to 15% to bring them on par with general rate on auto parts. MSME products. We are proposing certain changes to benefit MSMEs. We are increasing duty from 10 to 15% on steel screws and plastic builder wares. On prawn feed, we increase it from 5 to 15%. We are rationalizing exemption on import of duty-free items as an incentive to exporters of garments, leather and handicraft items. Almost all of these items are made domestically by our MSMEs. We are withdrawing exemption on imports of certain kinds of leathers as they are domestically produced in good quantity and quality, mostly by MSMEs. We are also raising customs duty on finished synthetic gemstones to encourage domestic processing. Agriculture products to benefit farmers. We are raising customs duty on cotton from nil to 10%, on raw silk and silk yarn from 10 to 15%. We are also withdrawing end-use based concession on denatured ethyl alcohol. Currently, rates are being uniformly calibrated to 15% on items like maize, bran, rice bran, oil cake, and animal feed additives. There is an immediate need to improve agricultural infrastructure so that we produce more while also conserving and processing agricultural output efficiently. This will ensure enhanced remuneration for our farmers. To earmark resources for this purpose, I propose an agricultural infrastructure and development cess on a small number of items. However, while applying this cess, we have taken care not to put additional burden on consumers on most items. Rationalization of procedures and easing of compliance. For their judicious application, we propose certain changes in the provisioning related to ADD, anti-dumping duty, and CVD, countervailing duty levies. To complete customs investigation, we are prescribing definite timelines. In 2020, we rolled out the Turant Customs Initiative, which brought in faceless, paperless, and contactless customs measures. With effect from September 2020, we have implemented a new procedure for administration of rules of origin. This has helped in putting a check on misuse of FTAs. The specific details of direct and indirect tax changes proposed are listed in the annexure to my speech. Honorable Speaker, sir, with these words, I commend the budget to this august House. Thank you.
Item number 1.
The first budget of the decade, and a rather short one, was centered around health, hope and growth. For me, the punchline really has been that the finance minister has come up with a high impactful budget which could be called as a expansionary budget, and the path towards spending is high. It is a budget where the finance minister certainly has given big rollouts to every sector: power, ports, infrastructure. More importantly, there have been no changes in direct taxes. So while there is a change in terms of the basic ideology of taxing the super rich every time the company needs money, this is something which markets are always afraid of. Change in direct taxes, which has not happened, a big hurrah. It's an expansionary budget. It's a budget where government understands the priority and every sector individually has got a tick mark in terms of prioritization. Metli, I just want to take your quick reaction. This is an expansionary budget and boy oh boy, I'm mighty relieved, no change in direct taxes.
Well, yes, it certainly is an expansionary budget. So, in fact, for all the criticism of the government that had been very niggardly in giving fiscal stimulus in the past, particularly as compared to other governments, I think these numbers, one will have to go through the fine print, but if one goes by these numbers that the finance minister has presented, 9.5% is a very good, I mean, a good quote-unquote fiscal deficit number to end the current year. And there's also the promise of bringing it down to 6.5% next year. So I think overall, yes, it is definitely an expansionary budget with a roadmap for reducing the fiscal deficit. Best of all, the government's borrowing has been kept at that 12 lakh crore, which is more or less the same as what it was this year. So there's not any extra pressure on bond markets. At the same time, we've seen the increase in capital expenditure, which is what we really want. We've seen the increase in healthcare expenditure and agriculture expenditure. There are reformist moves like increasing FDI in insurance from 49 to 74, which is a substantial jump up. Social security for gig workers is an increase in outlay for R&D. There's contractual dispute resolution, direct tax, any dispute resolution it's been improved, streamlined. So I think there are a number of measures that the government has taken in order to ensure that it walks the talk. There are, of course, some measures which I'm not entirely happy with, in the sense that a development financial institution, yes, there's been a lot of talk about this before the budget, but we already have tried this in the past. The problem with infrastructure projects really is of execution risk. So unless the government resolves that and gives autonomy to the new development financial institution, I'm not sure really that this will be an answer. The recap of public sector banks is grossly insufficient. They have talked about privatization of some banks, but given the promise last year of...
Metli, I'm coming back to you. Let me just get a very quick reaction from Vibha on the big picture. And Vibha, the big picture clearly is that this is an expansionary budget. The budget is centered around health, hope, and growth.
Nikunj, it's a well-rounded budget and very, very required against us coming out of a pandemic. To your point that no increase in taxes is really providing a lot of stability, and the message that we are here to support, and also that we are here to support and several also somewhat smaller things. So for example, reopening of only within 3 years, rather very clear indication that harassment is not really the purpose. Yes, they will come after wherein, for example, employers don't remit employee dues in terms of social security, but not otherwise. Similarly, the relaxation for senior citizens. You mentioned healthcare. So a lot of focus, and of awaited 74% FDI.
Shefali, no changes in direct taxes. Can I say that is the big headline for this budget, for the Aam Aadmi, for the super rich, for every taxpayer? Nothing changes?
That's right, Nikunj, and this is quite unbelievable, because there was so much of apprehension of a COVID cess or a new kind of wealth tax. So I think this is a big relief, and I think the finance minister has done it right in terms of not tinkering with the tax rates anymore, and just trying to give more assurance to the investor community that we are serious about giving the stability, reducing the disputes. She announced the faceless income tax appellate tribunal scheme as well. So I think these are all very welcome steps, and will certainly ease out the disputes the way we are currently handling them in India. So I think, we couldn't have asked for anything more in terms of the way they have not touched any tax rates. Given some reliefs to the startups, could have been a little more. But overall, I think we'll have to wait to see the fine print. Like, for example, on the SCZs, etc., the relief for work from home, which was also expected. Maybe it's there, but it might be in the fine print. So we'll wait to read that.
Okay, while we'll continue to dissect the headline and the fine print, the headline is that there is no increase in direct taxes. It's an expansionary budget. This budget, in a sense, is going to be, there is enough and more provision which has been done for all major sectors. The government is looking at monetizing and some of the important assets. But Mr. Kumar, there are two things which we would like to seek your thoughts on. Getting a development bank back. Now this, in a sense, like Maithili said, has been a failed experience in the experiment in the past. And the bank recap number, not a very big number in a COVID year.
Yeah, bank recapitalization, I think there was a need for higher capital allocation, but we also have to realize that there are constraints as far as the budgetary resources of the government are concerned. And that is how, like, instead of the expectation of about 40 to 50,000 crore, the number has come to 20,000 crore. And the banks, some of the banks then will have to depend upon raising the capital through the market, which seems to be a bit difficult, but as the situation improves, maybe they will be able to augment their sources and get the capital from the market. About the DFI, this has been a debate, but I think India, in my view, we need a development financial institution. The only issue is about that, what would be its policy and how the execution will happen. And the need for a DFI was being felt, and particularly if there is a project which requires a significant amount of funding, and say 30,000-40,000 crore, then the existing system is unable to achieve the financial closure. And many things can be done, and in the budget, not all details will be there. But I welcome this step, and in the budget, the infrastructure on increasing the capex and focus on infrastructure. I think this is a positive, and for achieving higher growth trajectory, the government has preferred to take the route of investing more money in creating the capex and permanent infrastructure, and this can lead to higher growth.
Right. You know, before I move across to our other experts as well, I just want to quickly bring up the markets as well, because I think the markets are only relieved that there was no higher taxation on the super rich, which one almost thought that the finance minister is going to get into, but the taxes have been completely left unchanged. There has been no COVID cess. Yes, it's been an expansionary budget. The good points are that, you know, there is a capex spend to boost growth, easing of bank credit offtake, divestment policies providing clarity. Yes, the fiscal deficit is much higher than what the markets were penciling in, and this could actually lead to higher inflation as well. And then, of course, you know, there are the other questions on whether or not the central bank policy stance is going to change eventually to try and combat higher inflation, but that is when it actually kicks in. Delivering on divestment progress, of course, is paramount given the track record. This is going to be a tall order for the government, but let's see, we're hopeful, and look at the market reaction. By the way, we're back at 14,000, and believe it or not, we're almost clocking in another 25 points, and we would be up 400 points on the Nifty futures, no less. We're staring at a 2.8% move. It's a strong move across the broader markets as well. Sunil Singhania, expansionary budget, something that the markets like, and the markets are only relieved as I see on my screens. We're almost clocking 14,100 now.
So one is, you know, as we discussed in the morning, I think in the run-up to the budget, anyway, the stance was very precautionary. And, you know, once people realize that there is nothing which is sort of negative from a taxation perspective, you know, as was sort of rumored, I think it basically led to, I would say, a rally which was anyway due. Obviously, it's an expansionary budget. A lot of things have been mentioned where, you know, lakhs and lakhs of crores of rupees have been allocated. I think it's good. Obviously, the debt market has been spoofed a little bit because fiscal deficit would go up. But, you know, if US can live with a 15% fiscal deficit and other countries can print money, you know, don't see any reason why India should not follow it, at least for the next couple of years, because we're coming out of a very challenging kind of an environment. In a low interest rate regime, very sure that we will be able to attract a lot of flows. And over a period of time, even this fiscal deficit would be brought back to sanity. So I think it's great focusing on a lot of spending, and more importantly, it's planned spending rather than expenditure spending. And I think it could not have been better.
The reason why markets are mighty delighted, and that's, I'm going to get first, make a comment here and then get Nilesha. We are, markets are doing cartwheels, honestly. Now, is it because, like Sunil said, because there was no pre-budget rally, and then this is just an adjustment? I think markets are mightily delighted that there is no change in direct taxes. Remember, in 2018, LTCG came out. Then there was a tax on buyback. Then tax on buyback at the end of the receiver. So at a time when growth is the priority, spending is going to be increasing. Fiscal deficit number is something which, looking at the situation of the world, rightly so, the markets, the finance minister has overlooked. There is no large jump in direct taxes. Nilesha, we've been covering 5 or 6 budgets together, and every time post-budget, I've not seen a smile on your face. For a change, it should be different. No direct tax changes.
Yeah, absolutely, Nikunj. I mean, this is essentially, honestly, a perfect budget. This is a 10 on 10 budget. It's a budget which does no harm. It doesn't impose new taxes. It doesn't hike taxes. So in a way, and it's a budget which essentially ensures that not only just that the status quo continues, but it ensures that there are no restrictions to growth. Growth is not inhibited. There are no measures in this budget. If at all, there are several path-breaking initiatives. I mean, I think the whole initiative on divesting stake in 2 PSU banks, I think this is fantastic. This is probably for the first time that the government will be talking of divesting its stake in 2 PSU banks. Probably I haven't seen this post-1969 when banks were first nationalized. So this, in a way, is a path-breaking budget. So I think the market's cheer for this budget, I think, stands on very solid and very good ground. And I clearly believe that an important event which was there for the market to kind of start its rally again, I think that event has been crossed. If at all, I'd say a hurdle has been crossed. And this provides a fresh kind of stimulus for the markets to kind of move forward.
Bala, the fiscal deficit is just under 7. Why are bond markets not nervous?
Yeah, I think interesting, Nikunj. Clearly, the way I think the people are reading the budget is, one is growth-oriented budget. Second is allocation of resources have been now kept very aptly towards structures that can provide employment, that can create a gross capital formation could be higher. The capital expenditure has been high. And third is the budget also has laid out very clearly various ways and means of finding finance resources for funding various projects, including creating a monetized for monetization of assets of government entities, a separate SPV. Also, something is a welcome move. And third, of course, is around the liquidity that, of course, currently there in the system, which of course is the domain of Reserve Bank of India. Clearly, the liquidity is so large, and despite the fiscal deficit going up to 6.8%, and also the fact that the creation of development financial institutions also, I think, takes away the pressure from the banking system to finance all such needy borrowers to different systems. And therefore, the resource management which the government of India has done, combined with high allocation towards capital expenditure, leading to higher fiscal deficit, and also the high liquidity there in the system, ideally speaking, should not lead to an increase in bond yields. Again, if you look at from the time they announced, the bond yields have gone up only by about 10 to 12 basis points, which is not significant on a base of already about 6%. Even if the bond yields goes to by another, say, 10, 15 basis points, will it hurt the economic growth? Absolutely no. And will it get money actually for them to fund the various projects or maybe the various needs of the government to bridge the financing? Definitely, the answer is yes, given the fact that the liquidity is large and the investment opportunities for banks are going to be very, very low, given the fact that banks are still not very aggressive in terms of lending. So therefore, the demand for government security will be high. And third is the foreign direct investments, which otherwise comes into the bond markets, especially the REIT and InvIT. That makes them would have peak actually in those dividend distribution tax applicable for REIT and InvIT. Also to bring in more money in the segment which needs ongoing requirements of funds to refinance the existing projects. And also they have addressed the NHA and the Power Grid Corporation, who are one of the biggest borrowers in the market. They have also addressed their the need for tapping the bond market for rising resources. Also should ease off the pressure on government securities market, which generally there always used to be a fear.
Umang Vora, how is it that you're going to analyze the budget, and how would you rate it? You know, it is indeed growth oriented, it is expansionary in nature. We could get into nitty-gritties of the fiscal deficit picture, but prima facie, what's been your reading?
I think, first of all, if there's one word to describe this budget, this is a get well soon budget, get well soon really fast type of a budget, right? So I actually think that I would give it almost an 8 or a 9 or a 10. 8 or 9 on 10, because I think the options were limited, but I think within those options, they've done a really good job. I love the healthcare expansion story. I think this is exactly what we need in India. You don't need a pandemic to discover how to respond. I think the setting up of the biolabs, the fact that there is 60,000 of healthcare infrastructure in the rural and urban centers, I think this drives penetration really deeper. And it's actually in line with the trend we've seen, where we're beginning to see more consumption in tier 2 to tier 6 cities. And actually the metros and tier 1s are actually slowing down compared to what we're seeing in tier 2 to 6. So from my perspective, I think this is a great budget, solid allocations to healthcare. We're very happy.
Shefali, I don't know if you've had the chance to go through the taxation fine print. Is there something that we're missing, or is there actually nothing on personal income taxes?
Well, I think we are yet to see the fine print, but there will always be some things, which is why, I'm a little more conservative, as Umang said. I think I would rather say that it should be 8 out of 10, because no matter what you do, I think while they've tried to do the best in terms of promoting growth and, not tinkering with the tax rates, there will be some aspects which we will find in the fine print. I think largely the announcements that went missing in terms of, what are they planning to do for the special economic zones or for the angel tax? How are they planning to put more money in the hands of the investors to invest back? I think, that those were missing in the speech. Maybe once we see the fine print, we will know more about it. But at least the intentions all seem to be good this time.
The story for me is banks. ICICI Bank is up 10%, and frankly, I don't remember when that happened last time. State Bank of India is up 7%. I'm going to come to Rajneesh Kumar for the reaction on banks. But before that, I want to go to Umang for a number from the budget, which is on the COVID allocation. Umang, in your understanding, if the government is looking at vaccinating 30 crore Indians by August or by September, the number allocated in the budget, is that enough, or that has to be supplemented by states now?
I think it's enough, because I did a rough back of the envelope math. I think if you take 200 rupees per dose, which is what the government's basically buying prices, and give or take a few here or there, 200 to 250 rupees a dose, we're talking about almost a billion plus doses being covered here. So that's enough for a large section of the population. So I think that's enough. And they've also left some leeway there, saying that if we require more, we'll give more. So I think that's a sizable portion of the population of the country. It's pretty sizable and very commendable for them to lay out their 35,000 crores.
Really appreciate your time. I know you've squeezed both our interaction today in middle of 3 meetings. So really appreciate your time, and thank you for joining us. Sunil Singhania, what's next? Budget is over.
So, I think, Nikunj, in the morning you started with the fact about, earnings and cash flow. I think we'll be back to those two, I would say, factors. And the good thing is that there is continuity as far as the taxation policies are concerned. In fact, there were some very small announcements, but which showed the thought process about the government, a little bit of tinkering with customs duty and all, to ensure that production in India gets a boost. So, it was predominantly ensuring that there is a level field. And this whole focus on manufacturing in India really came out. Along with the fact that now with this huge outlay of capital, which the finance minister has laid out, and it's not 1 year, all the announcements were for 3 to 5 years. So I think we have a roadmap of like 3 to 5 years, And that would lead to a big capital formation and a virtual cycle of capex coming back. I think what this country was lacking from 2011-12 to 2020-21 was a capex cycle building up. And now with cement companies and steel companies and metal companies and even on the renewable power side, all of them bracing up for capex, along with this huge push from the government towards infrastructure, metro, and you name it, I think there is a possibility that we go back to the trajectory of 7.5% sustainable GDP growth. And I think if that happens, then this earnings trajectory for corporates, which anyway this quarter onwards, we are seeing a huge upgrade cycle picking up, might surprise on the upside. And therefore, these naysayers who say that, Nifty is trading at an all-time high P and all, might change their views when they realize that on an FY23 basis, suddenly Nifty starts to look at 18.5 times. So as I said, back to earnings.
Okay. Vibha, very basic question, which is, do you think somewhere, looking at the spending and the kind of government push which will come, we should also think about the dreaded word inflation? Nobody in the panel has spoken about it, Vibha.
I think so. And also, let's see how the debt markets, I think you mentioned this earlier also, Nikunj, as to, yes, equity markets are right now on steroids, and perhaps there's a big sigh of relief that is being given, and that's what we're seeing panning out. But let's see how the debt markets also react, and longer term infrastructure bill, the funding requirements for some of the plans, government's borrowing plans, fiscal deficit, and so on. So I think we should temper some of the euphoria, while all the indications much growth centric and get back to normal kind of a message, and is very supportive. We should refrain from the jubilation equity markets seem to be indicating right now.
Mr. Kumar, a quick reaction on the bad bank. We've tried, government has been in a yes and a no mode in order to roll out the entire, emphasis towards bad bank. Looks like bad bank is now a reality. How easy will it be to implement a concept like bad bank? Because, it involves a lot of pricing models and a lot of other elements.
Yeah. Hello, Nikunj? Can you hear me?
Mr. Kumar?
Yeah.
Yes, please.
So about the bad bank, I think as IBA, we were very clear that this is the right time that we need to create a national asset reconstruction company, and I am happy that it has been announced in the budget. And the decision making, in my view, will become faster about the price discovery, how it will be done. These are all matter of details, and even IBA paper, it had all the modalities which it had recommendations around all processes to ensure that everything is done in a very transparent manner. The capability of existing ARC is not sufficient to handle this kind of NPAs which are sitting in the banking system. And the advantage this time is that the banks are made adequate provisions. So that will help. And the capital requirement for the bank as a result will come down. Rest is modality, and this is the first part. And the second part is all about the speeding up of the legal process, including the NCLT. So if the government is able to augment the infrastructure around NCLT, then really we can see some faster resolutions, and the management bandwidth at the bank level, it will be freed up for doing the normal regular banking business, and the focus from stressed asset resolution can move to the new entity which is proposed to be set up.
You know, I just quickly want to mark what the markets are up to because we're in a frenzy of sorts. 395 points higher for the Nifty as I see on my screen. And banks are really leading the way. A double-digit move on an IndusInd Bank, on an ICICI Bank, all holding up just so smartly right now. Chola Finance, look at SBI, 6.5% higher. This should make Mr. Rajneesh Kumar happy regardless. Cummins holding up right now. You've got the Bank Nifty, which is really roaring. 5.5% move on the Nifty Bank futures right now. Yes, there are a handful of movers, but I can safely ignore them right now. Bajaj Financial Twins holding out very well. HDFC is moving up 5.5%. You've got an M&M holding out very smartly. Also remember, it's the first of the month, so you've got monthly sales data from M&M, which continues to look very smart. Ultratech Cement, L&T, Shree Cement, Titan, Hindalco, Bajaj Auto, HDFC Bank up 4%, Tata Motors up 3.5%, ITC up 3%. They're all holding out very well. We've also got Ramdeo Agarwal joining in. And before I take it across to Ramdeo, I just want to talk about some of the fine print details that we're getting right now. There is a farm cess of 2.5 rupees per litre on petrol and 4 rupees per litre on diesel. Ramdeo, what the markets are completely ignoring right now are the inflationary repercussions of some of these cesses which have been slapped and which are only coming out in the fine print. What they're rejoicing right now is that taxes have been left untouched. It's a very growth-oriented budget. What should the markets be focusing in on once this frenzy settles down?
So Aisha, this is relief rally from whatever apprehension people had in their mind about corporate tax could go up or some kind of a COVID cess could come, HNIs could be asked to pay some more taxes. So there was a very strong feeling from very fact that a market is rallying very strongly. It shows that there was a lot of apprehension about the budgetary proposal. So that uncertainty is behind. Corporate tax of 22, 23% or 25% is confirmed. And most of the provisions will stay where they are. Their government expenditure last year in a COVID hit period, they did 34.5 lakh crores. And currently, we are not seeing the budget at glance aggregate numbers. But I think they said it is 34.5 lakh crores again. So government's expenditure, though the composition of expenditure is going to shift more towards capex by about 1.5 lakh crores or something like that. But within that 1.5 lakh crore, it looked that they have proposed a lot of schemes. And there are some more investment-oriented proposals with the DFI and other things. But I think the real thing is the insurance going from 49 to 74%. And the basic attitude of the government, accepting that the minimum government and maximum governance, on that aspect, they have proposed a lot of things. But will they be able to actually execute? The past track record of divestments have been pretty dismal. So again, 1.75 lakh crores of credit they have taken in the budget. So can they execute? As the execution starts, I think the real growth momentum in the economy will pick up even more.
That's the other thing, you know, Nilesh, because part of the prognosis of why we were seeing dollops of FII money come in, I mean, beside the fact that the dollar was moving the way it is and emerging markets were benefiting from that, was also the low interest rate regime. Now, given what the budget has done in terms of fiscal deficit and the, you know, the farm cess on petrol and diesel that I just read about, these, of course, have huge inflationary repercussions. At some point in time, the central bank will have to get up and take notice of, you know, inflation actually picking up and the interest rate trajectory will turn. How soon before the markets actually realize that and, you know, some of this knee-jerk reaction that we see begins to settle down? Or you think the markets don't need to worry about that as of now because you've got the FII hand on you and you've got earnings growth which is picking up?
Well, so clearly, you know, inflation, essentially, there were already inflationary tendencies which were even visible before the rollout of the budget, given the kind of spike that we've seen in commodity prices globally. But of course, still now, central bankers world over still don't seem to be too concerned about it and clearly continue to unleash liquidity. And of course, globally, still inflation is well under control. That's also getting manifested in India as well, as our inflation has not yet started to kind of raise its head as yet, and maybe there is still a time window of maybe a few months. And in that context, I think clearly there is this is less of a reason for worry. Clearly, as far as FPIs goes, they're looking at India as essentially a growth destination. For them, what is more important is the fact that IMF is projecting India to kind of grow at 11% over the next 12 months and emerge as the world's fastest growing economy. So clearly, I think that is very important, and that this budget, in a way, continues to basically, in a way, support that investment thesis that we will remain a growth-oriented economy. As far as this budget goes, it continues to kind of unleash measures which will ensure that the growth extends well beyond the next 12 months. And as long as India continues to basically report high single-digit growth at the GDP level, I believe that the interest in India will continue as far as FPIs are concerned. Yes, of course, if there are any talks of rate hikes or measures to curb inflation globally, that of course will create its own set of volatility, which probably will be there for the very short term. But I still believe that the medium to long-term trend is intact, primarily stemming from the fact that India remains a very high growth destination. And that, I think, is the most appealing fact for FPIs world over.
Right, Nilesh. Thank you very much. Bala, equity markets are on steroid. Bond yields are at a 4-month high. Now, equity market in the short term can be emotional. It could be sentimental. It could be positioning, because the run-up was very, markets sold off in the run-up to the budget. Where do you think markets will normalize? Because it's not that earnings are going to completely catapult to a different level. Market valuations are already slightly higher in certain pockets. Post the budget, Bala, now that the event risk behind us, where do you see the near-term trajectory of the market moving, Bala?
I think the way I think the budget has articulated the importance of getting back on growth, as I mentioned earlier, allocating higher amount of resources towards capital investment, means they are quite serious about bringing back the economic growth, which essentially means high cross capital formation will lead to a better recovery for most of the sectors. Therefore, the earnings visibility gets further strengthened. Therefore, the equity market point of view will remain the buoyant, though the market has gone up by 3.5% today. Overall, buy-ins towards the equity market that should stay at least for next 3-4 months. And given the fact that the budget provisions are going to actually drive that sentiment. Second, as far as the interest rate goes, I think as you mentioned about today, the yields have gone up. There's no doubt the yields have gone up by about 7-8 basis points, by almost about 1 rupee fall that we have seen in 10-year bond, and roughly about the same amount in the 30-year bond. And given the fact that the overall interest for, if the yield rises, then actually is going to help the buyers of these bonds at higher yield, and therefore there's going to be an incremental demand is going to come to fulfill the need for borrowing this from the market. Therefore, there's not going to be much pressure in terms of yields going up further. And second is overall the goalpost, even as they have done in the case of FRBM Act, the goalpost for most of the central banks, not just only in India, even globally, has gone from 2% say average inflation, which is the target. Now they are moving to actually towards average inflation over a period of next 2 years. Therefore, most of the central bankers globally have said that till 2025, they are looking at a scenario of rising interest rate on the fear of inflation going up. I would assume this will also be equally applicable for India. At least for a considerable period of time, we don't see the interest rates rising. Therefore, it gives actually a much elevated confidence on equity market. Therefore, it should remain buoyant.
Bala has actually given a 9 on 10 out of budget. I will not ask Ramdev Agrawal for a budget figure, but Ramdev, the fact that the market now is tilting towards infra, corporate banks, IT pharma taking a back seat, are we at that turn? Are we at that turn looking at the nature of the economy that markets, they need to start looking more inward? Do you think now pharma IT could underperform and the outperformance moves completely in favor of cyclicals and industrials? Ramdev?
Cyclicals have been obscenely priced, so they have to take a rest, and market is already giving indication. And all the cyclicals or the new growth sectors, whether it is manufacturing, whether it is automotive, corporate banks. Now, what market is seeing is that all the banking side, particularly corporate banks, they get impacted by the credit cost. Now, the current budget probably gives a hint that there will be a very strong recovery in the economy, and the stress on the credit cost side will come down. And hence, the corporate profitability, corporate bank profitability will come back. So all kinds of positivity is building up, and I think the set of companies which are going to do well natively are going to be different than what it was. So almost, I mean, the portfolio has to have at least 50% the cyclicals and the new winners which are going to come up.
Rajesh Sharma of Capri Global joins us now. Mr. Sharma, looking at the way markets are doing cartwheels, I'm using the word cartwheels on purpose. In India, I could use the word balle balle, but that is a sentiment what markets are. What is exciting you about this budget?
So I think this budget is providing a very long-term policy on a direct taxes. Every year we used to speculate, and investor, including corporates, used to see what changes it could be. So I think as a country we need at least 3 to 5 year clarity on the direct taxes. I think not changing the direct taxes is giving a very clear view. The government wanted a long-term view and stability on the direct taxes. So that is a very, very big upside. Yes, it is a message to everyone. And second, the setting up of DFI, which is a requirement for our capex, and the new industrial expansion can get the loans, because past few years banks were facing problem to land long-term loans. They were having a asset liability mismatches. So I think DFI will be able to address that. On the asset reconstruction side, to address the NPA issue, the bad bank, and kind of a setup they are talking about asset reconstruction company. So, and there's a focus on the healthcare. So I see within the constraint, this budget has tried to do everything possible, and I will rate this budget 10 out of 10. I think the government and the finance minister has done a very good job in this time.
Maithili, why are you giving a 6 on 10 out of 6 on 10 for this budget?
Yeah, I'll tell you why, Nikunj. In terms of intent, I would give it an 8 on 10. But given the track record of the government in delivering on its promises in the budget, whether it is in terms of privatization of IDBI, which they promised last year, IPO of LIC, the disinvestment target that they had of 2.1 lakh crores, against which they've achieved less than 20,000 crores. So there are a number of things that one needs to take with a very big pinch of salt. Also, the COVID vaccine, the kind of rollout that they have, the 35,000 crores, is grossly insufficient given the population that we have if we really intend to vaccinate everybody. So there are a number of ifs and buts. We've seen again the question of a DFI. Now, this is an experiment. We've tried and failed miserably in the past. We already have existing DFIs. We already have an IFCI. We already have an IIFCL. So why not recapitalize those DFIs rather than set up a new DFI? So in terms of intent, I would give it an 8 on 10, but in terms of actual deliverables and what is possible, and this is also being generous, I would give it only a 6 on 10, Nikunj. So at the moment, yes, what I appreciate really is the expansionary push that is given was necessary, the increase in capex necessary, increase in healthcare necessary, increase in FDI and insurance, all that is necessary. But on a number of other fronts, I'm not sure whether they'll be able to deliver on the promises for a variety of reasons that we've seen in the past. In fact, Yashwant Sinha spoke about reducing government holding in public sector banks to 33% way back in the 90s. Where are we now? So I really have my doubts on that. So I said, I'll repeat, on intent, 8 on 10, on actual deliverables, even being generous, only a 6 on 10.
Right. You know, on that intent and deliverable point, Ramdev, if I could come to you, because while the divestment policy has been cleared, the finance minister spoke about LIC disinvestment as well. You think delivering on disinvestment is something which becomes paramount right now? It's been a tall order for the government. Unfortunate as it may be, the pandemic only pushed the disinvestment process a little behind. But do you think the government will be able to successfully kickstart the disinvestment process this time around for sure?
At least the intent looks to be pretty strong, and environment, I mean, you have to also give credit for not doing it, in the sense that last year COVID impacted capital markets. So only in the second half it picked up. So I think now from here, they'll get a full, very good markets to with a full of liquidity, global appetite, outlook is very good. your forex balance is very good, your food buffers are very good. So I think all micro aggregates are very good, and it is a matter of execution. You cannot. But my sense is that tax estimates have kept the cushion. I mean, actually, they're not taken against 13.5 lakh crores. They have talked about only 15.5 lakh crores additional tax. I mean, total tax mobilization revenue is very small. My sense is it will be so. Even if there is a shortfall in the capital received by way of divestment, which one should assume some amount of deficit, I think they have enough cushion on the tax side. So I think the budgetary numbers will not go anywhere. The issue is the execution of divestment. That must happen absolutely religiously, and nobody can give any guarantee whether it will happen or not. The past track record has not been good.
Couple of sectoral specific announcements as well, and if we can just bring up some of those stocks, while of course the index along with the Nifty Bank is doing what it's doing. Oh, by the way, just 7 points and we'll make it to 14,200 now on the Nifty futures. And I'm just looking the F&O picture here. There are only 10 names which are sitting to the declines within the breath. You've got a good 132 stocks sitting to the green right now, and barring fertilizer, which also is getting dragged only because of UPL, it's a constituent of that particular index. And technology to some degree, you've got some names like a TechM which have been in the red from the word go, and perhaps Wipro, which has had a bit of a choppy ride and settled now lower. Rest of the market is rip-roaring. All sectors leading, led by, of course, banks. You've got telecom, textile, infrastructure, financials, capital goods, cement, automobile. All of them are charging up ahead as we speak right now. Remember, tax holiday for more than 1 year now for affordable housing, which is why I guess you're seeing this entire, excitement play out in cement, as well as the real estate ancillary sectors as well. Relaxation on private funding in infrastructure as well has been announced in this particular budget. The FDI on insurance, of course, has been hiked. We were chatting with Vibha as well earlier about this. Nationalized AMC and ARC models, this also along expected lines has been announced. Healthcare spending, of course, has been upped to the tune of 2.24 lakh crore rupees. And railways can now monetize dedicated freight corridors. So some of these specific sensitive stocks are the ones which are holding up very smartly. Rajesh, before we let you go, anything that you'd like to highlight from the budget this time around? Something that you would monitor even post-budget?
So if we talk about MSMEs and affordable housing, I think with the increase in industrialization, a lot of other shops, the MSME are going to be a direct beneficiary. There's a higher allocation of the affordable housing and the NHB subsidy side. So I think overall, if we talk about this budgets, there's no negative, at least I could see, though I have not seen everything in fine detail yet. And I think every time we were afraid that something new cess will come, or maybe because of the COVID, some tax may come, which has not happened. So I think it is a plus for thing. And I think there's for everybody, there is something or other. So I think it is a positive for us.
Really appreciate your time. Jim O'Neill joins us now. Of course, Jim needs no introduction whatsoever. Our viewers always look forward to his thoughts on the budget day when he interacts exclusively with ET. Now, Jim, good morning to you. Thank you for joining us. I'm sure by now you must have looked at the headline and the fine print of the Union Budget 2021-22. What is your sense?
I haven't looked at any fine print, I'm afraid to say. It's quite early in the morning here in the UK, but I've looked at the headlines. I mean, the most important thing I think I would say is what the consequences of the budget will be less than the world's success and India's success on obviously containing this pandemic and recovering from it. And what is appears to be quite fortuitous for India is that the budget arrives at a time where it seems as though the infection rate is slowing sharply in India and in some other important countries. And of course, crucially, we're starting to see vaccines rolled out in many parts of the world, including India. So the background environment is helpful. My other response is that it looks to me, by and large, as though there is no one particularly eye-catching thing in the budget, and by and large, it's one designed to account for what the government has had to do in the past year and needs to keep doing as a consequence. But I'm sure there are some specific things for some specific sectors that are better than not, but there doesn't seem to be anything dramatic from a macro perspective that catches my eye.
Okay, Jim, we'll give you some time to go through the finer details. But Sunil, if I could come to you, I was just going through some of the sector-specific announcements which have been made. And the farm cess on petrol, diesel aside, what is it that you're making of the thrust that the government is A, giving on healthcare, and B, on affordable housing? We've often talked about the kind of recovery that is played out in the market with, some of the real estate names, the real estate ancillaries, the home improvement names already. Do investment in some of these stocks only become dearer now with the announcements in the budget?
So one is this increase in agri cess on petrol and diesel is net zero impact to final consumers because some other players have reduced it. So that is one thing. Second is, very clearly, I think one is the government has been very vocal last few years about Make in India and, housing for all and so on and so forth. However, there has never been a very forceful attempt to lay down a policy from a 3 to 5 years perspective, which has been done this time. So, while the past might be taken with a pinch of salt, I think this time it is more credible because we are laying down a 3 to 5 year roadmap. The other thing is that, all said and done, the lower interest rates, particularly on the mortgage side, has automatically made housing almost 25-30% cheaper. And that is a bigger driving force for people to buy a house rather than any tax incentive can do. So, our view would be that as long as this lower interest rate regime continues, and at least I am on the camp which believes that this is a trend which is going to last at least for 3 to 5 years, housing for one will keep on getting a good demand on the residential side, and that would mean that ancillary sectors, whether it is cement or building material or some other sectors, would continue to gain a lot of traction. One thing is we are more constructive on the, I would say, the Bharat part of it. So maybe tier 2 and tier 3 cities, which is more on the affordable side than the ultra luxury side, because the impact on some of the on the ancillary sectors is more on that segment.
14,182 now for the Nifty. It's a 475-point move. Yes, you heard me right. 475-point uptick that you're seeing on the Nifty futures. It's a solid breath. There are only 11 names within the F&O universe which are sitting to the red right now. IndusInd Bank leading the charge with an 11.6% uptick. Next up, ICICI Bank futures up almost 11%. Chola Finance up 10.5%. SBI now sitting pretty with an 8.6% gain on the futures, and Bajaj Finserv as well, which is leading by a solid 8.5% uptick on the futures as we speak. Bala, would the DIIs finally join in on the party, or are they going to continue to be net sellers, as has been the case for the better part this year?
I would assume, Aisha, this year we'll see the trend changing. One, the confidence which has been coming back to the market in general for the equity market, probably that should now result in money coming back to the domestic mutual funds. And we are already seeing that happening with the last 1.5 months, where there has been a reduction in the general redemption rates, and now the SIP registration rates have been going up. Probably I would assume 2021 is going to be the big comeback of mutual fund flows in the equity space. And having now seen such a sharp rise in the market, have gone back, have actually brought back the return, but the other way they would have lost during the pandemic period. So if you look at in the month of January, end of January, or maybe as you move on, look at the past returns, everything will look good. And that's what I think boosts the confidence of investors. And the lastly, of course, the budget, as everybody has voted 10 out of 10, 9 out of 10. And as others have mentioned, it's a high credible budget, I would probably say, giving a roadmap for the next 2-3 years. And also making a lot of these irritation kind of stuff, especially with income tax and tax filing of return, etc. All such things maybe will go a long way in bringing back the confidence of investors into the market.
Okay. Well, in minutes from now, Mr. Ashok Tyagi of DLF will be joining us, but I'm going to go back to Jim O'Neill. Jim, historically, global rating agencies always look at the deficit number. But the bond markets in India are not nervous. I mean, there is a bit of a spike because fiscal deficit number is nearing 7%. But do you think globally, while looking at India, where historically we've always looked at our deficit numbers as a concern and a macro risk, do you think investors will continue to overlook it?
By and large, in the circumstances we face right now, yes. I think very importantly linked to this question is the IMF in its appearance at the World Economic Forum last week, which was, I assume, using to highlight in particular its latest stance on this, from what I can see, made a very, very clear point of saying that because of circumstances that have materialized around the world, there needs to be a change as to how people think about fiscal spending. Almost essentially saying to world finance ministers, it is okay for you to run, in our judgment, large deficits because of what's happening. And in that regard, I think the markets will take the cue from that. And to some degree, although obviously the nuances will be different, but by and large, I think the rating agencies will follow the same general stance. So I think the markets have nothing to overly worry about there.
Ashok Tyagi joins us now. Mr. Tyagi, pleasure to have you on ET Now. Thank you for joining us. Mr. Tyagi, so far, the lowest rating we've got on the budget is 6 from Metli, and the highest rating we've got is 10. 9 being the consensus number. What is your number for this year's budget? Mr. Tyagi, can you hear me?
Yes, I can. Thank you.
Okay. I'm saying that the lowest rating we've got from a panelist for this year's budget is 6. Highest is 10. The consensus is 9. Which way would you lean?
I'd say 8 to 9. I mean, somewhere between 8 to 9, I think is the right rating for sure. I mean, if you had to quantify it.
Why would you give it 8? Why would you give it 8? Why not 6 and why not 10? Let's debate that.
I mean, clearly, if at all you have to choose between a 6 and a 10, it's clearly closer to a 10 than to a 6 for sure. You know, and I heard the panelist who had given a 6, and her concerns are also more on the possibility shortfalls in implementation versus the budget itself. You know, the country needed a spending-oriented budget. This is a massive spending-oriented budget. You know, the outlays on infra, the outlays on divestment, the outlay on health. I mean, yes, would I have liked some more specific steps around stuff like real estate? For sure. But I think in the overall context, I think this is exactly what the doctor prescribed. You know, this is an extremely spending-oriented budget, and the fiscal deficit numbers both for this year and next year reflect that. So I think clearly, I mean, this is a very strong budget, from what is required today.
Okay. Let's understand what has come for the HFC space and the implications of that. DLF is not in the low-cost housing space, but the incremental impact of if HFCs are doing well, real estate in general will do well. What has specifically come for your sector, which is in a sense exciting you to go towards 10?
Okay, so I think the 2 or 3 things. Directly speaking, clearly the extension of tax holiday on affordable housing is a good thing, and while obviously not in NCR, but I think some of our projects potentially launches in the other geographies could qualify for that, especially in areas like Tri-City, Chandigarh, etc. B, clearly the continuation of the lower tax regime, which is not necessarily budget driven, but the overall ecosystem, I think that has been a huge kicker to this entire demand in the real estate space that one's seen in the last few months.
Then there were two very focused, positives for the REIT markets. One was that FPIs would be allowed to invest into REIT debt bonds. And B was that on the REIT dividend distribution, there will be no TDS, which again, sort of strengthens the entire REIT ecosystem. I think those were specific steps for this, for our sector. But Nikunj, as you would also appreciate, a huge infra spend does lead to a real estate uptake also, maybe with some degree of lag. So I think it does sort of create an overall optimistic ecosystem in the entire place.
Okay, Jim, we had invited you to discuss budget, but when I look at my screen, it is silver which is making everybody surprised. Now, Jim, what is happening in the world of finance? Hedge funds are getting booted out, and retail investors and traders are winning the race. Last week it was gaming names like GameStop, and this week it is silver. What is happening to the world, my friend? Silver prices have gone through the roof, Jim.
Well, it's like some kind of revolution. It's peculiar, but I have to say, given how my own mind has been in the period building up to the pandemic and the issues that the pandemic has exaggerated, that there's part of it that I welcome. I think it's a bit of a wake-up call for the narrow world of finance. I think I've talked to you before about we need to move into a world of what I generally call profit with purpose, where everybody involved in global business, whether it be investors or corporations leaders, think about the societal goals that we need to help achieve, and not just purely focus on narrow profits. And I see the uprising of forces that have driven the rise of GameStop and the concept. At its core is normal human beings saying, well, listen, we can use modern technology to think about things to help ourselves and highlight things that can be done differently than the way you masters of the universe have been doing them. And whilst there are very specific concerns that I have about aspects of it, I hope it will force policymakers to think a lot more broadly than how they often seem to have done, by and large, for the past 12, 13 years since the global financial crisis. So to some degree, I find myself perhaps surprisingly welcoming this sort of questioning of the status quo in which the world of finance has existed for so long.
500 points higher. You heard me right. This is no joke. 14,000 to 46 now on the Nifty. And to think of it, we were cribbing about the fact that from that top of 14,700 on the 21st of January, the markets have slid for the last 6 consecutive sessions, and the FIIs have turned net sellers in the last 6 days. 4% higher on the Nifty. I repeat, 4% higher on the Nifty. Mr. Tyagi, the affordable housing segment aside, you should be very happy with this stock market recovery, because all the stock market income typically finds its way into lavish and luxury homes, thereby benefiting companies such as yours.
No, I mean clearly from a not the stock markets per se, but obviously a more vibrant and buoyant economy, a more vibrant and buoyant economic sentiment, all of it, you are right, does have some degree of correlation with the demand for not only affordable, but the premium and luxury housing as well. And I think, overall, if the people who would potentially invest in houses are feeling good and are making money, it's obviously all a positive.
The feel-good factor typically does magic. But Jim, if I could come to you, what we're seeing right now, of course, is a knee-jerk reaction to the budget, and the markets are liking that it was a no-harm budget, it was growth-oriented, expansionary in nature. But would this also not make India very expensive in the pool of emerging markets, and thereby would the FIIs then refrain from putting in more money into India?
I don't see it that way in the near term. I mean, ultimately, depending on how much the market rallies, that would be the case. But as I think I've discussed with you guys recently, we have an extraordinary generous environment for emerging markets right now. In many ways, if you tried to write down on a piece of paper what would be the ideal circumstances for emerging market equities, and we kind of have them. We have, on a global basis, an extremely accommodative fiscal policy, and that's been enhanced as a result of Biden's election to president in the States. We have an extremely accommodative monetary policy, and with both of those, we generally have a quite soft dollar. And so for any country that's regarded in market size as an emerging market that has attractive yields relative to the US or in absolute terms, on top of it then introduces its own expansionary fiscal policy, which India's done today, you end up with the consequences we have. And I think we're going to see more of this in more so-called emerging markets in weeks ahead. At some point, if we start to see a big rise in global bond yields, then that will be a time that you might call payback time. But because of the scale of accommodation of monetary policy, I don't see that in the near term.
All right, Jim, really appreciate your time. Thank you for joining us. It gives me great pleasure to bring on board Dr. Pawan Goenka of Mahindra & Mahindra Group to talk about budget. I mean, looking at the market reaction, markets are doing cartwheels and Mahindra & Mahindra stock is up 8%. Perhaps everyone is excited about the farm outlay and the fact that this is going to be an expansionary budget with real focus on growth. What would be the right word, Mr. Goenka, to describe this year's budget? Hope or growth?
Say it's a budget with the head and the heart in the right place. And this is kind of what the industry was hoping for, which will be a growth-oriented budget. And that's what the finance minister has delivered with emphasis on healthcare sector and infrastructure. And they're the two biggest enablers that we were looking forward to.
Okay. How excited and delighted you are that there are no changes in the direct tax? I mean, this was a time when clearly the finance minister, if they would have, made a demand for higher COVID cess or some surcharge, that could have been easily absorbed and it would have been easily understood in a pandemic year. But no, she did not decide to change that.
I think it was, in my opinion, prudent thing to do, not to put any fresh tax burden on taxpayers, because right now many people are in fact affected in terms of lower income for a variety of reasons. Some people have lost their jobs also, unfortunately, and therefore at this time to increase taxes on any segment of the population would probably have been a big negative and would have really hurt the sentiment. So I would say it's actually a bold move on the part of the finance minister not to increase any taxes, at least not to increase any direct taxes. And indirect taxes, there's some little tinkering here and there, but there is no major increase in indirect taxes either. So I would consider this a very good and a very bold move by the finance minister.
One concern has been the excise duty on fuel, which is petrol and diesel, and in this budget also a additional cess has come. That is something which is slightly annoying, that government is taxing what is easy for them to tax.
Well, that is of course always the case, that every government does what's easy to do. But having said that, we need to look at the fine print, because the FM did make a statement that the way the cess is going to be increased, it's not going to have an impact on the consumers. So I do not know if there's an offsetting of the cess that is being done somehow. We are still trying to read the fine print. I would be surprised if the cess of $4 or 2.5 rupees will completely get passed on to the consumer, because that will be a very big burden and would have, in fact, we were hoping that the excise duty will go down on petroleum products because of very high prices right now. So we'll have to watch the fine print there. But that's one concern, because when I look at the tickers that are coming on TV about the various agriculture cess amount, they appear to be very large. And we'll have to see what that leads to.
Mr. Goenka, there also is a rejig in import duties. Now a free market economist would say that increasing in import duties and custom duties is challenging. You are in a global competitive environment and you can only protect your industry to a certain level. As an ideology, was that a good idea in this budget? Because duty rejigs have happened.
Well, I would, as first of all, I agree, and I have said this many times, that I am not very excited about protecting the local industry by increasing a tariff on incoming, because that does not make the industry competitive. And if we really want to become export worthy, we have to become competitive, and that won't happen if we increase the import duty. So as a general principle, I agree with that. However, if you look at what has been done, I think it's very focused and only on a few items, and there must be a good reason why these items have been touched. In fact, for steel, duty has been reduced from 15% to 7.5%, it seems. So it's a bit of balancing that has been done, and I don't think that one should see it as a large-scale increase in import duty. One should see it as a very specific intervention for a variety of reasons, and obviously we won't know all the reasons why these particular goods were picked for duty increase. Like auto parts, in case of 15% to 15%, that appears to be a fairly severe increase. Again, we'll have to see the fine print as to, because currently the duty is 7.5%, 10% on most parts. And if it is going to 15% for all the parts, that would have a significant impact on the pricing of automotive products. So we'll have to again see the fine print as to where the 15% applies. But I don't think that it's a large scale increase in import duty.
Do you think the disinvestment target and other assumptions of tax growth, are they conservative, realistic, or aggressive?
I think the math seems to be working reasonably well. In the first cut, our experts have done quick math, and that seems to be working reasonably well. To talk about 6.8% fiscal deficit, I think is, I would say, a conservative number, because depending on what growth we get, and this growth-oriented budget probably will give us a little bit more growth than what we may have planned for. So 6.8%, I would say, is slightly conservative. Certainly not. Sorry, slightly. It's realistic to slightly conservative. I don't expect it to be higher than 6.8. And when it comes to disinvestment target of 1.75 lakh crore. Given the kind of strategic direction that the FM has talked about, of completing all the disinvestments that have been started in the next, this financial year, I think she said, plus talking about two banks, PSU banks and General Insurance Company. I think 1.75 lakh crore appears to be low. Maybe she's counting for the fact that in spite of the best intent, they may not be able to achieve all the disinvestment during this year, and therefore taking conservative number of 1.75 lakh crore. So I would say that overall, if I look at the math, and unless we have some kind of external calamity that affects us, we should be able to achieve this budget or maybe even do slightly better.
Closing comments, Mr. Goenka, and this is not about the budget assumption. I'm just trying to bring a very simple fact out that a pro-growth budget in an economy like India always will bring inflation back. Bond yields we know have already gone up. They're unlikely to come down now with this kind of a fiscal deficit number. So what we are taking for granted, this budget may actually hit us there, which is interest rates.
Well, I think, again, one has to prioritize. I mean, there are multiple sort of requirements that one would have in any budget or any economy. One of growth, inflation, interest rate, employment, investment, all of these. And one has to prioritize in a given point of time. And I think nobody will doubt that today, nobody will question today, the number one priority has to be growth. And that's what the budget is focused on. And clearly, to get growth, there will be certain areas where one may not get the kind of results that one would looking for. But then again, there's next year when we come back. So if we get the 11-12% GDP growth this year, then I think we'll be in pretty good shape in FY23 to correct for what had to be compromised with to get the growth of 11-12%. And I think all of us, even in a personal finances, in a company budget, we all have to make these choices always. And same thing applies for a country's budget.
Okay, I'm just tempted to ask you one more question. I'll take the liberty of extending my appointment by another exactly a minute. The idea of getting development finance back. Now, this is an idea which in the past has not worked. I'm not getting into the name of the institutions, but institutions who were in development finance or who were financing the infrastructure space, in a sense, had a rough time. Is it an old idea coming back in a new avatar, or a failed idea coming back again?
So I'm not an expert in this area, so I don't have much of an insight. But what I would like to say is that there were reasons why it didn't work the last time. And I'm sure that those learnings that comes from last time's not such a good experience will be incorporated in the new attempt. And we always have to try things again. I mean, something that doesn't work once doesn't mean that it will never work again. And we have to try old ideas with new inputs, with new initiatives, with new direction again. Otherwise, one failure should not mean that some idea is completely dumped forever. And therefore, I think that it's clearly a good thing, assuming that the learning from last time is going to help us to make it successful. Clearly, the ARC is a very big expectation that the industry had of the so-called bad bank. That would help tremendously in terms of getting our banking system in line.
All right, Mr. Goenka, I really appreciate your time. I'm going to call this budget as the budget which was the first budget of this decade, a budget in which the primary objective was to focus on health, which is what the finance minister started with. Then is hope that the worst is behind us and India has truly emerged as a superpower. And a superpower is a country which survives a difficult time, and India has survived the pandemic. There is hope that if growth comes back, the third element of this budget, things will indeed look up for the economy. And that's where I think the government is prioritizing rather than ignoring the compulsion of fiscal deficit. They are going to be going all out on spending. And the fourth part is digital. I mean, she used to just give an example of simple things, how basic acts would be changed, how digitization is moving up. There's a renewed focus on UPI and other things. Those are the factors which also are important in terms of digitalization of the economy. Let's take a break with the news that the party continues. The party continues. We are almost up 3.5% on the Nifty. I'm going to read the exact number from my laptop. Almost trading at the highest point of the day, 14,220. Bajaj Finance is up, or Bajaj Finserv is up 9%. ICICI Bank is up 11%, and IndusInd Bank is absolutely doing cartwheels today at 952. Let's take a break.
Not one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge.
Lockdown, there is someone playing on your fears and emotions. Online fraudsters.
Let me share 3 ways in which they exploit your fears and trick you. They pretend to be bank telecallers and offer to help you secure a loan deferment as put out by the RBI. They will have your personal information and will try and gain your trust by asking you to verify those personal details. They will then ask you to download an app or click on a link and then share with them your OTP and PIN to avail of the deferment. But once you do it, your money will be siphoned out of your bank account. They will send you a message with a link pretending to show you a location or a heat map of COVID-19 positive patients near you, or even say getting access to unemployment fund. Chances are, out of fear, you click on the link or even download the app. But once this app is installed, your smartphone becomes remotely controlled and people can have access to your OTP PIN and all your personal data that is stored on your phone. Some fraudsters may even create dozens of similar sounding UPI IDs to try and trick you into donating for so-called COVID-19 patients or charities. Make sure to check the fund details twice yourself from authentic sources before you actually donate any money. Stay home, stay secure, be alert. Times Network is fighting fear with facts.
Hi.
Hi, welcome back.
Thank you.
Coffee?
Yes, long day today. Wait,
I'll just get it.
Thank you. Hey, you did not pick up Arav today?
His teacher texted.
Huh?
He has extra classes today.
Thank you. Really? Oh, is he still angry?
He is a little.
I think $1,000 के लिए ना we scolded him too much here.
Ravi, बात 1000 रुपए की नहीं है. He needs to learn.
I know. You know, I was actually thinking उसके लिए एक bank account खुलवाते हैं. What do you say?
Bank account? Why?
See, he's been hinting एक महीने से that he wants pocket money. So I was thinking, why not?
Ravi, he just spent 1000 rupees on a random app. That too without asking us. And you want to give him more money to spend?
I know, Baba, but instead of punishing him, maybe we can teach him this way.
Teach him what? कि और पैसे कैसे उड़ाते हैं?
He'll have his own card and he'll learn early on that if he spends, he need to return it also. It's a good idea. Think about it.
Okay, fine. We'll try it. But you're his guardian, not me.
हाँ, मेरा बेटा है. जल्दी समझ जाएगा.
अच्छा, वो जो तुमने आज तक नहीं दिए.
A wise decision is wise only if you pass on the advice. Teach your children the value of investing and compounding early.
The world has been forced into a standstill. Every day, the battle becoming more uphill. Now, more than ever, it's easy to believe all the naysayers who say the Indian economy will struggle to recover. All the doomsdayers who think it's time to look for an exit strategy and cower. Well, no one believed India could win the 1983 World Cup. But we did. No one believed a man from rural India could develop an affordable sanitary product. But he did. No one believed India could send a satellite to Mars. But we did. Every single time we were backed into a corner, we came out swinging against all odds. Despite every obstacle, it's time again for a rematch.
recommendations which were put forth have come out. First of all, there is going to be no change in personal income taxes. There's no COVID cess, expansionary budget, but without charging more from the taxpayers. Your quick reaction to that, and of course, FDI and insurance, a bad bank of sorts, stake sales in public sector banks.
So great budget. Actually, it's one of the, I would think it's a milestone budget. It's really a landmark budget. She's dealt with each and every point, and it's for each and every sector. Stressed sectors, all the stressed people. I think stressed sections of the society, focused on lives, livelihood and growth. And I think the most important thing is that she has bet on growth very, very heavily. And as you said, as to where from all this will come really from growth. The type of government leadership we are seeing on spending is just phenomenal. So I think growth is bound to kick in with this type of, playing with the front foot, and I would think that's a very, very important signal. She's continued with reforms. Which is very important. Type of bad bank, the DFI, or
See, that's come in. In fact, the CIA President, Mr. Uday Kotak, is now with us. Mr. Kotak, this is Nentara. Thank you so much for joining us live here on ET Now. Look at the markets. What a thumbs up for the union budget. You're, of course, an ace banker, so I want to pick your brains first by asking about the big reforms and the announcements that have come in for the banking sector. A nationalized AMC of sorts for handling bad banks, stake sales in a couple of banks. We were talking about this just a few days ago in our pre-budget conversation.
Nayantara, I believe that this is a growth-oriented budget and next-generation reforms which we are seeing. And it is really transformative in terms of how we are thinking about India's future. It reflects a confidence on India in itself. And if you look at some of the points which CII has recommended, which included considering the privatization or disinvestment in a few public sector banks, the formation of a development financial institution, bad banks, and here if you look at the whole national ARC structure which they're looking at, that is going to be aggregation of all the debt from the different banks, and thereafter a process by which you offer it to AIFs at the stage 2. So that again, I think is a very positive way of cleaning up the financial sector. And also the whole thrust on growth, focus on key sectors which will determine India's destiny, whether it's healthcare, whether it's infrastructure, whether it's a financial sector which can be geared for getting India's growth engine to a different trajectory.
Kotak, good afternoon. Nikunj Dalmia also joining in. Looking at the markets, Mr. Kotak, 500 points higher for the Nifty, 2000 points higher for the Sensex. I know markets in the short term are a function of sentiment and positioning, but do you think today markets are voting with logic and this is a growth endorsement which is coming from the stock markets today post the budget?
I think the markets are also feeling very good about a stable tax regime. And at the same time, a belief that we are now putting money to work in the right segments. And a belief that though we are going to be with a higher effective level of borrowings in the plan, that the debt markets will support it and will raise the money, and neither inflation nor borrowing rates will go out of control. And it is this part of the execution where I think the government and RBI will have to work in close tandem to ensure that interest rates remain stable through this period.
Mr. Kotak, the big idea is to get development infra financing back. Now, historically, this idea has not worked. I'm not getting into specifics of why, but an idea which has not worked in the past, do you think this will work in future?
Nikunj, you got to look at some models which have worked. If you look at the model of SIDBI and NABARD, those models have worked. Therefore, the development financial institution in infrastructure should get the right sort of platform similar to what has worked in agriculture and rural on one hand and MSME on the other. And the key issue on development financial institution working is ability to get long-term fixed rate funding. And the government will have to work on that. The way they've done it for SIDBI and NABARD, what is the way between government and RBI that we can ensure fixed rate long-term funding for this development financial institution, which in turn can offer the various infrastructure projects a fixed rate ability to fund. However, this cannot address the issue which needs to be addressed separately, where sovereigns, particularly state governments, must honor contracts, because that is the key challenge in the infrastructure sector.
While the assumptions on GDP and tax collection, Mr. Kotak, look pretty reasonable, do you think the government is aggressive on the disinvestment front? I'm not doubting the intention here, sir, but it's the process. Selling a government asset has never been easy.
Nikunj, this entire, the premise of this budget is a significant mindset change. And we have to believe that we will be able to get that mindset change convert to execution. And the future of the success of this budget, which has really put out a very transformational framework, is execution, execution, execution. And that is where I think we need to really focus on collectively as both policymakers and practitioners.
Mr. Kotak, is Nayanthara again. We've also got Chandrajit Banerjee here. But before I go to him, I wanted to get your views on one big reform, which, was looking like it'll be politically difficult to push through, but it has been announced. 74% FDI for insurance. What can this do for the financial services landscape?
Nayanthara, it's a question of a very self-confident India. We are now genuinely confident that on the Indian platform, whether it's foreign ownership or Indian ownership, free and fair competition with proper regulation is something which India is ready with. It's a signal to the world that India is ready for business and is no longer insecure, but self-confident of managing itself through even a competitive landscape between global players and domestic players.
We have Chandrajit Banerjee also here. There has been no tinkering in the taxation front as well. But a lot of the multipliers have not got the kind of attention, for example, that we thought we would see. For example, look at real estate.
Yeah, I would think that if you really look at the entire taxation bit that the government has really come up in this budget, it's been mainly focused, greatly focused. One of the things that we had asked for is stability in the taxation side, and I see that come in very strongly. There is a stability in the taxation ecosystem. Second, a lot has been done in terms of making life easier for people, and I think that's a very critical point that we have seen. And I think these go a long way in when we talk about the taxation as a whole. And I would think that this is exactly what we had expected. We didn't expect major changes in the taxation limits, but make it easier, make it simpler, make it much more friendly to people.
Mr. Kotak, I want to ask you one thing. When Nikunj was just talking to you about disinvestment, you're seeing a target of 1.75. You're seeing a disinvestment target of 1.75 lakh crore rupees. You're also going to see an LIC IPO. A couple of companies that, of course, been mentioned by the finance minister. She's talking about a land monetization policy. So in that sense, were you surprised with the target? Do you think it would have been higher? There's also Air India that's been doing the rounds.
If we do 1.75 lakh crores in the next year, it will be a very, very strong and good beginning for a platform where we can do even more in the following years. we keep in mind we're going with a higher fiscal deficit in 21-22, which we have to moderate. And non-tax revenues are the way to handle that. Therefore, we will need to raise money from privatization, monetization of operating assets, sale of land, and make sure that the fiscal deficit is gradually coming back to normal. These are abnormal times, and this budget is appropriate for these abnormal times.
Mr. Kotak, closing comments. I promise I'll not extend or will not extend our appointment beyond this. Where would you say the big picture for the economy is headed? Because the way economy and cycles move in the past, Mr. Kotak, they surprise you on the upside and they disappoint you on the downside. The disappointment is over. Are we in for a big earnings and a big economic surprise now?
I would not use the word surprise. I think, there comes a time in the tide of a nation which, if taken at the proper time, can lead to transformation of a nation. I think India's time is now. And therefore, this budget I would really consider as a budget of next generation reform. I don't think we should be surprised. We should be out there supporting the change and transformation which India needs. India is a large country with a huge population. Many of them, we need to make it far more inclusive, and we have to increase the size of the cake and distribution along the way. And this is a game plan for getting the size of the cake up. And we're going to go all out and make the size of the cake larger. That's what the game is.
Well, very well said, Mr. Kotak. Appreciate your time. Thank you for joining us, and thank you for your valuable inputs.
Thank you.
Mr. Sanjeev Bajaj is also ready. Mr. Bajaj, in the morning when we spoke to you before the budget, we were discussing, debating, ideating what should be done, what should not be done. But looking at the markets, looking at the budget, the tone and the tonality, no taxes, no increase in taxes, looks like all of us have got much more than what we anticipated and expected.
Nikunj, as you said correctly, our asks by and large have all been met. We all know that the God is in the execution, and we know this government is firmly focused towards building the India for the future. And that is what we hope to see now. And whether it's the additional investment across infrastructure, health, education, agri, whether it is some of the measures on the financial services side, the creation of effectively a bad bank through the ARC and the AMC, the divestment of some of the non-core assets, as well as recap of the banks, the development financial institution, the government has taken all this into consideration, and it goes to show that the intent is very strong to rebuild the new India.
Mr. Bajaj, let's understand the assumptions. I was asking Mr. Kotak also. While you said the word execution, what needs to be done to make sure the execution is implemented? Is it about processes? Is it about timing? What can be done so that the intent is there, but if execution has to be done, what needs to be changed there?
You know, there are a number of pointers towards this. One, if you see the evidence from the last 6 or 8 months where the government and the RBI stepped up to ensuring that businesses, especially small ones, don't go down, to ensure that those at the bottom of the pyramid are supported. Our infrastructure, including our digital infrastructure, enabled a lot of this to happen. We have seen RBI come out with measures to support NBFCs that provide onward lending. We've seen the moratorium that was offered. So they've been very timely, and this has helped us come to a stage of recovery from where we can grow. Now, if you, at least whatever I could hear of the budget, we have to still go through a lot of the detail. It's a 350-page document, but the allocation being made to encourage states to divest, to support a number of those states, the allocation of 35,000 crore and more if required for the vaccine, recognizing that healthy India is a safe India and only then a growing India. There's no reason why these things should not be executed. Some of the larger issues like the divestments of the general insurance company, the state-owned banks, the setting up of the DFI, these will naturally require certain regulations to be passed. And yes, we have to see in coming months that the government is able to do this.
Mr. Sanjeev Bajaj, good afternoon. Mr. Sanjeev Bajaj, good afternoon. This is Nayanthara Rai. You know, you have been making a case for some time now for multiple bad banks. You are seeing a bad bank of some form. It's looking like it's going to be a state-owned AMC that is going to be buying these bad loans. So it's a little different from what you had been proposing. Do you think this is the way to go to once and for all finish the NPA problem?
Nayanthara, the structure is less important. What is important was getting the action done so that the banks can get rid of their NPAs and get recapitalized so that they can start onward credit again. So that's the important step. How this will be done, I heard the finance minister talking about setting up an asset reconstruction company and then an AMC with it, and to provide access to funds including foreign investment funds to partake in this is exactly what we were talking about. So the structure is less relevant. Executed well, it should take care of the current problem. But as you know, beyond this, they have to then make sure that the right incentives are provided to the management of those banks to avoid this from recurring.
We also have with us Tata Steel's top boss and the president-elect of the CII, TV Narendran. Mr. Narendran, this is Nayanthara. You know, you're seeing a big thumbs up from the markets as far as union budget goes. I want to first begin by asking you your views, and particularly for the steel sector, there seem to have been a lot of changes when it comes to the custom duty rejig. What is it going to mean for companies like yours?
So yes, overall the budget has been positive from a CII perspective. A lot of what we've been asking for, talking about, got reflected in the budget. I think the focus on infrastructure, the glide path towards the fiscal deficit, bringing 4.5% by 2025, the focus on healthcare, the focus on stability of policy, whether it's customs duty or taxes or whatever. I think there is a lot in the budget which industry has been asking for, which we are happy about. It's got reflected in it. As far as the steel sector is concerned, we are positive from a demand side point of view, because with the focus on infrastructure, both rural and urban, and also the focus on metros and things like that, I think it's positive for the industry. Also the focus on manufacturing in India is positive for the steel sector. The customs duty reduction was in response to the rising steel prices, which is more to do with international prices. But I think bringing down the customs duty to 7.5% at this point in time, I don't think has any significant negative impact on the industry, because most 60% of the imports of steel into India comes from countries with whom we have an FTA, which is Japan and Korea, who anyway enjoy 0% import duty. So the 7.5 only helps China and some of the other countries with whom we don't have an FTA. International prices are still high, so to that extent, even at this import duty, I'm not seeing a big impact on the steel industry today. But having said that, I think the reduction on import duty on scrap is helpful for the SME sector. On semi-finished steel, bringing down the import duty is good for the MSME sector, who are re-rolling a lot of imported semis. So in a way, it is addressing some of the concerns raised by the smaller players in the steel industry who struggled with high variable costs over the last few months.
So net-net, you're saying these measures should actually give a fillip to domestic manufacturing of steel as well and bolster the larger ecosystem. If I can get sector-specific, and Sanjeev Bajaj, I know you may have some strong views on this one. 74% FDI in insurance. It is a game changer, but what is it also going to mean for the large domestic players? Is it a move that they'll be happy about at all? And will we see the kind of capital inflows that are being projected?
Nayantara, from a CI perspective, the additional capital is welcome if it helps with the growth of India and the growth of the Indian insurance sector. And as our President Uday Kotak mentioned in another interview, the India of today is a far more confident India of being able to compete with the best in the world. So this was never meant to be protectionist. It was meant to be more strategic and what was required to support long-term assets in India. I believe that this will help predominantly companies that need capital. Most of them, of course, the younger, the smaller ones, but to the large ones as well. It's an opportunity for foreign partners that have the option and want to take their stake up to do that, to bring in additional capabilities into this particular industry. So let us wait and watch. But it is in line with everything else that this government stands for, which is let's welcome the world, let's provide them the opportunity, let the best compete.
Mr. Narendran, you, or rather your sector, acts as an ancillary to infrastructure, to housing, and this budget lay extra focus on a boost to infrastructure. There's clearly been a strong infrastructure push. They're going to introduce a bill to set up DFI, providing about 20,000 odd crore rupees. Capital expenditure has been increased to 35%. There's been a tax holiday for more than a year for affordable housing as well. That, I'm guessing, prima facie is good news for ancillaries such as you, for these two sectors in particular?
Absolutely. So if you look at construction, you can actually divide it into 4 subsegments. There's infrastructure, there's commercial, there's residential, and there's industrial. So infrastructure is strong because the government is focusing on infrastructure. Commercial is a bit, simply because of the fact that shopping malls have not had the footfalls that it's used to. Cinema halls have not had the footfalls. Office spaces are being released because people are working from home. So that's a part of the construction activity which probably is, still a bit shaky. But residential has come back strongly after the pandemic. I think many states have reduced stamp duties, and also the focus on affordable housing, and also rental housing for migrant workers. These are all very good initiatives, and that's helpful. And residential, so hence residential has recovered reasonably well. And then you have industrial, which is largely factories, supply chains, warehouses, which have also come out strongly after the pandemic. So I think 3 out of the 4 subsegments of construction accounts for 60% of the steel consumption is looking good, so which is positive for the sector.
I go through the nitty-gritties in the fine print of the budget document. There is a cut in basics custom duty for iron, steel, stainless steel melting scrap. Also for flat and long non-alloy steel as well as stainless steel as well. So the net impact is importing steel and stainless may become easier. Importing of iron ore is going to become less expensive. Steel companies, remember, have been complaining about the lack of iron ore in the Indian market, which I'm going to talk about with Mr. Narendran in just a short while from now. Currently, domestic prices are at a discount, remember, to imports from countries like South Korea. In China, prices have been falling in the last 1 month. A cut in duty is going to perhaps, Mr. Narendran, increase or lay more emphasis and thrust on Chinese imports. Do you see that happening at all?
Yeah, the import duty reduction benefits other than... Yeah, it benefits countries other than Japan and Korea, who anyway have zero import duty because of the FTAs they have with India. So it's for imports from other countries. Currently, international prices are higher than domestic prices. So to that extent, I'm not seeing a short-term impact because there is still pressures in the international prices, in the international markets on steel. Gold prices have gone up, iron ore prices. So I'm not seeing a short-term impact, but I think it's helping the sector because many of them import intermediate steel products for rolling, or they import scrap for melting. So I think some of those costs have come down. Reducing import duty on iron ore helps those amongst us who wants to import iron ore, but iron ore prices are $160, so they're not cheap in the international markets. So, but overall, I think it's addressing the MSME sector and steel who have struggled a bit. And, so some of these steps help them, and that's good.
Okay, Mr. Sanjeev Bajaj, Mr. TV Narendran, thank you so much for taking the time out and dissecting the budget fine print with us. I want to quickly mark what the markets as well are up to. We're still holding toe. We're seeing solid gains, 4.25%, still higher, still counting up. Only 9 stocks within the F&O universe to the declines. Rest all 133 up in the green. IndusInd Bank leading the charge with a 12.5% notch up. You've got a Bajaj Finserv as well, scaling almost a double-digit gain there. ICICI Bank, Chola Finance, RBL Bank, Ashok Leyland, all holding up double digits as we speak. We're going to take a very quick break, but when we come back, dissect and analyze what the budget 2021 entails for the markets. Joining us on the other side would be S. Narain.
From savings accounts to ready for it?
He knows the market trends today and has mastered them over the last 15 years.
Bringing greed and fear and business analysis together, I think that's what day in, day out Nikunj does.
He tracks the biggest business stories that impact the growth of your wealth.
Forces you to come up with a specific recommendation and not just give general answers.
His keen market sense simplifies financial jargon to make you market ready.
A market opening without Nikunj Dalmia, A, is clearly unthinkable, and B, it will clearly be less enthusiastic.
He is most trusted by market veterans and India Inc. alike.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing.
Nikunj, I must say you have good memory, or you're refreshing up from past recordings.
This is a sensitive question, a question which is absolutely critical to us.
No, beautiful question.
Very good insight.
A name synonymous with Indian stock markets. Nikunj Dalmia on ET Now.
With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, After 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge.
Even in this time of lockdown, there is someone playing on your fears and emotions. Online fraudsters. Let me share 3 ways in which they exploit your fears and trick you. They pretend to be bank telecallers and offer to help you secure a loan deferment as put out by the RBI. They will have your personal information and will try and gain your trust by asking you to verify those personal details. They will then ask you to download an app or click on a link and then share with them your OTP and PIN to avail of the deferment. But once you do it, your money will be siphoned out of your bank account. They will send you a message with a link pretending to show you a location or a heat map of COVID-19 positive patients near you, or even say getting access to unemployment fund. Chances are, out of fear, you click on the link or even download the app. But once this app is installed, your smartphone becomes remotely controlled and people can have access to your OTP PIN and all your personal data that is stored on your phone. Some fraudsters may even create dozens of similar sounding UPI IDs to try and trick you into donating for so-called COVID-19 patients or charities. Make sure to check the fund details twice yourself from authentic sources before you actually donate any money. Stay home, stay secure, be alert. Times Network is fighting fear with facts.
Hi.
Hi, welcome back.
Thank you.
Coffee?
Yes, long day today. Very tired.
I'll just get it.
Thank you. Hey, you did not pick up Arav today?
From savings accounts to...
His teacher texted.
Huh?
He has extra classes today.
Thank you. Really? Oh, is he still angry?
He is a little.
I think $1,000 के लिए ना we scolded him too much here.
Ravi, बात 1000 रुपए की नहीं है. He needs to learn.
I know. You know, I was actually thinking उसके लिए एक bank account खुलवाते हैं. What do you say?
Bank account? Why?
See, he's been hinting एक महीने से that he wants pocket money. So I was thinking, why not?
Ravi, he just spent 1000 rupees on a random app. That too without asking us. And you want to give him more money to spend?
I know, Baba, but instead of punishing him, maybe we can teach him this way.
Teach him what? कि और पैसे कैसे उड़ाते हैं?
He'll have his own card and he'll learn early on that if he spends, he need to return it also. It's a good idea. Think about it.
Okay, fine. We'll try it. But you're his guardian, not me.
हाँ, मेरा बेटा है. जल्दी समझ जाएगा.
अच्छा, वो जो तुमने आज तक नहीं दिया.
A wise decision is wise only if you pass on the advice. Teach your children the value of investing and compounding early.
The world has been forced into a standstill. Every day, the battle becoming more uphill. Now, more than ever, it's easy to believe all the naysayers who say the Indian economy will struggle to recover. All the doomsdayers who think it's time to look for an exit strategy and cover. Well, no one believed India could win the 1983 World Cup. But we did. No one believed a man from rural India could develop an affordable sanitary product. But he did. No one believed India could send a satellite to Mars. But we did. Every single time we were backed into a corner, we came out swinging against all odds. Despite every obstacle, it's time again for a rematch. You ready for it?
He knows the market trends today and has mastered them over the last 15 years.
Bringing greed and fear and business analysis together, I think that's what day in, day out Nikunj does.
He tracks the biggest business stories that impact the growth of your wealth.
It forces you to come up with a specific recommendation and not just give general answers.
His keen market sense simplifies financial jargon to make you market ready.
A market opening without Nikunj Dalmia, A, is clearly unthinkable, and B, it will clearly be less enthusiastic.
He is most trusted by market veterans and India Inc. alike.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing.
Nikunj, I must say you have good memory, or you're refreshing up from past recordings.
This is a sensitive question, a question which is absolutely critical to us.
No, beautiful question.
Very good insight.
A name synonymous with Indian stock markets. Nikunj Dalmia on ET Now.
With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the...
And 100% now we are making a lot of research, particularly for lithium-ion battery. Right. We are now supporting the air ion and steel ion or aluminum ion technology.
You have a meeting with the Prime Minister as well
Yes, we are organizing a meeting with the Mr. Raghavan and Niti Aayog, and we are encouraging the new startup and our IIT institution and other people to make the option for lithium-ion battery. So after that, India is going to be a #1 manufacturing hub for electric vehicles.
It looks like it is going to happen very soon with Tesla also coming in. This is going to be the first time that we're speaking with you about Tesla. So I must take a question on that as well. Given the fact that so many incentives are being given for the auto sector, what kind of welcome do we expect for Tesla as well?
Actually, first of all, automobile sector is the #1 sector in the country which is creating maximum employment potential. In the MSME, the small vendors are getting great contribution from the sector. Now you just take the example, the finance minister has already increased the taxes on the automobile components which are imported. So naturally Make in India and Made in India movement that will be going to be push up by this decision, and 100% is going to create more employment potential and adding growth in our country.
I must also ask you about the infrastructure sector. So you've also been forefronting a lot of developmental related activity for roads and highways, and we have seen a big outlay being given to the sector. In terms of the activity from here on, what can we expect, and more importantly, how critical it is going to be to give the right kind of push during these times as we're coming out of COVID?
Actually, it's a great thing for my department that considering the problem because of COVID-19, our average was 28 kilometer per day for last year.
Right.
Now this year, up to the end of January, our construction average was 28 kilometer per day. Already we completed. And by February and March and it will be a final data. So I am confident we will be 40 kilometer per day. So it is a great achievement as far as my department is concerned. It is not my credit, it is credit.
It is of course your credit as well.
It's for my engineers, my officers, contractors, all stakeholders. They are working day and night for that. And now the budget is increased from 91,000 crore to 1,18,000 crore.
Right.
Yes, Naren also joining us now. Naren, good afternoon. What a fabulous budget. A clear roadmap for growth and some, landmark new announcements as well coming in. Markets rejoicing this afternoon. What are some of your key takeaways?
Exactly what you mentioned. I think the near-term outlook for growth is absolutely phenomenal. And we had one of the most pro-growth budgets that we've seen. And it's something which is making all of us on the equity side of the business phenomenally happy. And I think even globally, I think clearly, I think the US Treasury Secretary is also talking about doing all that is needed for growth in the near term. I think we're going to have one of the most pro-growth environments in the next 6 months to 1 year. And that is going to be extremely supportive of equity markets in the near term. So I think 2021 is going to be a fabulous year for growth. And the base effect of 2020 also makes the outlook look just outstanding. And that is very positive. I think the real test is not 2021. I think for that, I think it's fantastic. But at the end of 2021, when inflation starts to go up in many parts of the world, at that point of time is when you're going to have the risks, and not now. And I think the near-term outlook is really fabulous. And we have had this view for quite some time that the time for defensive debt investing, duration investing is over, and the time for equity investing was there. And that is something we've been conveying all the way from October. And the budget was absolutely in line with our view, and it has been very happy that the budget was actually supportive of whatever stance that we have to have a pro-growth approach at this point of time.
All right, Naren, so finally getting your take on what you made of the budget, but let's also take it across then to Prime Minister Narendra Modi giving his key takeaways on the Union Budget 2021.
आज के बजट में आत्मनिर्भरता का विजन भी है और हर नागरिक, हर वर्ग का समावेश भी है। हम इस बजट में जिन सिद्धांतों को लेकर चले हैं वो है ग्रोथ के लिए नए अवसरों, नई संभावनाओं का विस्तार करना, युवाओं के लिए नए अवसरों का निर्माण करना, मानव संसाधन को एक नया आयाम देना, इंफ्रास्ट्रक्चर निर्माण के लिए नए नए क्षेत्रों को विकसित करना, आधुनिकता की तरफ आगे बढ़ना, नए सुधार लाना। साथियों, नियमों और प्रक्रियाओं को सरल बनाकर आम लोगों के जीवन में ईज ऑफ लिविंग को बढ़ाने पर इस बजट में जोर दिया गया है। ये बजट इंडिविजुअल्स, इन्वेस्टर्स, इंडस्ट्री और साथ ही इंफ्रास्ट्रक्चर सेक्टर में बहुत सकारात्मक बदलाव लाएगा। मैं इसके लिए देश की वित्त मंत्री निर्मला जी को और उनके साथी मंत्री अनुराग जी और उनकी टीम को बहुत बहुत बधाई देता हूं। साथियों, ऐसे बजट देखने को कम ही मिलते हैं जिसमें शुरू के 1-2 घंटों में ही इतने सकारात्मक रिस्पांस आए। कोरोना के चलते कई एक्सपर्ट्स ये मानकर चल रहे थे सरकार आम नागरिकों पर बोझ बढ़ाएगी, लेकिन फिस्कल सस्टेनेबिलिटी के प्रति अपने दायित्वों को ध्यान में रखते हुए सरकार ने बजट साइज बढ़ाने पर जोर दिया। हमारी सरकार ने निरंतर प्रयास किया है कि बजट ट्रांसपेरेंट होना चाहिए। मुझे खुशी है कि आज अनेक विद्वानों ने इस बजट की ट्रांसपेरेंसी की सराहना की है। साथियों, भारत कोरोना की लड़ाई में रिएक्टिव होने के स्थान पर हमेशा ही प्रोएक्टिव रहा है। चाहे वो कोरोना के काल में किए गए रिफॉर्म्स हो या फिर आत्मनिर्भर भारत का संकल्प, इसी प्रोएक्टिवनेस को बढ़ाते हुए आज के बजट में भी रिएक्टिव का नामो निशान नहीं है। साथ ही हम एक्टिव पर, स्टेटस को पर भी अटके नहीं हैं और हमने इस बजट में भी प्रोएक्टिव बजट देकर के देश के सामने प्रोएक्टिव होने का संदेश दिया है। यह बजट उन सेक्टर्स पर विशेष रूप से केंद्रित है जिनसे वेल्थ और वेलनेस दोनों ही तेज गति से बढ़ेंगे, जान भी जहान भी। इसमें एमएसएमईज और इंफ्रास्ट्रक्चर पर विशेष रूप से जोर दिया गया है। इसी तरह ये बजट जिस तरह से हेल्थ केयर पर केंद्रित है वो भी अभूतपूर्व है। ये बजट देश के हर क्षेत्र में विकास यानी ऑल राउंड डेवलपमेंट की बात करता रहता है। खास तौर पर मुझे खुशी है कि इस बजट में दक्षिण के हमारे राज्य, पूर्वोत्तर के हमारे राज्य और उत्तर में लेह लद्दाख जैसे क्षेत्रों में विकास पर विशेष ध्यान दिया है। ये बजट भारत के कोस्टल स्टेट्स जैसे तमिलनाडु, केरल, पश्चिम बंगाल, इनको एक बिजनेस पावर हाउस बनाने की दिशा में एक बड़ा कदम है। नॉर्थ ईस्ट के राज्य जैसे असम के अनएक्सप्लोर्ड पोटेंशियल को टैप करने में बजट बहुत बड़ी मदद करेगा। इस बजट में जिस तरह से रिसर्च एंड इनोवेशन इकोसिस्टम पर बल दिया गया है, जो प्रावधान किए गए हैं, उनसे हमारे युवाओं को ताकत मिलेगी। भारत उज्जवल भविष्य के लिए बहुत ठोस कदम रखेगा। साथियों, देश के सामान्य मानवी का, महिलाओं का जीवन आसान बनाने के लिए उनके स्वास्थ्य, स्वच्छता, पोषण, शुद्ध जल और अवसरों की समानता, इस पर इस बजट में विशेष बल दिया गया है। बजट में इंफ्रास्ट्रक्चर पर खर्च में अभूतपूर्व वृद्धि के साथ साथ कई व्यवस्थागत सुधार किए गए हैं, जिसका बहुत बड़ा फायदा देश में ग्रोथ और जॉब क्रिएशन, रोजगार के लिए बहुत लाभ होगा। देश में एग्रीकल्चर सेक्टर को मजबूती देने के लिए, किसानों की आय बढ़ाने के लिए इस बजट में बहुत जोर दिया गया है। कई प्रावधान किए गए हैं। एग्रीकल्चर सेक्टर में किसानों को और आसानी से और ज्यादा ऋण मिल सकेगा। देश की मंडियों को यानी एपीएमसी को और मजबूत करने के लिए, सशक्त करने के लिए एग्रीकल्चर इंफ्रास्ट्रक्चर फंड से मदद का प्रावधान किया गया है। ये सब निर्णय ये दिखाते हैं कि इस बजट के दिल में गांव है, हमारे किसान है। एमएसएमई सेक्टर को गति देने के लिए, रोजगार के अवसर बढ़ाने के लिए इस बार एमएसएमई सेक्टर का बजट भी पिछले साल की तुलना में 2 गुना से ज्यादा कर दिया गया है। साथियों, ये बजट आत्मनिर्भरता के उस रास्ते को लेकर आगे बढ़ा है जिसमें देश के हर नागरिक की प्रगति शामिल है। ये बजट इस दशक की शुरुआत की एक मजबूत नींव रखने वाला बजट है। सभी देशवासियों को आत्मनिर्भर भारत के इस महत्वपूर्ण बजट के लिए मैं बहुत बहुत शुभकामनाएं देता हूं। फिर से एक बार वित्त मंत्री जी और उनकी टीम को बहुत बहुत अभिनंदन करता हूं, धन्यवाद करता हूं।
Update, more exciting.
Market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge.
Even in this time of lockdown, there is someone playing on your fears and emotions. Online fraudsters. Let me share 3 ways in which they exploit your fears and trick you. They pretend to be bank telecallers and offer to help you secure a loan deferment as put out by the RBI. They will have your personal information and will try and gain your trust by asking you to verify those personal details. They will then ask you to download an app or click on a link and then share with them your OTP and PIN to avail of the deferment. But once you do it, your money will be siphoned out of your bank account. They will send you a message with a link pretending to show you a location or a heat map of COVID-19 positive patients near you, or even say getting access to unemployment fund. Chances are, out of fear, you click on the link or even download the app. But once this app is installed, your smartphone becomes remotely controlled and people can have access to your OTP PIN and all your personal data that is stored on your phone. Some fraudsters may even create dozens of similar sounding UPI IDs to try and trick you into donating for so-called COVID-19 patients or charities. Make sure to check the fund details twice yourself from authentic sources before you actually donate any money. Stay home, stay secure, be alert. Times Network is fighting fear with facts.
Hi.
Hi, welcome back.
Thank you.
Coffee?
Yes, long day today. Very tired.
I'll just get it.
Thank you. Hey, you did not pick up Arav today?
His teacher texted.
Huh?
He has extra classes today.
Thank you. Really? Oh, is he still angry?
He is a little.
I think $1,000 के लिए ना we scolded him too much यार.
रवि बात 1000 रुपए की नहीं है. He needs to learn.
I know. You know, I was actually thinking उसके लिए एक बैंक अकाउंट खुलवाते हैं. What do you say?
Bank account? Why?
See, he's been hinting एक महीने से that he wants pocket money. So I was thinking, why not?
Ravi, he just spent 1,000 rupees on a random app. That too without asking us. And you want to give him more money to spend?
I know, Baba, but instead of punishing him, maybe we can teach him this way.
Teach him what? कि और पैसे कैसे उड़ाते हैं?
He'll have his own card, and he'll learn early on that if he spends, he need to return it also. It's a good idea. Think about it.
Okay, fine. We'll try it. But you're his guardian, not me.
हाँ, मेरा बेटा है, जल्दी समझ जाएगा.
अच्छा, वो जो तुमने आज तक नहीं दिया.
A wise decision is wise only if you pass on the advice. Teach your children the value of investing and compounding early.
The world has been forced into a standstill. Every day, the battle becoming more uphill. Now, more than ever, it's easy to believe all the naysayers who say the Indian economy will struggle to recover. All the doomsdayers who think it's time to look for an exit strategy and cower. Well, no one believed India could win the 1983 World Cup. But we did. No one believed a man from rural India could develop an affordable sanitary product. But he did. No one believed India could send a satellite to Mars. But we did. Every single time we were backed into a corner, we came.
Well, still with closing trades right here at ET now, and look what a fabulous rally and a thumbs up coming in for Budget 2021 by the market. So we're counting down 600 plus points on the Nifty. 14,350 is what we're nudging right now, and to think of it, we had almost gone back to those 13,700 levels start of today's trading session. From there, it's a 600-point move after a lot of chop and churn that came out, and finally, once the dust of the budget and the fine print seeped in, you've seen a one-way up for the markets. 4.6% higher for the Nifty futures. Solid market breadth, only 11 names standing to the declines within the F&A universe, and private banks taking the charge. IndusInd Bank, ICICI Bank soaring with double-digit gains for themselves. RBL Bank holding up 11.5%. Chola Finance up 12%. Ashok Leyland up 11.5% as we speak right now. Bajaj Finserv, SBI up almost 10%, HDFC, L&T, Ultratech Cement, Shree Cement. I can go on with the list of gainers. Let's welcome on board then Sunil Subramaniam as well to dissect what Budget 2021 entailed for the markets. Sunil, hi, afternoon. And what an afternoon this is turning out to be. Last 6 days almost seem like a bad dream, Sunil. What is it that the markets have liked? Or would you say that because we went in so light and corrective into the event, therefore this relief rally?
Partly that, but also partly if you just go back, now you guys had got me to record my budget wish list. And if you just go and rehear that recording, you'll find that 75% of what I asked for, she's given. Okay, so what are these things? I think the key is that you're right, that the week, the run-up, market was very apprehensive because bad news is bad news, right? While market discounts bad news, what is the impact on the budget? Is it going to lead to a very conservative budget was a fear. I think the first thing the finance minister has done is boldly take the fiscal deficit up to almost 7%, right? That's, I think, a very challenging task. She's taken the bull by the horns. The second is, you're taking the fiscal deficit up, right? Where are you going to spend it? And that's why she's, again, made a very smart choice by increasing the infra allocation, the capex allocation by 35% to 5.5 lakh crores. So the quality of the expenditure. So first is she said, I'm getting money in my hands by widening my fiscal deficit estimate from a typical. Second is to quality of expenditure. The third is that what are the problems in financing growth, right? So if you now look at the country, that bad bank proposal, right? I think what that proposal, if it's really implemented, because it's been kept on talking, finally there's a concrete action that we'll set up an AMC and we'll then put it transfer to an AIF. So imagine the burden lifting if real incorrigible bad assets are going to be taken and sold at a discount. I think that's a huge plus. Fourth is to target the foreigners. They were not tied around sovereign wealth funds, they've removed that. They were not tied around retirement funds having double taxing, they removed that. They were not FDI in insurance. Insurance, as you know, is very capital intensive. And they've allowed not only FDI to 74%, they've allowed control with certain conditions to foreigners on insurance. So your insurance sector is really going to explode now. So if you look at it, that the reform-oriented path she has maintained, even in a year of distress, not get frightened by the whole situation around us and still stuck to the path of growth. And she said that we will target the FRBM in a slightly delayed fashion. So I think if you overall look at it, I would say that the preparation of the budget has been excellent, right? And then there was a fear that somewhere a COVID cess would come out. That fear was also dominating, and I would attribute that the market correction to significant amount, whether foreigners, FPIs would also have to suffer the COVID cess. By not putting in any additional taxation, right, that's been a big relief. And I think that's where the market is voting with its feet today. So I would say that I would rate this budget at 8.5 out of 10. Yes, there's still stuff which you would have liked her to do, so I would not give 10. I'll say 8.5. But the market's rally is partly because market had discounted the budget, saying she can't do all of this.
Fair point. But Sunil, has the market, or rather the budget, done enough for the FIIs to come back? We've seen a consistent sell-off in the last 6 trading sessions, and as of Friday, it was a high figure, highest in the recent history of 5,900 odd crore rupees. Could, after the budget today, FIIs turn back to buying India equities?
Look at the composition of FIs, right? There is one sector of hedge fund, but there's also pension funds and retirement funds. So she's given a break to those retirement funds in terms of taxation. Second is that all this reform is actually going to translate in FY 22, 23, 23, 24. So FIs, or long-term FIs, would definitely view this as saying India is back. It's probably going to be the fastest recovering economy. And then one more number, right, is the pragmatism of the finance minister in terms of projecting only a 14.4% nominal GDP growth. Now with inflation at 4.5 to 5, you're talking about a real GDP growth 9 to 10, when everybody's expecting 11. So I think she's been conservative on that front too. So it's not that the fine print is revealing very negative reprises on the basis of her assumptions. So I think the foreigners will get comfort from the fact that these numbers are based on fairly realistic assumptions of a bounce back and not in the air.
Okay. We actually have the Finance Minister's press conference about to begin as well. Sunil, would you be looking at any fresh spots given the budget this time around, the increased outlay, particularly when it comes to infra, for example, other pockets that you feel may stand to benefit this time around? Any new opportunities or any reallocation that you'd be looking at?
Like I've always been a bull on cement, as you know, right? But in the recent months, as I said in my previous interviews, we were not adding on to cement, we were just holding our positions. But now I think it's time to add back cement on my books in a big way. So I think cement and steel and EPC contractors, because all of this infrastructure is going to mean a lot of order books. So I think that's the broader play which we will start adding back on, which you're already overweight on, we'll probably increase that. Second is auto. I think the scrappage policy and all that has come through is also good for the auto segment. So
this budget, of course, comes at a time when all of us desire to give greater impetus to the economy. And that impetus we thought would be qualitatively spent and give the necessary demand push if we choose to spend big on infrastructure. That is why, if there are two important features of this budget, it is that we chose to spend big on infrastructure, which spans across roads, bridges, ports, power generation, and so on. And also to, as a second feature, attend to the need of the health sector. And even there, capacities for better health management had to be brought in the light of what we have gone through in the last year. And therefore, capacity building in health has taken a very big place in the budget. I've just given a probably just a feeler on what capacities we are talking about, whether it is establishing of labs, whether it is establishing of National Institute of Virology, or whether it is looking at the blocks where you need critical care centers, or whether you're looking at testing labs. Let's just remind ourselves that when the lockdown happened, we had probably just a few, two, if I'm right, 2 or 3 testing labs in this country. During the lockdown, that number was increased to a couple of hundred. Now, therefore, one of the things that we've aimed here is testing labs, Institute of Virology, aspirational districts having better health care. So infrastructure spend for health has gone down to the level of planning for the block level requirements, aspirational district level requirements, state level requirements, and national institute level requirements. So 2 features, when I said, are one in general spending on infrastructure, for which there is a 37% increase in the budget. 5,45,000 crores is what we are giving for this year. And health, it was also something which received something like 94,000 crores in BE of this year, has gone to 223 lakh crores. So you find big numbers in health, big numbers in infrastructure. But this doesn't really mean that we've ignored agriculture, where there too we have placed emphasis. I've increased, as I read it out in the budget, the allocation for NABARD for being able to send more credit through to the farmers. Agricultural infrastructure development cess is something which we are bringing in without on any one single item wherein we are putting the cess, the end consumer paying more than what he is paying today. It is just a restructuring we've done, for instance, of the basic customs duty, where it was, let us say, 12%, we brought it down to 7% and added possibly only 3% on the infrastructure development cess. End of the day, the consumer has ended up paying that much only or less. In no category has he ended up paying more after the agricultural infrastructure development cess. That we have done only because we wanted to be sure that in order to improve agricultural infrastructure, we have a dedicated amount coming out of the budget, rather than that going into the consolidated fund. It might still go, but we know what has got to be used for agricultural infrastructure. So if these are the kinds of things broadly we've done, equally important is the reform that we're bringing in the financial sectors. disinvestment to continue, LIC to have IPO, insurance sector to have more in terms of opening up for 74% for FDI. These are very clearly steps, progressive steps in financial sector. Other than that, one major cry of all the banks have been the NPAs, for which we have been repeatedly giving capital infusion. In order that the bank books are cleared and cleaned up, we have come with an announcement of a formulation through which the NPAs will be culled out of the bank's books based on some formulation, not any discretion there. It goes to a holding company-like structure, which after doing the necessary, sprucing up and also cleaning up and weeding out problems of that particular asset, will be through an open process, attract asset reconstruction companies which can come and bid for those assets. Even at that stage, after some haircut obviously, banks will get some money back to those NPAs, for which they only kept provisioning for the NPA, but didn't have the wherewithal to dispose them off legitimately. So we are giving that comfort to the banks. And also for funding the infrastructural requirements, a development finance institution is being brought in. All lessons learned from the IDBI, which started as a DFI but later went on to become a scheduled commercial bank-like functioning and couldn't succeed at that, are taken on board. So this DFI, even as it comes with about a 20,000 crore given by the government, which with a little more every now and then added, will eventually be used for raising about 5 lakh crores in a matter of next 3, 4, 5 years, is a formulation where when the law gets passed on that, we will still have an opportunity for the private sector also to set up their own development finance institution. So this country is not going to be, the needs of this country are such that just one development financial institution which is set up by the government will be adequately meeting up with the demand requirements. No, and therefore we see a future for a DFI which is partly funded by the government and raises capital from the market, is also competing with private sector DFIs. Largely this much, but very quickly I'll move over to talking about how we have not lost the opportunity to clean up government's own books. I had started it in July 2019-20, continued it in February 20, and even now we have made accounts more transparent. Nothing is pushed under the carpet. You're showing clearly where's the money going. Money given to FCI is also brought on board. So accounting of government expenditure and revenue statements are all now lots more transparent and open, and absolutely upfront stated the fiscal deficit, where everybody was advising, and rightly because everyone had concern that the economy should revive, advising us, please spend more. We not only ensured that the capital expenditure of the government was repeatedly reviewed and spending was encouraged and pushed, we ensured that the spending will not get delayed, and that is why even though we announced one capital expenditure amount during the BE, even that has gone up, that in the RE I had to make additional provisions for it. With that in mind, we have also increased the spending in the forthcoming year. As a result, borrowing increased. Our fiscal deficit, which started at 3.5 during February 2020, has gone to 9.5% of the GDP. So we have spent, and we have spent. Otherwise, your fiscal deficit wouldn't have reached this money, this number. But does that mean that we are going to show it and forget it? We've also given a clear glide path for deficit management and bringing it down. The Finance Commission has also been suggesting that we should be giving a glide path. We have given our glide path. I think, which broadly explains where we are, broadly gives you a broad picture. Specific items are also there about which we can expand, but I suppose in response to your questions. Thank you.
Thank you, ma'am. 6.
Ma'am, you rightly said that the glide path has been mentioned, and you did lay it out that over the next 5 years we might see the fiscal deficit coming down. But how hopeful are you with the current expenditure roadmap that you have given, that the fiscal deficit for the next year will be contained in that particular figure of 6.8%? Because the borrowing number also again continues to be quite high. And what gives you confidence in terms of job creation? That is what people have been wanting to hear from you, because a lot of people in the pandemic lost their jobs and they are yet to get back their jobs.
Haven't we announced an incentive scheme for people to join back and people to take their jobs back, for employers to take employees who were thrown out, to bring them back and have some money paid from the government for their EPFO and so on? So we have worked out a scheme, and that scheme will run for the course of I think till about next year, June. We've allowed people to get all those people who they threw out of their jobs to be back in the job, for whom we will pay the EPFO for 2 years. So we have given an incentive for people to take them back.
That's the next question. I think let the next question be moved to the next person. 31.
Lakshman bol raha hu, CNB.
1 minute.
You asked a question on the deficit, whether we will be able to contain ourselves in 6.8% or not. If you notice our revenue figures for this time, the revenue figures, if anything, are understated and not overstated. Because otherwise, by this time, all of you would have been coming out and telling us that we won't be able to achieve. So we have taken our nominal GDP 14.4% and the revenues at 16.7. So the buoyancy is only 1.16. We are hopeful that we will be able to get more than this and also achieve more in the other areas of non-tax revenue and the disinvestment. And we will definitely be within 6.8 and could be lower also.
Just to add on the job creation, the significant increase in outlay for infrastructure that ma'am has done will also have a sharp impact on job creation, especially in the informal sector, because construction activity actually creates both positive and negative spillovers, basic linkages, and thereby job creation in the informal sector.
Ma'am, है कि से पहले ये का एस्टैब्लिश ज़्यादा से ज़्यादा डिमांड पैदा की हम लोगों से, जो सेविंग थे वह करने के में ऐसे ये डिमांड पैदा सकती है आपके हिसाब से, क्योंकि जो इंफ्रा पे खर्च करने की बात है या दूसरी चीजें, उसमें लॉन्ग टर्म डिमांड आएगी, लेकिन इमीडिएट डिमांड आए उसके लिए आपके हिसाब से कौन से प्रावधान किए गए?
No, that's not true. Infrastructure project may take long time to complete, but the demand creation will happen immediately, because as the work starts happening in the ground, people are going to get wages, orders are going to be booked for core commodities, for building of those assets. So demand generation happens immediately. The project completion may happen later.
Number 10.
मैम, मैं मोनिका जी मीडिया से। मैम, मेरा सवाल है कि कोविड और लॉकडाउन की वजह से बैंकों में काफ़ी एनपीए बढ़ा और आरबीआई की रिपोर्ट के हिसाब से भी कुछ 14% तक बढ़ सकता है इस साल सितंबर तक। तो ये जो 20,000 करोड़ रुपए की जो राशि जो बैंकों के लिए आपने जो अनाउंस की है, क्या ये पर्याप्त है उनको रिकैपिटलाइज करने के लिए? साथ ही ये जो 9.5% जो फिस्कल डेफिसिट है जीडीपी का, इसका इकोनॉमिक ग्रोथ और इकोनॉमिक स्टेबिलिटी पर क्या असर रहेगा?
इसका असर अच्छा ही रहेगा, क्योंकि इसका मतलब है खर्च कर रहे हैं सरकार। इसके कारण एफडी फिस्कल डेफिसिट इतना तक पहुंचा है। जब खर्च कर रहे हैं और क्वालिटेटिवली अच्छा खर्च कर रहे हैं, उससे एम्प्लॉयमेंट बढ़ेगा। असर यही है, एम्प्लॉयमेंट बढ़ने में हर एक आदमी का हाथ में और पैसा होगा, जिससे डिमांड बढ़ेगी। सो द वर्चुअस साइकिल गेट्स बिल्ट।
और मैम ये जो बैंक रिकैप
Monica, no, Monica, this is
20,000. Let them absorb it first. We'll see as it goes. They are our banks.
33.
मैम मैं शैलेश यादव हूँ A9 न्यूज़ एजेंसी से। मैम कस्टम ड्यूटी जो है गोल्ड पे एक तरफ तो आपने जो है कम करी है, 7.5% कर दिया उसको, और लेकिन सेस उस पर बढ़ा दिया है, तो इसका कितना इम्पैक्ट जो है गोल्ड और सिल्वर पर पड़ेगा? दूसरा मैम एक अल्कोहल पे है कि वो एक्साइज ड्यूटी जो है, सॉरी कस्टम ड्यूटी, सॉरी सेस जो है 100% बढ़ा दिया गया है, तो उसका कितना इम्पैक्ट पड़ेगा अल्कोहल पे?
फर्स्ट ऑफ ऑल, मैंने जैसे शुरुआत में कही, कस्टम ड्यूटी का रिडक्शन करने के बाद सेस को उसके ऊपर लगाने में पूरे कस्टम ड्यूटी के गिरावट जो हुआ वो भरपाई करने के लिए सेस नहीं किया, उसको कम किया, मगर सेस जो ऐड किया वो कम ही स्तर पर ऐड किया है, जिससे एंड कंज्यूमर के ऊपर ज्यादा और एडिशनल बोझ ना पड़े। मीनिंग वी reduced the customs duty and we levied a disproportionate amount of cess. So it was not the exact amount of reduction of customs duty that we levied in the form of a cess. So if, for example, 10% was brought down of customs, we have only added 5 to 6% of cess. So Baki, if anything, has reduced the price to the end consumer, or else in some cases it retained the price. किसी का प्राइस उसके कारण ज्यादा नहीं हुई। ये रीएडजस्टमेंट है जो एक्साइज ड्यूटी के नाम पर हमें आता था या कस्टम ड्यूटी के ऊपर से हमारे कमाई थी, उसको रीस्ट्रक्चर करके उससे एक कार्व आउट निकाल करके एग्रीकल्चरल इंफ्रास्ट्रक्चर के लिए उसको नाम देकर अलग तलग कर दिया। उससे एडिशनल कंज्यूमर के ऊपर बर्डन नहीं है।
15.
Ma'am, this is Ruchi Bhatia from ET Now. I want to understand from you, the economic survey projected a nominal GDP of 15.4%, the highest since independence, but the budget has pegged just about 14.4%. Why the difference, and why does the budget not share the same optimism that the economic survey did on the nominal GDP?
If I can give a light-hearted reply, there are two different institutions preparing it. They are not opposite to each other. One may be conservative because it's finance ministry. The other is flamboyant because it's economic advice.
56.
नमस्ते, मैं आलोक प्रियदर्शी हूँ सीएनवी से आवाज़ से। मेरा सवाल यह है कि जो आम आदमी कोविड के बाद एक्सपेक्ट कर रहा था कि उसकी जेब में पैसे पहुँचेंगे थ्रू टैक्स में डिडक्शन एग्जम्पशंस के जरिए, सरकार ने वो रास्ता नहीं चुना है, लेकिन फिर भी इस बजट से आम आदमी समझने की कोशिश कर रहा है कि आखिर किस तरह से उससे राहत मिली है। अगर 2-3 पॉइंट्स अगर बता सके तो।
एम्प्लॉयमेंट क्रिएशन के लिए बहुत सारे खर्च हैं। पैसा पब्लिक इंफ्रास्ट्रक्चर बिल्ड करने के लिए बहुत बड़ा पैमाने पर दिया गया है, जिससे आम आदमी को तुरंत जॉब्स का अपॉर्चुनिटी मिलेगा। छोटे मोटे कारोबार करने वाले का एक्सपोर्ट के लिए इंसेंटिव स्कीम्स भी लाए हैं और डेफिनेशन एमएसएमई का बदल दिया। उनमें टैक्स सर्टिफिकेशन और ऑडिटर सर्टिफिकेशन ना लेने का वो सुविधा भी हम दिए। सो छोटे मोटे कारोबार करने वाले को उनके ऊपर कंप्लायंस का बर्डन कम कर दिया। डिमांड बढ़ाने के लिए एक्सपेंडिचर कर रहे हैं इंफ्रास्ट्रक्चर में। सो जब इंफ्रास्ट्रक्चर के खर्च हो रही है, उनके व्हाट एवर प्रोड्यूस दे प्रोड्यूस, वो सब मांगने के लिए, डिमांड बढ़ाने के लिए हम कदम उठाए हैं। सो छोटे लघु उद्यमी को, मिडिल क्लास को इससे जरूर राहत मिलेगा।
156.
वित्त मंत्री जी, यहाँ पीछे प्रणय उपाध्याय हूँ, एबीपी न्यूज से। मेरा सवाल ये है कि बजट के अंदर एक प्रस्ताव रखा गया है कि जो भी हाई इनकम एम्प्लॉइज हैं उनके प्रोविडेंट फंड से जो इनको टैक्स में जो इंटरेस्ट में इनकम होती है उसका कैप 2.5 लाख के करीब रखा गया है। क्या आप थोड़ा सा समझा पाएंगे कि क्या एग्जैक्टली ये प्रोविजन है?
मैं ब्रॉडली बोलती हूँ, एंड ऑल्सो एक्सपेंडिचर सेक्रेटरी इज हियर, ही कैन ऑल्सो एक्सप्लेन इट टू इट। Up to 2.5 lakhs we have kept as a ceiling that you can annually give it for this purpose, for which you get tax exemption, for which you get at 8% guaranteed interest return on that money, even that is tax exempt. What we have done now is this fund is actually for the welfare of the workers, no doubt. And workers are not going to be affected by it because anyone who earns less than 2 lakhs per month will still be paying his 12% without a hitch. It is only for big ticket money which comes into it because it has tax benefit and also assured about 8% return. You find huge amounts, some to the extent of 1 crore also being put into this each month. For somebody who puts 1 crore into this fund each month, what should be his salary? So for him to give both tax concession and also an assured 8% return, we thought is probably not comparable with an employee with about 2 lakhs who puts that money, gets tax concession and also gets 8% return. That person who will still be allowed to put money, but of course with a ceiling of 2.5 lakhs, will get for that amount tax concession and for that amount 8% interest. So we are not reducing any worker's right, but at the same time getting tax exemption and also getting 8% rate of interest for somebody who puts 1 crore per month into the account, we thought maybe is not right, and therefore we have put that ceiling. 1 minute. Somnathan, would you want to explain something more to it?
No, I'll just add two statistics. The number of people who actually contribute more than the sum that we have indicated is less than 1% of the total number of contributors in the EPFO. So the people it affects is actually those who are not workers by any stretch of imagination but are using the EPFO, which they were entitled to do, but they are a very, very small fraction of the total number of contributors.
264.
Ma'am, this side. This is Abhishek from Republic TV. Ma'am, you made a very interesting mention of a portal for gig economy. I think this is the first time this was found mentioned. Like, what kind of social security measures are we expecting for gig economy, contractual workers, laborers? Because post-COVID, I think the numbers must have swelled.
So a portal is going to be created where the gig workers, the construction workers, the migrant workers, their data would be picked up and kept there. And all the schemes relating to health, education, even the ones that we were trying to do during the COVID times would actually flow from there. So basically this is an attempt. We have a lot of data available with us for various segments of the society. This is one data we thought we should have because people come and go, and we saw during the COVID times that we actually needed that. So it is for that reason. And the codes that have come up actually will provide benefits to these gig workers. The contributions will come from their employers, and they would also be entitled to the benefits of Social Security as much as is available to the labor today.
22.
Hi, ma'am. Somesh Jha from Bloomberg Quint. I would like to read out an extract from the Finance Commission report to seek a clarity. It says that keeping in view the strategic requirement for national defense, we have recalibrated the relative share of union and states in gross revenue receipt by reducing our grants component by 1%. So does it mean that the devolution to states is actually 41% and not 42%? And second, you've said that in the Finance Commission, you have accepted the glide path in terms of fiscal deficit. They have said that the fiscal deficit target they have recommended to be at 4% for FY26, and I think we have targeted it at 4.5%. So,
please,
so it's different from the one which is.
Somanathan answer some of the questions as much as DEA, but then the coming down to 41% has nothing to do with defense. It came down to 41% even last time when J&K was formed, and when a state became a union territory, the funding of that state or that union territory will be with the center and not with the state itself, which is a union territory now. So the 42 was brought down to 41. And to that extent, because it was recognized as a union territory, the center has been given the responsibility to fund it. So 41 has nothing to do with defense funding.
The Commission has recommended a deficit of 4% and a conditional extra deficit of 0.5% dependent on power reforms. So that is exactly what has been accepted. There's no deviation between what has been accepted for the states and what has been recommended for the Commission, by the Commission for 21-22.
80.
Ma'am, this is Mukesh Kaushik from Dainik Bhaskar. Ma'am, at a time when country is facing huge military challenge at eastern border, armed forces were expecting a substantial hike in their budget, which is not reflected in this budget. How can we counter a country like China, whose defense budget is close to $200 billion, 5 times higher than us?
I will give you the exact figures as to what has been given for defense. Defense expenditure, in the sense, in the last 3 years, has been accommodated. A lot of powers have been delegated to the vice chiefs, who can take instant call on revenue, and some capital expenditure accounts were also, the power were also given to them to expend as is required by the situation. So for defense, we have not really undermined any of that. And one other thing was accepting in principle the suggestion that non-lapsable fund should be provided for defense, which was one of the recommendations given by the Finance Commission. In principle, we've accepted that, but what formulation that will take will be different. That is something which the ministries will have to work out as and when they will want to work out. But specifics, Tarun, would you want to give? And Somnathan wants to.
So, I would point your attention to the fact that defense consists of 3 components. There is a revenue component, which is predominantly salaries, fuel, etc. Then there is a pension component, and then there is a capital component. The most significant component to your question is the capital component. The budget allocation in 2020-21 was 1,13,734. It has gone up to 1,35,060, which is an increase of close to 20%, which is a substantial increase.
116.
मैडम नमस्ते, मेरा नाम अतुल अग्रवाल है। मैं हिंदी खबर न्यूज़ चैनल का संपादक हूं। हम लगातार बात करते हैं किसान की, हम बात करते हैं जवान की, हम जय जवान जय किसान कहते हैं। आपने कहा सरकार खर्च कर रही है। सरकार इसलिए खर्च कर रही है कि सरकार को टैक्स के तौर पे एक रकम मिलती है जिसको सरकार जनहित में खर्च करती है। हम अन्नदाता की बात करते हैं, हम करदाताओं के मोटिवेशन के लिए हमने बजट में क्या है, करदाताओं के मोटिवेशन के लिए इस बजट में क्या है, वो हम जानना चाहते हैं।
करदाता के ऊपर जो प्रेशर था कि क्या डिस्क्रिशन के वजह से उनके ऊपर दबाव आएगा, क्या टैक्स टेररिज्म की बात करते थे 2 साल पहले तक, उन सभी विषयों में बाय ब्रिंगिंग इन फेसलेस असेसमेंट, फेसलेस अपील्स, डायरेक्ट टैक्सेशन में भी, इनडायरेक्ट में भी धीरे धीरे से ले आ रहे हैं। करदाता के ऊपर रॉन्ग डिस्क्रिशन बेस्ड प्रेशर नहीं होना चाहिए, वो एक विषय है। दूसरा, 6 साल तक आपके अकाउंट ओपन करेंगे, ऐसे एक सुविधा टैक्स अथॉरिटीज को था। उसको हम कम करते हुए we said within 3 years you open or do whatever but close the whole thing, जिससे करदाता के ऊपर जो अनसर्टनिटी था, पता नहीं कब खुलेगा मेरा अकाउंट, उसके पीछे क्या इंटेंशन होगा, that uncertainty has been removed. So nobody's account will be opened after 3 years. However, 10 साल तक ओपन कर सकते थे अगर आपके ऊपर सर्च हुआ या कुछ हुआ। उसको भी हम बोल रहे हैं कि only in cases where 50 लाख से ज़्यादा आपका अनडिस्क्लोज्ड इनकम था, फिर 10 साल तक ओपन करने का पॉसिबिलिटी है, एंड दैट टू व्हेन इट इज ओपन्ड विद द परमिशन ऑफ द प्रिंसिपल कमिश्नर ऑफ टैक्स। ये सब नहीं, 1 minute, you've not even heard how it's going to be implemented. मोटिवेशन के बारे में आप जजमेंट कर दीजिए। आप प्लीज एक्सप्लेन करिए हाउ मोटिवेशन कहाँ मिसिंग है जी? अभी ये घोषणा हुआ पॉलिसी।
We go to the next 14.
Ma'am, very good afternoon. Sapna Das here from CNBC TV 18. Ma'am, a quick one on this investment, ma'am. You have said in your budget speech somewhere that basically a bare minimum presence will be required as far as the strategic sectors are concerned. You already listed those. What does it indicate? And also, ma'am, this 1.75 lakh crore number that you've set out for FY22, it's lower than 210 of last year. Does it include your the new announcements that you've made for the banks and the insurance company? And one quick one, ma'am, also on this bad bank, you're not calling it bad bank, but you're saying like, you know, a new ARC, we should pick up the bad loans and dispose it off to AIF. So what is that you have envisaged there? Any amendments that may be required down the line, ma'am? Thank you very much.
Actually, the policy has been announced that there will be 4 sectors, broad sectors, and there will be a bare minimum presence of these sectors, and there is a mechanism which has been created through an alternate mechanism where Niti Aayog will put up, and then bare minimum will be, find out. That's the question number 1. The other one was the target. I think 1,75,000 is an achievable target. The pipeline has been created, and that pipeline will keep on being created. And a new policy will also create new pipeline, and that will carry on, because this program, which is there for 3 to 4 years of this, there are several companies which will actually be disinvested, and it will be a rolling program. So therefore, 1,75,000 we are hopeful of achieving this year.
I think we move to the next question. 50.
हेलो, आवाज़ आ रही है मेरी? मैं आमिर हूँ न्यूज़ नेशन से। इस समय आप देख रही होंगी कि कई बॉर्डर्स पे किसान बैठे हुए हैं और एग्री इंफ्रा सेस जो है लगाया गया है, इसका इस्तेमाल आप कैसे करेंगी और क्या ये किसानों के लिए फ़ायदेमंद होगा? आगे इंफ्रास्ट्रक्चर में आप इसको लगाएंगी, कैसे इसका इस्तेमाल होगा, कितना कलेक्शन हो पाएगा और किस तरह से? और दूसरा मेरा छोटा सवाल ये है कि जब घर से लोग निकलते हैं तो सर एक छोटा सा सवाल है, पेट्रोल डीजल को लेकर के बहुत ज़्यादा सवाल हैं लोगों के, क्योंकि उस पर लगातार सवाल पूछे जा रहे हैं कि कब तक कुछ एक्साइज ड्यूटी में राहत मिलेगी या नहीं, जो आपने अभी उस पर अलग से सेस लगा।
बॉर्डर पे किसान बैठे हुए हैं, हम सब समझ रहे हैं। अगर किसी किसान के मन में प्रश्न है तो एग्रीकल्चर मिनिस्टर उनके साथ बैठ करके बात करने में कभी भी संकोच नहीं किया। कितने भी राउंड क्यों ना हो, बैठते हैं और बार बार ये भी बोलते हैं कि ये तीनों कानून से आप क्लॉज बाय क्लॉज कंडवार चर्चा करिए, हम करने के लिए तैयार हैं। इसीलिए मैं मानती हूं अभी भी कि चर्चा ही रास्ता है। चर्चा करने के लिए सरकार ओपन है, और कल परसों पार्लियामेंट के शुरुआत से पहले प्रधानमंत्री जी वो जो ऑफर है उसको टेबल पर अभी भी है करके माना। इसीलिए मैं मानती हूं किसान जिनको भी मन में कुछ प्रश्न है, संकोच है और डाउट्स है, वो जरूर बात करने के लिए आगे आए, सरकार से बात करें। वो एक विषय है। दूसरा, ये एग्रीकल्चरल इंफ्रास्ट्रक्चर डेवलपमेंट सेस का मैटर है। ये मैंने मेरे एग्रीकल्चरल सेक्शन जब मैं पढ़ रही थी उसमें स्पष्ट बोले कि एग्रीकल्चरल इंफ्रास्ट्रक्चर के लिए हम खर्च करेंगे, और बहुत सारे इंफ्रास्ट्रक्चर के लिए वैरायटी हमने स्कीम्स बोले हैं। अब तक जो सिर्फ पोटैटो टोमेटो के लिए स्कीम है उसको अभी 23 पेरिशेबल क्रॉप्स के लिए ले आ रहे हैं। ऐसे ही नाबार्ड के द्वारा जहां ऑलरेडी 5,000 करोड़ का अमाउंट उनको दिया गया उसको डबल कर रहे हैं। एग्रीकल्चरल इंफ्रास्ट्रक्चर बहुत सारे आयाम मतलब फेसेस में करते हैं, बहुत सारे रूपरेखा में आता है। मैं ये भी बोली हूँ कि एपीएमसी का इंफ्रास्ट्रक्चर का भी हम फंड करेंगे। सो एग्रीकल्चरल इंफ्रास्ट्रक्चर फंड का रास्ता बहुत सारे हैं, उन सब के लिए ही ये फंड है।
नंबर 9।
हाँ, इससे पहले आत्मनिर्भर भारत के समय भी 1 लाख करोड़ का अनाउंसमेंट हुआ एग्रीकल्चरल इंफ्रास्ट्रक्चर के लिए ही। उसके अलावा अभी भी बोल रहे हैं कि इंफ्रास्ट्रक्चर इंप्रूव करने के लिए हम करेंगे। ये नाम भी एग्रीकल्चर के लिए ही है और उसमें अभी और 1000 न्यू मार्केट्स को जोड़ा जाएगा। पेट्रोल डीजल इज नाउ इट्स ऑलरेडी ओपन टू द मार्केट और ऑयल मार्केटिंग कंपनीज उसमें उनके अपने स्तर पर निर्णय करते हैं। अंडर रिकवरी होता है तो उनको वो भरपाई करते हैं। उसमें सरकार की रोल, पर्टिकुलरली केंद्र सरकार की रोल मैं ये बोलना चाहती हूँ, क्योंकि हमारा पेट्रोल एक्साइज के ऊपर जो हम अमाउंट हम लेते हैं वो फिक्स्ड अमाउंट है, वैल्यू बेस्ड नहीं, एड वैलोरम नहीं है। हर एक रुपया के लिए इतना आना है बस। इसमें अंदाजन वर्कआउट करने में, मैं प्लीज समबडी करेक्ट मी, if we get 13 to 14 rupees, states because they get it through ad valorem get nearly 30 rupees. इसीलिए केंद्र सरकार के ऊपर ये उनके निर्णय नहीं होता। ऑयल मार्केटिंग कंपनीज जो खरीदते हैं, रिफाइन करते हैं, फिर डिस्ट्रीब्यूट करते हैं, उनके ऊपर डिसीजन है, वो डिसीजन लेते हैं। फिर भी सेंट्रल गवर्नमेंट को उससे आने वाले अमाउंट इतना ही है, इस प्रोपोर्शन में। एग्जैक्ट अमाउंट नहीं बोली, 13-14 रुपीस अगर हम कमाते हैं, 30-35 रुपीस तक स्टेट्स कमाते हैं। सो ये भी हम ध्यान में रखना जरूरी है।
Ma'am, Meghna Mittal from News Rise. I wanted to ask you... Here. Ma'am, I wanted to ask you that will there be a concerted effort from the government in FY22 to improve the quality of fiscal consolidation and reduce the off-budget borrowing so that we can put all the expenses on the balance sheet?
You are asking a government which has set a record in it. If only I allow Somanathan to speak about it, if I allow the CEA to speak about it, he can speak for hours. It will be a matter of or subject of study in universities as to how public finance has to be cleaned up, has to be transparent. I think, and I am not boasting here, we've made brave decisions to keep it all open and transparent and clean it up. I would like each of them to say a few things so that it will benefit you.
In fact, there is a statement here. There was a statement last year too. This time it is Annexure 6. So if you look at that statement, we have detailed all the extra budgetary resources that have been borrowed from 2017-18 onwards. And you will see that the provision for this year is, for specific purposes, is 0. For an unidentified contingency, we have 30,000 crores. The entire food subsidy is now on the budget. The entire food subsidy for the revised estimates this year is on the budget. Arrears of food subsidy which were earlier given from the National Small Savings Funds for 2016-17, 2017-18 have been paid from the budget in the revised estimates 2020-21. So there are, basically the story is there is no extra budgetary resource for 2021-22, barring a contingency of 30,000 which we have kept for a rainy day. But other than that, there is actually nothing more. I would challenge you to please look in and find any extra budgetary resource that you can find here.
262.
Yeah, no, I just wanted to add actually that last time the first step was taken to actually put it out transparently in the budget speech. This time, as Dr. Somanathan has said, actually it's completely transparent. So, you know, I must say that I'm surprised by the question.
Ma'am, I'd just like to emphasize, I think, if it has not been caught up, normally the NSSF was used to fund the subsidy given to the FCI. This time that has also been onboarded in the budget. In the RE also we have brought a major portion of that into the budget, And also for the next year, we have got the whole amount into the budget. So that's a big transparent thing. That is what everybody's been asking for, and it's been delivered.
Ma'am, this is Krishnanand Tripathi. This side, ma'am. This side. Last year, when you presented the budget for this year, you estimated, as per revised estimate, that your fiscal deficit will be 3.8%, some 7.66 lakh crore rupees. And you invoked NK Singh Committee's clause, escape clause. But when we see the actual provisional number, it is 9.34 lakh crore rupees, a jump of 1.68 lakh crore rupees, or some 21%. There is an impression that
come out swinging against all odds. Despite every obstacle, it's time again for a rematch. You ready for it?
He knows the market trends today and has mastered them over the last 15 years.
Bringing greed and fear and business analysis together, I think that's what day in, day out Nikunj does.
He tracks the biggest business stories that impact the growth of your wealth.
Forces you to come up with a specific recommendation and not just give general answers.
His keen market sense simplifies financial jargon to make you market ready.
A market opening without Nikunj Dalmia, A, is clearly unthinkable, and B, it will clearly be less enthusiastic.
He is most trusted by market veterans and India Inc. alike.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing.
Nikunj, I must say you have good memory, or you're refreshing up from past recordings.
This is a sensitive question, a question which is absolutely critical to us.
Beautiful question.
Very good insight.
A name synonymous with Indian stock markets. Nikunj Dalmia on ET Now.
With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do. We continue to be very well diversified across product lines. The general health of the company continues to be very strong. We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge.
Lockdown, there is someone playing on your fears and emotions. Online fraudsters. Let me share 3 ways in which they exploit your fears and trick you. They pretend to be bank telecallers and offer to help you secure a loan deferment as put out by the RBI. They will have your personal information and will try and gain your trust by asking you to verify those personal details. They will then ask you to download an app or click on a link and then share with them your OTP and PIN to avail of the deferment. But once you do it, your money will be siphoned out of your bank account. They will send you a message with a link pretending to show you a location or a heat map of COVID-19 positive patients near you, or even say getting access to unemployment fund. Chances are, out of fear, you click on the link or even download the app. But once this app is installed, your smartphone becomes remotely controlled and people can have access to your OTP PIN and all your personal data that is stored on your phone. Some fraudsters may even create dozens of similar sounding UPI IDs to try and trick you into donating for so-called COVID-19 patients or charities.
Hello and welcome to Budget Day coverage live on India's #1 business channel, ET Now. In less than an hour from now, the Finance Minister would be standing on the floor of the Parliament and presenting the first budget of the decade.
I present the budget for the year 2021-2022. To ensure that the economy is given the required push, our BE estimates for expenditure in 21-22 are 34.83 lakh crore.
आज के बजट में आत्मनिर्भरता का विजन भी है और हर नागरिक, हर वर्ग का समावेश भी है।
Good evening and welcome to this edition of Budget 2021, Vaccine for Growth. I'm Avan Dubash. Well, a slew of announcements and it looks like the budget certainly pleased a lot of the market men. Just going to walk you through some of the top headlines of Budget 2021 in Fatafat mode. Well, first up, the Finance Minister certainly delivered what was described as a vaccine for growth. The FY21 fiscal deficit is seen at 9.5%, with the fiscal deficit for FY22, the fiscal for FY22 pegged at 6.8%. The FY22 divestment target is pegged at 1.75 lakh crore rupees. We'll have to wait and watch whether or not that's a tall target for the government to achieve. No change in the income tax slabs, no COVID cess, and that really seems to have pleased the street today. A farm cess of 2.5 rupees per litre on petrol and 4 rupees per litre on diesel has been imposed. The PSB recapitalization, which was much awaited, and that has been pegged for FY22 at 20,000 crore rupees. Meantime, the government has hiked the capex as well to 5.54 lakh crore rupees in FY22. Another big move in the budget that has been welcomed very well by market men is that FDI in insurance finally has been hiked from 49% to 74%. With all eyes on the vaccine rollout and the focus on healthcare infrastructure, 64,180 crore rupees has been allocated to healthcare, with 35,000 crore rupees for the vaccine rollout. It's good news when it comes to startups as well, as the startups tax breaks have been extended now for 1 more year. And finally, for the commodities world, the government has cut the import tax on gold as well as silver. Those were some of the top headlines when it comes to the union budget. And amid the massive expectations of the COVID-hit economy, the Finance Minister Nirmala Sitharaman has presented the budget for 2021-22. It primarily focused on 6 pillars, including healthcare, agriculture, infrastructure, among others. And in a relief for the common man, the tax slabs remained unchanged. We got a word from Dr. Rajiv Kumar, the Vice Chairman of the Niti Aayog, on the fiscal deficit as well as the reforms within the agriculture sector. Let's listen in.
In conversation on ET now on the budget day is Mr. Rajiv Kumar of the Niti Aayog. Sir, appreciate you taking your time out and speaking with us today at ET now. This is Ruchi Bhatia. Let me first ask you on the fiscal deficit. This is what, even you had said that as we're coming out of the COVID times, we should look to spend in productive areas. How convinced are you with the areas that the Finance Minister has chosen this time around, whether it is roads, railways, whether it is infrastructure-related developments as well, even as she has breached the fiscal deficit target for this year by 9.5% and for next year at 6.8%?
Yes, I must compliment the Finance Minister. She has responded to the times. She has responded to the situation very bravely, very boldly, and gone for growth and gone for extra spending, not putting to rest everybody's caution about the rating agencies, etc. And has the 9.5 for 21 fiscal 21 is a fait accompli because of the COVID and the loss of revenue, etc. But for her to go for a 6.8% fiscal deficit for 21-22 and spending a very large part of it on physical infrastructure is absolutely amazing. And the capital expenditure, direct capital expenditure, rising by 34%. From 4.12 lakh crore to 5.54, but additional 2 lakh crore being given to the states, so that actually the increase will be more than 70% in capital expenditure. Unprecedented, but really what the country and the economy needed at this time, because this will crowd in private investment. This will tell the private investors that the government is interested in growth and is interested in providing the kind of infrastructure and logistics and energy that the private investor needs. So I think all kudos to the Finance Minister for having given this very bold and a very courageous budget, but which is really responding to the times that we are in today.
Right. I would say that the markets definitely have heaved a sigh of relief that there are no, there's no COVID cess that has been imposed. In fact, Finance Minister being very watchful on that front. She's not raised any taxes. However, in what is going to pinch the common man, there is an announcement of a farm cess of 2.5 rupees per litre on petrol and 4 rupees per litre on diesel. Now, this is something that is going to pinch the common man. I want to understand from you if you feel that at a time like this there should have been some sort of a relief given into the common man as well, and do you believe that this farm cess on fuel prices is going to be inflationary?
Well, I mean, for the common man, the Finance Minister has done a number of things in this budget. I mean, I am quite taken aback by the announcement that all senior citizens above 75 years of age will not have to file tax returns at all if they got only interest and pension incomes, and I think that's a big relief. I think there is also a announcement of 35,000 crore for expenditure on COVID vaccine, and that is going to benefit the common person. And also I think the fact that No tax rates have been increased at all on the direct tax side. That's been left untouched. Plus also you have the entire faceless tax assessment mechanism now taking hold. I think the common man will benefit a lot. Plus also the extension of the loan for affordable housing being extended for 1 year, also for affordable housing projects. I think all of those will benefit the common person. On the cesses for agricultural, the agricultural cess, I don't think it will be inflationary because the global oil prices remain soft and are expected to remain soft going forward because of the global uncertainties. And some of us will have to bear the cost of the government having to spend a lot more and ramping up the expenditure, total expenditure, and the capital expenditure so much. But I don't think this will have an inflationary impact at all. And by the way, the 18,000 crore given for public road transport will again improve the public ease of living and improve the air quality, etc. So I think in many ways this is a budget which will benefit the common person and not impose any extra burdens at all, and will benefit the employment side maximally because of the hike in capital investment and infrastructure, which have large multiplier effects. So I think you should look forward to an employment enhancing scenario in the year going forward, plus also a longer term benefits for the economy by better infrastructure and better energy scenarios.
I also must you did refer to the vaccine allocation as well. I must ask you that at a time when the finance minister has put out a healthcare budget outlay of close to 2.23 lakh crore rupees, the allocation for vaccine is just about 35,000 crore rupees. Does that mean that even as India looks to inoculate the entire population with the vaccine, we are likely to see that the burden once again is going to be put on the common man, and each and every one will have to get their own vaccines? The government is going to fund the vaccines only for the frontline and the healthcare workers?
I am not sure at all of that, because while announcing that amount, the health minister did say that she will continue to monitor this and make more funds available as we go along. So it's an open-ended budget allocation for the vaccine. But you must appreciate the fact that the health allocation has gone up by 137%, by 2.23 lakh crore, and this does not include the announcements for better water and for Swachh Bharat Urban Abhiyan, which is for both are more than 2 lakh crore, admittedly over 5 years, but those sums which will be spent this year will also should be included in the health budget. So and the improvement in the health infrastructure, the nurses commission being tabled, so that the improvement in all the availability of the health professionals. I think overall, therefore, she has recognized the need for improving the public health infrastructure and made a massive allocation for improvement of health and wellness centers, of all the other primary centers, etc., across the country. So I think.
All right, on that note, let's take a quick break right here on the show. Be right back with some big voices from the political arena, corporate India, as well as market men as to how they read into the budget.
Make sure to check the fund details twice yourself from authentic sources before you actually donate any money. Stay home, stay secure, be alert. Times Network is fighting fear with facts.
Hi.
Hi.
Welcome back.
Thank you.
Coffee?
Yes, long day today. Very tired.
I'll just get it.
Thank you. Hey, you did not pick up Arav today?
His teacher texted.
Huh?
He has extra classes today.
Thank you. Really? Oh, is he still angry?
He is a little.
I think $1,000 के लिए ना we scolded him too much यार.
Ravi, बात 1,000 रुपए की नहीं है. He needs to learn.
I know. You know, I was actually thinking उसके लिए एक बैंक अकाउंट खुलवाते हैं. What do you say?
Bank account? Why?
See, he's been hinting एक महीने से that he wants pocket money. So I was thinking, why not?
Ravi, he just spent 1,000 rupees on a random app. That too without asking us. And you want to give him more money to spend?
I know, Baba, but instead of punishing him, maybe we can teach him this way.
Teach him what? कि और पैसे कैसे उड़ाते हैं?
He'll have his own card, and he'll learn early on that if he spends, he need to return it also. It's a good idea. Think about it.
Okay, fine. We'll try it. But you're his guardian, not me.
हाँ, मेरा बेटा है. जल्दी समझ जाएगा.
अच्छा, वो जो तुमने आज तक नहीं दिया.
A wise decision is wise only if you pass on the advice. Teach your children the value of investing and compounding early.
The world has been forced into a standstill. Every day, the battle becoming more uphill. Now, more than ever, it's easy to believe all the naysayers who say the Indian economy will struggle to recover. All the doomsdayers who think it's time to look for an exit strategy and cower. Well, no one believed India could win the 1983 World Cup. But we did. No one believed a man from rural India could develop an affordable sanitary product. But he did. No one believed India could send a satellite to Mars. But we did. Every single time we were backed into a corner, we came out swinging against all odds. Despite every obstacle, it's time again for a rematch. You ready for it?
He knows the market trends today and has mastered them over the last 15 years.
Bringing greed and fear and business analysis together, I think that's what day in day out Nikunj does.
He tracks the biggest business stories that impact the growth of your wealth.
Forces you to come up with a specific recommendation and not just give general answers.
His keen market sense simplifies financial jargon to make you market ready.
A market opening without Nikunj Dalmia, A, is clearly unthinkable, and B, it will clearly be less enthusiastic.
He is most trusted by market veterans and India Inc. alike.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing.
Nikunj, I must say you have good memory, or you're refreshing up from past recordings.
This is a sensitive question, a question which is absolutely critical.
Let's focus in then on the ET Now news break, which has been confirmed as the Finance Minister Nirmala Sitharaman announced the voluntary scrappage policy for old vehicles. We caught up with Nitin Gadkari, the Road Transport and Highways Minister, to understand his take on what exactly this means.
Within 15 days, we are going to detail declaration of this policy. After 15 days, we will give it to you. Presently,
this policy is very important for the country. Present turnover of the automobile industry is 4,50,000 crore. But I am expecting within a year it will go up to 6 lakh crore. And our export is 1,45,000 crore. Some of our two-wheeler industry like Bajaj, TVS and Hero, their export is 50%, more than that. So it is 100% a great thing that because of the raw material, steel, aluminium, copper, then rubber, plastic. Now because of scrapping policy, it will be available with low cost. So that is going to reduce the cost of the components. So 100%, the all important brands in the world's automobile brands are present in India. So they are going to reduce their manufacturing cost. And 100% now we are making lot of research, particularly for lithium ion battery. We are now supporting the air ion and steel ion or aluminum ion technology.
You have a meeting with the Prime Minister as well next week.
Yes, we are organizing a meeting with the Mr. Raghavan and Niti Aayog, and we are encouraging the new startup and our IIT institution and other people to make the option for lithium ion battery. So after that, India is going to be a #1 manufacturing hub for electric vehicles.
It looks like it is going to happen very soon with Tesla also coming in. This is going to be the first time that we are speaking with you about Tesla. So I must take a question on that as well. Given the fact that so many incentives are being given for the auto sector, what kind of welcome do we expect for Tesla as well?
Actually, first of all, automobile sector is the #1 sector in the country which is creating maximum employment potential. In the MSME, the small vendors are getting great contribution from the sector. Now you just take the example, the finance minister has already increased the taxes on the automobile components which are imported. So naturally, Make in India and Made in India movement that will be going to be push up by this decision, and 100% is going to create more employment potential and adding growth in our country.
I must also ask you about the infrastructure sector. So you've also been forefronting a lot of developmental related activity for roads and highways, and we have seen a big outlay being given to the sector. In terms of the activity from here on, what can we expect, and more importantly, how critical it is going to be to give the right kind of push during these times as we're coming out of COVID?
Actually, it's a great thing for my department that considering the problem because of COVID-19, our average was 28 kilometer per day for last year. Now this year, up to the end of January, our construction average was 28 kilometer per day. Already we completed. And by February and March end it will be a final data. So I am confident we will be 40 kilometer per day. So it is a great achievement as far as my department is concerned. It is not my credit, it is credit.
It is of course your credit as well.
It's for my engineers, my officers, contractors, all stakeholders. They are working day and night for that. And now the budget is increased from 91,000 crore to 1,18,000 crore. So 100%, I always telling to the people that if suppose 1 rupee is given by government, we will add 9 rupees from the private sector. We are raising funds from it and we will make the impact of 10 rupees. So presently, already India is changed. We are not only working in Kerala, Bengal or in every state you go to and visit to anywhere, everywhere we are working. And I am confident that within 5 years, we will get the infrastructure of world standard.
Absolutely. In fact, one of the announcements that has been made today is that of a dedicated development finance institution as well. How critical will be this body for infrastructure related push? Also, at a time when we already had bodies like IIFCL, where did they fall short and why do we need another body like that?
Actually, in the USA and particularly the West and the European countries, they have development banks, particularly infrastructure development banks. On that line, this institution is going to start. So their outlay, their government is giving them 20,000 crore as equity, and they are expecting to finance for 5 lakhs crore. Only the thing that we need to their decision-making process. We are expecting that it should be fast, time-bound, and result-oriented. So 100% because of this institution, new. 100% it can be a great achievement for the particularly the department who are working on infrastructure, it is a great advantage for all.
My last question to you, sir, and I have to ask you about the monetization of the toll roads for NHAI as well. You have been making a case for it for a very long time. How much money are we planning to raise with the monetization of these toll roads, and what is the time frame that we're looking at as well?
Actually, we don't have any problem. Money is not the problem. You take it from me that we are raising fund, people are giving response, the insurance fund, pension funds. We have different hybrid model, hybrid annuity model, PPP model, BOT model, TOT model. Now we are making that different type of models we are making, and still we are thinking on the line that which type of model we can make, and we monetize the road. And we have got tremendous capacity. Even Delhi-Mumbai Express Highway,
right.
We are spending 1 lakh crore. We are going to monetize that road. We will get it money from it. We don't have it.
All right, on that note, appreciate you taking your time out and speaking with us today at ET Now. That was the Union Minister for Road, Transport and Highways, Nitin Gadkari, in conversation with ET Now.
That's a view coming in from Nitin Gadkari on the voluntary scrappage policy. On that note, let's slip into another break right here on the show. Be right back.
From savings accounts to
us.
Beautiful question. Very good insight.
A name synonymous with Indian stock markets. Nikunj Dalmia on ET Now.
With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge.
Lockdown, there is someone playing on your fears and emotions. Online fraudsters. Let me share 3 ways in which they exploit your fears and trick you. They pretend to be bank telecallers and offer to help you secure a loan deferment as put out by the RBI. They will have your personal information and will try and gain your trust by asking you to verify those personal details. They will then ask you to download an app or click on a link and then share with them your OTP and PIN to avail of the deferment. But once you do it, your money will be siphoned out of your bank account. They will send you a message with a link pretending to show you a location or a heat map of COVID-19 positive patients near you, or even say getting access to unemployment fund. Chances are, out of fear, you click on the link or even download the app. But once this app is installed, your smartphone becomes remotely controlled and people can have access to your OTP PIN and all your personal data that is stored on your phone. Some fraudsters may even create dozens of similar sounding UPI IDs to try and trick you into donating for so-called COVID-19 patients or charities. Make sure to check the fund details twice yourself from authentic sources before you actually donate any money. Stay home, Stay secure, be alert. Times Network is fighting fear with facts.
Hi.
Hi, welcome back.
Thank you.
Coffee?
Yes, long day today. Wait,
I'll just get it.
Thank you. Hey, you did not pick up Arav today?
His teacher texted.
Huh?
He has extra classes today.
Thank you. Really? Oh, is he still angry?
He is a little.
I think $1,000 के लिए ना we scolded him too much यार.
अभी बात 1000 रुपए की नहीं है. He needs to learn.
I know. You know, I was actually thinking उसके लिए एक बैंक अकाउंट खुलवाते हैं. What do you say?
Bank account? Why?
See, he's been hinting एक महीने से that he wants pocket money. So I was thinking, why not?
Budget. The markets also have given it a thumbs up. In conversation with ET Now, Secretary Expenditure as well as Secretary Deepam, Finance Minister's A-team. So I appreciate you taking your time out and speaking with us today at ET Now. Mr. Somanathan, let me first come to you and then I'll of course be going to the Deepam Secretary as well. There's a big push towards infrastructure in this budget. We've seen the highest ever spending program or an outlay being done of close to 35 lakh crore rupees. I want to first begin by understanding from you, how hopeful are you that this is the right time for this push? Finance Ministry has been saying for long that we will push the accelerator when it is going to mean the most for the economy. Is this the right time? And how hopeful are you that this is really going to mean a lot for the economy going forward?
First, I think it is almost certainly the right time because the pandemic is receding. And we have cases coming, the active cases are coming down. We have the vaccination program rolled out. I think this is the time when we can now begin to look at reviving the economy without having to look behind our back all the time for the pandemic. So I think this is the time, timing is right. And I think the amount of resources that the central government has committed, which is basically a 34.5% increase in capital alone, and an overall increase of more than 4 lakh crores in government expenditure, most of it going into schemes and capital expenditure. I think this push, 5.5 lakh crores is about 2.75% of GDP.
Right.
And that is not an insignificant amount. The increment alone is more than 1 lakh crores. So I think we are likely to see a pickup of activity in a number of infrastructure. We're already seeing it. And as you may know, we have started pressing the accelerator from November.
Right.
In fact, in November, the capital expenditure year on year was up 270%. So we're beginning to see results. I think the timing is good and fingers are crossed, and let's hope that
I must also ask you, because the IMF is predicting that for next year we will grow at 11.5%. The economic survey is pegging growth at close to 11%. But many people have a concern because this is a big stimulus push. It will also be inflationary in its impact. Do you concur with that view?
I don't. Because I'll tell you two reasons why I don't. First, we are giving this infrastructure push at a time when there's a lot of spare capacity in the economy. There are sectors where there is not, for example, automobiles and so on. But many sectors of the economy are working well below their capacity, particularly the construction industry. If you look at real estate, if you look at construction, there's a lot of absorptive capacity for more activity.
Right.
And secondly, there is unemployment. There are unemployed resources, both human and material and financial. So at this time, a stimulus of this kind is unlikely to be inflationary.
Right. Let me also, go and speak with the Deepam Secretary as well. Mr. Pandey, up until now, we were thinking that the divestment target is going to be anywhere between 2.5 to 3 lakh crore rupees. Are you relieved that the target is much more achievable this time around?
No, I think the budget itself is on a very fair principle of achievability. I think if you really look at the tenure, the whole tenor of the budget, it's basically the expenditure numbers, the receipt numbers. They are really pegged on achievable thing rather than just plugging the gap. And I think this is quite an achievable target.
While you're saying this is an achievable target, you also have a pipeline in front of you and a PSU privatization policy that has been cleared as well. Help us understand, as far as the PSU privatization policy is concerned, how are we dividing the strategic and non-strategic sectors, and when will we start really moving as far as the strategic and the privatization plan as well?
See, as you're aware that, we had actually announced big ticket disinvestments, and they were well on course. But for COVID, I think there was a delay, and the delay was practically, based on request of the bidders, because for a lot of time, we had travel which was not available. There were also a lot of other issues. I think we are back on the track, so the transactions have resumed. Now we are head up on those transactions. Certainly they can, in the beginning of the year, in the first half of financial year, we can close those transactions. And simultaneously that the new pipeline will be created, and the new policy which Honorable Finance Minister has announced is basically, the 4 broad sectors and a bare minimum presence. And the other, which is away, the non-strategic sectors, it could be, all of them can be privatized, but definitely there will be a sequencing based on the market interest, and that I think Niti Aayog will start the work right away.
I must also ask you, because banks are to be privatized, general insurance companies to be privatized, and also the big behemoth LIC IPO as well that will be in the offing in FY22. How will you look to time all these products, because that is going to be critical also at a time when we've seen that private sector has raised a lot of money. The government's disinvestment drive has really stuttered. So what will you do differently this time around, and how will you ensure that this time we really walk the talk on disinvestment, asset sales, privatization, because we've also been watching it very carefully?
One thing we have, as Honorable Finance Minister stated very clearly, our focus is on strategic disinvestment, which is basically privatization, and not really, trying to do the minority stake sale and all. So that's the one big picture. The certain transactions have been named, Honorable Finance Minister mentioned in this speech. Then there will also be, and these are big ticket, large transactions, certain more names would also be added. And the market interest is also reviving in these markets, in the disinvestment market. So we are hopeful that it will be carried on. As regards LIC IPO, it was announced by Honorable Finance Minister, and the legislative amendment for LIC are being carried in this session along with the Finance Act. The same thing is about the IDBI Bank. Right. IDBI Bank is, the disinvestment will be facilitated through a legislative amendment which was needed, which is also a part of the Finance Act. So we won't be wasting any further time on making legislative amendment, because they're being introduced as a part of the Finance
Act itself. Right. Let me shift focus and come to you. As far as the healthcare outlay is concerned, pretty significant, but many people question the outlay that has been made for the COVID-19 vaccine, just about 35,000 crore rupees, and which coming in from. Are you going to ask people to go and vaccinate themselves, and the government is going to be taking the burden only for frontline and healthcare workers?
I think you may have noted that the Finance Minister said in his speech that I will provide more if required.
If needed.
See, the cost of vaccination it's a matter of speculation right now. 2 doses of the vaccine currently cost about 400 rupees, and then with an incidental cost of about another 160. At about 600 rupees, you can do vaccination of 1 person. So 35,000 is actually quite a lot. It is enough to vaccinate roughly 40 crore people out of a population of 130 crores. Now, beyond that, we don't have visibility on how many more will need to be vaccinated in order to achieve the levels of immunity that are necessary. The Health Ministry has told us that initially we need to plan for a vaccination program till September, and beyond that the evolution of the pandemic, does it require universal vaccination or is that enough, and what will be the prices of vaccines then? It might fall if you get more vaccines. So there's a lot of speculation. So I think 35,000 crores is a reasonable estimate to start with, but we are committed to increasing it if it becomes necessary.
Quite interesting. And while we're talking about the vaccination outlay, a lot of people are giving a thumbs up to this budget in terms of the transparency as well. Secretary Deepam also said that in terms of the numbers this time around, it's pretty pragmatic. The finance minister making it very clear in her speech that the funds from NSSF will not be going into FCI anymore. How tough was that exercise? Because the government has been saying for some time that we will be making it very clear which are the off-budget items. But this time around, I think you've really walked the talk on that front.
Yeah, we have done two things this year. First, you know that this year we ran the Pradhan Mantri Garib Kalyan Anna Yojana for 8 months, which is 800 million people being provided with free food grains for 8 months. That alone cost us about 1,35,000 crores. So what we have provided in the revised estimates this year is not only the original provision, not only the additional provision for the Anna Yojana, but also repayment of some of the old NSSF loans that FCI had taken. So that's why the provision is about 4.23 lakh crores is the budget provision in the revised estimates. Next year, we are bringing the entire estimated food subsidy onto the budget. So there's no incremental NSSF going towards food subsidy. Much of the past NSSF has been repaid. And going forward, the intention is that we will use the budget to pay for food subsidy, and we will not use extra budgetary resources. And we've actually now onboarded it completely for next year.
That's quite interesting. You also, said that while we're looking to increase the fiscal deficit for this year and next year, as far as the states are concerned, the 15th Finance Commission has given them a 0.5% leeway, depending on the power sector reforms that they undertake.
In addition to a 4%.
Yes, in addition to a 4%. What is the appetite? At the end of the day, we're seeing that states are really, really stuttering as far as power sector reforms are concerned.
Yes, but it is also an area where reform is absolutely necessary. So I think the Finance Commission has some specific recommendations, and I think the Commission has done a very reasonable job of coming up with something that is challenging but achievable. And I think we need to go with the Commission's recommendation. And if the states do not wish to undertake those reforms, then that part of the fiscal deficit is something that they won't be able to access. So the incentive for the states to do these reforms is very strong.
Right. Having said that, sir,
incidentally, this year we had a power sector reform incentive. We've already got 2 states that have done it.
Right.
So we've actually released money to 2 states on doing the direct benefit.
That still have
That's true, but it shows that a beginning can be made, even with a smaller incentive. And this incentive is bigger than what we had given.
So here's hoping that the states actually walk the talk. I'm trying to speak with a whole host of other state finance ministers as well, and I will be posing that question to them. Let me also sir, shift focus and once again get back to the privatization drive and the disinvestment drive. As far as BPCL, BEML, Shipping Corp, some of these companies that are in the pipeline, as far as BPCL is concerned, the market was expecting a lot of big names to come in. Has that, in a way, hampered the government's own confidence with respect to the privatization process? Because the names that have come in for BPCL are not the kind of names that we were expecting, the big ticket names that we were expecting in the first place.
See, for the confidentiality of comparative bids, we don't actually name. I think only the media is speculating who has come in and who has not. So I would refrain from doing so, because as you would see, we would like the most competitive bids. And all I can say is there are multiple bids, there are very serious bidders. The bidders, $10 billion is the entry barrier, so you can imagine the $10 billion is only a serious bidder would come in, and there are multiple bidders. Only thing, I would not be able to name them, because I think there has to be a real competitive bid where no one bidder should know who else is bidding.
I must also ask you about the asset monetization program as well, the pipeline that has been announced in the budget. What will you do to ensure that companies are able to move forward with the asset monetization plan, and how will you ensure that there is success also that we get when we do move in this process finally?
I think that's a very important step that I think Honorable FM has announced as an institutionally, as moving forward. A few transactions have taken place. You have seen the TOTs by the NHAI. You had power grid InvITs. You have got also the InvIT from NHAI, where certain toll roads are being bundled into. But there is to be a much larger thing, and Honorable Finance Minister did announce specific things that we are working on. Niti Aayog is closely monitoring it, this core group monetization. The MOU system, which is there with the public sector CPSCs, which the administrative ministries do.
Which you've now incorporated in the MOU.
Specifically, asset monetization plan of the CPSCs have been incorporated as one of the important things which they will be measured against, because that also determine their performance-linked incentives. So this is there is an asset monetization plan of the CPSCs, followed by a close monitoring by the core group on asset monetization headed by Cabinet Secretary.
So
the structures are in place. I think with this push, I think we tend to see, because there is a lot of funds, lot of other investors who are waiting for this mechanism to do it. And not to forget that we have also been able to do a fair amount of regulatory easing on that. There is a SEBI listing which has SEBI approvals which have taken place. So a lot of learning has gone down the line. I think now the things will be much accelerated.
And just one thing to add to what he said.
Sure, sir.
The Honorable Minister also announced the creation of an SPV for land monetization.
Yes.
Because we recognize that sale of land is not a typical asset, and there are certain technical skills required to do it successfully. So that SPV will also help us with monetizing government land.
Which is also going to be very, very important. My last question to you, sir, before I let you go, and since you said that as far as LIC is concerned, we've put the necessary legal amendments that have to be made as a part of the Finance Act, how soon can we expect the listing of LIC, and how much will the government be looking to offload?
The listing of the LIC would obviously be taking place during FY 21-22. Right now, the embedded value is to be, worked out, and for that, Deepam has appointed the actuary firm, which will be taking up the independent actuaries firm to do the embedded value valuation. And with the necessary passing of the legislative amendment, we will be on course to achieve it in FY 21-22.
All right, sir. On that note, appreciate you both taking your time out and speaking with us today at ET Now. Thank you very much.
Thank you.
All right, there you have it, hearing it out from the Expenditure Secretary as well as the DPAM Secretary, talking about the power reforms, what has been taken with respect to the stake sale, the strategic divestment, as well as the budget resources for the food subsidy. And I just want to let all of our viewers know that the Delhi studios have ensured that there has been social distancing norms that have been adhered to during the recording and the filming of that live interview. Let's take a very quick break on that note. Be right back.
Just spent 1,000 rupees on a random app. That too without asking us. And you want to give him more money to spend.
I know, Baba, but instead of punishing him, maybe we can teach him this way.
Teach him what? कि और पैसे कैसे उड़ाते हैं?
He'll have his own card, and he learned early on that if he spends, he need to return it also. It's a good idea. Think about it.
Okay, fine. We'll try it. But you're his guardian, not me.
हाँ हाँ मेरा बेटा है जल्दी समझ जाएगा
अच्छा वो जो तुमने आज तक नहीं दिया
A wise decision is wise only if you pass on the advice. Teach your children the value of investing and compounding early.
The world has been forced into a standstill. Every day, the battle becoming more uphill. Now, more than ever, it's easy to believe all the naysayers who say the Indian economy will struggle to recover. All the doomsdayers who think it's time to look for an exit strategy and cover. Well, no one believed India could win the 1983 World Cup. But we did. No one believed a man from rural India could develop an affordable sanitary product. But he did. No one believed India could send a satellite to Mars. But we did. Every single time we were backed into a corner, we came out swinging against all odds. Despite every obstacle, it's time again for a rematch. You ready for it?
He knows the market trends today and has mastered them over the last 15 years.
Bringing greed and fear and business analysis together, I think that's what day in, day out Nikunj does.
He tracks the biggest business stories that impact the growth of your wealth.
It forces you to come up with a specific recommendation and not just give general answers.
His keen market sense simplifies financial jargon to make you market ready.
A market opening without Nikunj Dalmia, A, is clearly unthinkable, and B, it will clearly be less enthusiastic.
He is most trusted by market veterans and India Inc. alike.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing.
Nikunj, I must say you have good memory or you're refreshing up from past recordings.
This is a sensitive question, a question which is absolutely critical to us.
No, beautiful question.
Very good insight.
A name synonymous with Indian stock markets. Nikunj Dalmia on ET Now.
With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge.
Welcome back, and I'm sure a lot of our viewers are wondering how the budget finances are going to impact their wallet. Well, if you've got any questions or queries, clear the air. In 5 minutes from now on our Money Show special, you can decode the impact of the custom duty, the impact of yields, which investments are going to help you save tax. Our phone lines are going to be open at 5 p.m. only for an hour, so do grab the opportunity. You can dial in on 675 49456 or simply shoot us an email on themoneyshow@etnow.tv. Grab the chance, make the right investment decisions for FY22. We have Lakshmi Iyer of Kotak Mutual Fund, Alok Agarwal, partner at Deloitte India, and Manish Jaisingh of Deloitte India, who will be joining in to answer all your questions. And on that note, we'll wrap it up then right here on the show from the entire team that put the show together. Thanks so much for watching.
From savings accounts to
Even in this time of lockdown, there is someone playing on your fears and emotions. Online fraudsters. Let me share 3 ways in which they exploit your fears and trick you. They pretend to be bank telecallers and offer to help you secure a loan deferment as put out by the RBI. They will have your personal information and will try and gain your trust by asking you to verify those personal details. They will then ask you to download an app or click on a link and then share with them your OTP and PIN to avail of the deferment. But once you do it, your money will be siphoned out of your bank account. They will send you a message with a link pretending to show you a location or a heat map of COVID-19 positive patients near you, or even say getting access to unemployment fund. Chances are, out of fear, you click on the link or even download the app. But once this app is installed, your smartphone becomes remotely controlled and people can have access to your OTP PIN and all your personal data that is stored on your phone. Some fraudsters may even create dozens of similar sounding UPI IDs to try and trick you into donating for so-called COVID-19 patients or charities. Make sure to check the fund details twice yourself from authentic sources before you actually donate any money. Stay home, stay secure, be alert. Times Network is fighting fear with facts.
Hi.
Hi, welcome back.
Thank you.
Coffee?
Yes, long day today. Wait,
I'll just get it.
Thank you. Hey, you did not pick up Arav today?
His teacher texted.
Huh?
He has extra classes today.
Thank you. Really? Oh, is he still angry?
He is a little.
I think $1,000 के लिए ना we scolded him too much here.
Ravi, बात 1000 रुपए की नहीं है. He needs to learn.
I know. You know, I was actually thinking उसके लिए एक bank account खुलवाते हैं. What do you say?
Bank account? Why?
See, he's been hinting एक महीने से that he wants pocket money. So I was thinking, why not?
Ravi, he just spent 1000 rupees on a random app. That too without asking us. And you want to give him more money to spend?
I know, Baba, but instead of punishing him, maybe we can teach him this way.
Teach him what? कि और पैसे कैसे उड़ाते हैं?
He'll have his own card, and he'll learn early on that if he spends, he need to return it also. It's a good idea. Think about it.
Okay, fine. We'll try it. But you're his guardian, not me.
हाँ, मेरा बेटा है. जल्दी समझ जाएगा.
अच्छा, वो जो तुमने आज तक नहीं दिए.
A wise decision is wise only if you pass on the advice. Teach your children the value of investing and compounding early.
The world has been forced into a standstill. Every day, the battle becoming more uphill. Now, more than ever, it's easy to believe all the naysayers who say the Indian economy will struggle to recover. All the doomsdayers who think it's time to look for an exit strategy and cover. India could win the 1983 World Cup. But we did. No one believed a man from rural India could develop an affordable sanitary product. But he did. No one believed India could send a satellite to Mars. But we did. Every single time we were backed into a corner, we came out swinging against all odds. Despite every obstacle, it's time again for a rematch. You ready for it?
He knows the market trends today and has mastered them over the last 15 years.
Bringing greed and fear and business analysis.
And a very good evening. You're watching the TMS Budget Special Edition. I'm Mubina Kapasi. This is going to be your opportunity to connect with us and our series of experts on all the questions that you have on the Union Budget 2021. Everything that FM Nirmala Sitharaman has announced, how it would impact your wallet, your investments, and of course, more importantly, your tax bill. Today's show is going to address the three components of taxation. One, direct tax, and of course, all the incentives for home buyers. The second, indirect tax, and that's essentially understanding what's the new custom duty and excise duty structure. Is it going to increase the prices of any products? And finally, of course, personal finance and your investments, especially given the fact that after the budget was announced, we saw a sharp spike in bond yields. So how exactly would that, impact the different categories of, more specifically, debt fund holders? Because usually when we see volatility in bond yields, it does tend to directly impact debt fund holders. Different durations of debt fund holders, because remember, under the umbrella of debt funds as well, we have several kinds of, categories. So we'll be understanding that and more, and, sort of just get you a gist of how you can position yourself in the proper manner to create wealth in the long-term direction. So first up, let me tell all our viewers that our phone lines are open. You can call us on 6754-9456. That's our telephone number. I'll repeat it once again, 6754-9456. And we will get your questions answered by our series of tax experts, as well as, of course, a special guest for today. But first up, let me tell you then about some very interesting trivia about the budget this time around. Firstly, did you know that this is in fact Finance Minister Nirmala Sitharaman's shortest budget? Her first budget was the interim budget of 2019, which was announced in July. And that one really was a medium-sized budget in terms of the duration of her speech from the time that she stood up to present the union budget. Then came the Feb 2020 budget, which was definitely the longest, not just during her tenure, but the longest we've seen in an extremely long time. And this one was a nice, short and crisp budget. Secondly, of course, this budget went completely digital in the sense that it was not read from a usual Bahi Khata, but on a tablet, keeping in mind, of course, the direction that the country, the world is taken. And of course, secondly, the fact that we are in the midst of a pandemic. So let's start off first by introducing on the show Lakshmi Iyer of Kotak Mutual Fund. Lakshmi, thank you so much for taking our time today on the Money Show to talk to us about the budget and everything that the retail investor, the common man, should watch out for. So Lakshmi, to start with, before we delve into the details, let's understand, what did you think of the budget, and the various provisions that the FM laid out?
Hi, good evening, Mubina. So firstly, there were a lot of expectations embedded into the budget, depending on which lens were you looking at the budget from, whether as a retail investor, as an Aam Aadmi, as an institutional investor, as a foreign investor. I think on most of these counts, the budget has been pretty, comprehensive. It has been quite pragmatic, I would say. The assumptions have not really been too very stretched, and pretty much every sector which is a potential I would say, which has the potential to show a significant upside in the aftermath of the COVID hibernation phase. I think all those sectors have received enough attention. So I think it was a fairly pragmatic budget, and as you rightly observed, it was delivered in the shortest span of time compared to the previous budget timings. So I think all in all, reasonably okay is what we would, sense it from an investor standpoint.
Lakshmi, let's talk about then, we in fact had just spoken to you last Friday to sort of help our viewers brace themselves on what they can expect and what are the portions of the union budget that they should watch out for to sort of decipher what will be the impact on their their finances. So let's talk about that borrowing number and the fiscal deficit number. For the equity markets, of course, I think they were pretty pleased with that high fiscal deficit number because it essentially means that the government will be spending money and they will essentially be, doing what they need to do to, push forward for growth, etc. However, how would you read into this fiscal deficit number with respect to the debt mutual fund holders? A lot of retail investors invest in a series of different duration debt funds. So what would be the likely impact? Because as soon as, when this number was announced, we did see a sharp spike in bond yields. So explain that to, all the retail debt fund holders.
Absolutely. So I think from a pure layman's perspective, there is a revenue pool for Government of India and there is an expenditure. The net number is in the deficit, and which is what gets labeled as the fiscal deficit, because there is a shortfall in expenditure, and that shortfall in countries like India, for example, are financed or funded captively. What I mean by that is the Government of India actually comes to the markets to do its borrowing program, and which is what we call the government borrowing program. So today the announcement actually saw that cross borrowing, the total amount of money that the Government of India will borrow from the markets for FY22, that number came in at 12 lakh crore. Second thing, they also announced that they will borrow additional 80,000 crores for this financial year. Now, this financial year has 2 more months to go. The month which has just begun, which is February, and the month of March. So imagine in 2 months, the government is going to have 80,000 crores more of additional supply of government bonds. Now, that clearly spooked the bond markets, which is why we saw the yields rise almost 15 basis points or almost 1 rupee of correction we saw in bond prices at the longer end and of course at the mid end. So that has been the knee-jerk reaction. I think going forward, what it means for bond or retail bond investors who are investing via mutual funds, etc., is yes, today there has been a knee-jerk reaction. However, one needs to keep in mind that volatility is something which is going to be quite commonplace for bond markets going forward. We have an upcoming monetary policy by Reserve Bank of India on 5th of February. So wait and watch out and see if they have a game plan of how they are going to calibrate the supply. And most importantly, will the Reserve Bank of India continue its open market bond purchases? So they buy bonds from the market, and that is a source of demand. So I think volatility, yes, today after this move, you could see mark-to-market losses or negative returns on bond funds, but that's okay. As I said, if you are a long-term investor in line with your investment horizon, then these volatilities are obviously to be seen as opportunities.
Excellent. Well, you know what? We've got our very first caller as well now. We have Kamla Deepa calling in on the phone lines. Hi, Kamla. Thank you for calling in. What's your question for today?
I wanted to know how is it going to affect our yields from mutual funds, equity market or debt fund? How will the returns be?
Okay, all right. So, Lakshmi, I think you vaguely did answer the the question, but if you could just, for the benefit of Kamla, sort of reiterate what can she expect in terms of returns, in terms of yields from her debt funds?
Yes, so as I mentioned, if you're just talking about today's move, the yields on the bonds across the curve has moved up, which means the prices of these bonds have come down. So an immediate reaction, if you actually open your account statement tonight or tomorrow, is that for that particular day or a one-day movement, you will actually see a negative return. However, as I mentioned, in line with this, the overall portfolio yield also stands to increase. So your portfolio starts earning that higher yield from day one, and therefore it is very important. So if you put in money yesterday or day before yesterday, and you have a 1-year investment outlook, nothing of that changes after today's move. So that's the way I would look at it, from an immediate impact and from a slightly long-term impact perspective on your debt portfolio.
Okay, and I hope this essentially helps a lot of our viewers. I'm sure many of you all have this common question. If you want to know about any specific debt fund category as well, you can call us, like I mentioned. Okay, we already have another caller, Jitendra Kumar, who has a question once again on mutual funds. Jitendra ji, thank you for calling in. What's your question?
मेरा प्रश्न है, ये बजट के दौरान बॉन्ड यील्ड में काफी बढ़ोतरी हो गया है।
Yes.
और इससे डेट फंड काफी प्रभावित हो रहा है, तो इस समय क्या स्ट्रेटजी होना चाहिए बॉन्ड फंड में इन्वेस्टमेंट करने के लिए? किस तरह का बॉन्ड फंड में इन्वेस्टमेंट कर सकते हैं?
Okay, so yes, Lakshmi, Jitendra ji's question is very valid. कि किस category of debt funds में invest करना चाहिए? Also, let's keep in mind, like you mentioned in the earlier answer, RBI will make, what kind of actions will the RBI essentially do in the next week, and of course, Lakshmi, if you could reply in Hindi, please.
No, Meena, absolutely right. जितेंद्र जी, आपके जैसे लोग और कई सारे लोगों के ऐसे ही सवाल है कि आज के मूव के बाद क्या डेट फंड की क्या स्ट्रेटजी होनी चाहिए? And my answer is again no different from what I answered earlier. Please keep in mind your investment horizon. अगर आपके पास 1 साल या 3 साल की अवधि का पैसा है, तो आज की वोलेटिलिटी से आपको कोई फर्क नहीं पड़ना चाहिए, क्योंकि the bond yields जब बढ़ते हैं, द यील्ड जो पोर्टफोलियो की यील्ड है ना, वो भी बढ़ जाती है साथ में। तो इन फिक्स्ड इनकम पार्लांस हम जैसे बोलते हैं, पोर्टफोलियो की कैरी बढ़ जाती है, यानी YTM बढ़ जाती है। सो देयर इज नो रीजन टू गेट इम्पैक्टेड एडवर्सली आफ्टर टुडेज आउटकम. We will watch out as portfolio managers what will happen in RBI's monetary policy, और वहां और थोड़ा खुलासा होगा और उसके हिसाब से हम हमारी स्ट्रेटेजी प्लान करेंगे. But as an investor, as I said, please stick to your investment horizon, और ये जो volatility है उसको नजरअंदाज करेंगे तो overall portfolio planning के लिए ठीक रहेगा.
All right. Well, ladies and gentlemen, keep your questions coming then. Our number is 6754. It's been a while actually since we've started this call-in show, but 67549456. Okay, Lakshmi, actually there's another very interesting announcement that came in from the budget, and that is about the creation of an asset management company. We were expecting something like a bad bank that will be announced, which will essentially buy stressed assets or basically those securities and those companies that are going through obviously a tough time. Now there's an asset management company which is going to be announced. It's going to be like a framework which will be announced, which will buy all these stressed assets. So, how do you think this will essentially help maybe even a credit risk fund? How will it even deepen the corporate bond market, according to you?
So, there is a thought which is being, spoken about, and we saw glimpses of that in the budget today, where there will be a framework devised for buying actually investment grade. Now, bear in mind, and I think this is for the benefit of the viewers also, it is not necessary that every bond which is high in grade has necessarily got to be AAA. There are non-AAA bonds above investment grade which are reasonably good businesses in their respective domains. So I think today's move will also help the case or the cause for such category bonds and help build in or bring in more liquidity for such category bonds. And secondly, on your particular point, credit risk funds typically invest predominantly in the non-AAA or the under AA kind of assets, reasonably high grade. There is a strong case for spread compression between this category bonds and the AAA bonds. Of course, this is not likely to happen overnight, but we're talking about over a period of time, these announcements such as these, and as we see the walk the talk, we could see potential benefits of that coming into the capital markets for specifically this bond segment.
All right. Excellent. Well, folks, Unfortunately, we're a bit short in time. We've got lots of guests coming in right here on ET now as well to talk about the budget. So, Lakshmi, we're still getting so many questions in. We'll sort of get this interview going once again in the next week, for you. But thank you so much for joining us and, helping our viewers out with their questions and queries on the union budget. Folks, like I mentioned, you can always send in your queries on the Money Show at etnow.tv, and we will get them answered over the course of this 1 week. We'll take a very short break, but when we return, we are going to be addressing the all-important segment when it comes to union budget, and that is taxation. Well, here's a bummer. No big changes in the personal income tax slab, but there are a few tweaks, especially ease in tax compliance for all of us. So we'll be addressing that. We'll also, of course, take on board any question you may be having on income taxes right after this very short break.
Not together. I think that's what day in, day out Nikunj does.
He tracks the biggest business stories that impact the growth of your wealth.
Forces you to come up with a specific recommendation and not just give general answers.
His keen market sense simplifies financial jargon to make you market ready.
A market opening without Nikunj Dalmia, A, is clearly unthinkable, and B, it will clearly be less enthusiastic.
He is most trusted by market veterans and India Inc. alike.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing.
Nikunj, I must say you have good memory, or you're refreshing up from past recordings.
This is a sensitive question, a question which is absolutely critical to us.
No, beautiful question. Very good insight.
A name synonymous with Indian stock markets. Nikunj Dalmia on ET Now.
With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs. ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge.
Lockdown, there is someone playing on your fears and emotions. Online fraudsters. Let me share 3 ways in which they exploit your fears and trick you. They pretend to be bank telecallers and offer to help you secure a loan deferment as put out by the RBI. They will have your personal information and will try and gain your trust by asking you to verify those personal details. They will then ask you to download an app.
All right, hi everyone, and welcome back. You're watching a very special edition of The Money Show post the union budget. We are, of course, answering all the questions and queries that you may have. What will be the impact of the union budget on your finances, on your spendings, and more importantly, your tax bill? In fact, keeping it with tax bill, here's a bit of a bummer. There are no changes in the personal income tax slab. Usually, whenever there are any tweaks in the personal income tax slab, it is to the benefit. It essentially does involve maybe reducing the rate or, tweaking the slabs in such a way that overall our tax liability does reduce. But that has not happened this time around. Your tax slabs are as is. But there are several steps taken to reduce or rather ease the compliance with the income tax structure, especially for senior citizens who are more than 75 years of age. They are in fact now exempt from filing an income tax return, provided they have just a few categories of income. Then there's also, of course, the entire IT-80 or the Income Tax Appellate Tribunal process, which is going to be taken faceless. There are several other things. There are lots of stops available for affordable housing as well. Remember, there was that extra 1.5 lakh exemption available for, not an exemption, but a deduction rather, available for those individuals who take a certain category of home loan. So that was available only till 31st March 21. Now it's been extended by 1 more year to 31st March 2022. So several stops. We'll make sense of all of this and more. We have with us a very special guest, Alok Agarwal of Deloitte India. Alok, thank you so much for joining us today on The Money Show. So Alok, to start with, let's sort of make sense of everything that we have seen. The one thing we know for certain is no change in personal income tax slabs. But what else has the union budget brought about? Is there going to be any tweak we can expect on the amount of tax we'll pay next year?
Yes, Mobina, unfortunately there is. So as you rightly pointed out, no change to the tax rates and tax slabs. So that was a big relief for most of us who were expecting some sort of COVID cess across the board, or perhaps a higher tax rate or surcharge for the high income groups. But so that's a relief that those haven't come in. But there's one thing which has come in, which is taxation of interest earned on your provident fund. So as you know, Mobina, last year we had a provision which was introducing taxation of employer contributions in excess of 7.5 lakhs in the aggregate between PF, NPS and superannuation fund contributions. But this year, they have introduced another provision where at the time of withdrawal of your accumulated PF balance, even if you satisfy all the conditions for exemption of that balance, the interest that you have earned, if your contributions as an employee contributions were more than 2.5 lakhs during the year, the interest earned on that will be taxable. So this is surprising one, which you could say that most people were not expecting.
I guess the rationale behind that would be that, firstly, it's of course, 2.5 lakh rupees of interest on an annual basis. So if we have to, let's say, take roughly 8 to 8.5% as a rate of interest, so that means that the deposit has to be that much. So I'm assuming, Alok, it's for a small... Yes, go on.
No, Mobina, sorry, just to clarify, it's the interest earned if your employee contributions are in excess of 2.5 lakhs per annum. So it is not a very high threshold, because if you, for your employee contributions to be more than 2.5 lakhs per annum at the rate of, let's say, just the 12%, assuming you are not making any voluntary PF contributions, then at a basic salary of 20.83 lakhs per annum, you would cross that 2.5 lakh employee PF contribution threshold. So let's say somebody with a CTC of 50 lakhs, who has a basic salary of around 21 lakhs, which is considered for PF, his contributions, the employee contributions, then that would exceed 2.5 lakhs. And therefore, the interest on that employee contributions would no longer be tax-free on a prospective basis. So from 21, 22 onwards.
So your basic salary would then be 21 lakhs, and then you take, roughly 12% of that, which comes to 2.5 lakh rupees. So the contribution should be 2.5 lakh rupees, not the interest. The contribution, if it exceeds 2.5 lakh rupees, then the interest on that will no longer be tax-free. And yeah, I think the idea behind that is then that, you don't want employees essentially putting how much ever they can in their provident fund to be able to enjoy the tax-free provision, I guess, in a way. So this is, I guess, going to be an important one. Additionally, I want to talk about some of the schemes that have been put up for dispute resolution when we have, our income tax cases that go in for dispute. We make of course, no, we don't make any more appearances. Everything, of course, is faceless. But how has essentially the whole assessment process been eased? I understand that the ITAT or the Income Tax Appellate Tribunal as well will now be completely done via, through a digital mode, which is great, because up until now we had the first step of the litigation, which would be done faceless. Now even the next step is digital. So if you could just explain that to us as well.
Sure. So we were already using the faceless assessment scheme until now, and you would not have to visit the tax officer. You could submit all the information online to the tax officer. And while there were teething troubles, I think we have seen not so bad situation where you would finally be able to cross the line in terms of closing the assessments. I would say it probably takes a little bit more back and forth because you're dealing with somebody at the other end of an email, but it's a good start. And now they have extended that to the tribunal as well. But again, Mobina, I would like to share a more important relaxation, which is in terms of the timeline of assessments. So like the FM mentioned, now we have the window of only 4 years, which was, so for reopening your assessment, it was 4 years, up to 4 years, 4 to 6 years, or you could even have 16 years. So now they have crunched that into two simple timelines. Your assessments can be reopened up to 3 years from the end of the assessment year, which is basically 4 years from the end of the financial year. Or it could be 10 years from the end of the assessment year, which is basically 11 years if the income which has escaped assessment is exceeding 50 lakhs. So that's a very good threshold where a lot of smaller taxpayers would not be affected by that. So the 16 years maximum timeline has come down to 10 years. And you can have a situation where, let's say, your tax filing for March 21, by March of 2025, you will know that you are not being picked up even for a reassessment. So in a span of 4 years from the end of the financial year, your tax affairs would be completely settled, so to speak, unless you're in that 50 lakh plus category that we discussed. So I would say that is also a significant ease from a taxpayer headache perspective, because if you have these old assessments, then you can imagine it's quite painful to pull out all the information and provide all those clarifications.
Yeah, it definitely is quite a breather, especially if you're a small taxpayer, because you have the surety that, your tax case of, really old years is finally closed. Okay, we have a live caller joining us now, Mangalam. Hi, Mangalam. Good evening, and thank you for calling in. What's your question?
Good evening, ma'am. See, I am a senior citizen, age 73 years.
Okay.
Madam has considerably taken consideration of giving 75 years and above tax concession, filing the tax return.
Yes.
But I just wanted to see that if it is made between 70 to 75, because this is the age where we can go a little bit outside and all. 75 onwards, people may live or may not be very hardly, especially female people. So those gap, if it is given, at least for a few years, at least we can enjoy the life with the tax benefits. She is very considerate and I hope she can do this much, at least if you can put a word on this matter, please.
Okay, Mangalamji, we'll definitely try our best. We are interviewing the finance minister. But yeah, Mangalamji, it's like this. Then if you bring it to 70, then what's not to say that somebody who's 68 will say that, it's just a question of 2 more years, frankly. But it's just 2 more years of filing the return, and guess what? She's made the process very simple. Everything comes pre-filled in the income tax return. Now, even any long-term capital gain, of course, this is firstly applicable only to those individuals who have interest and pension income. But even long-term capital gain now from listed securities will come pre-filled in your return. So I think the entire process is made very simple. But yes, I understand, Mangalamji, where you're coming from. If I was in your place, I would have probably hoped for the same as well. We'll definitely, and I hope through ET now, through the finance Secretary and all the officials watching. They've heard you, Mangalam ji. So who knows, maybe they may be convinced by listening to you. Okay. Alok, I wanted to ask you about things that have been done for affordable housing. There was this 1.5 lakh extra deduction that the FM had allowed last year. Just to refresh and jog our memories once again, what exactly was that, and what's the latest that she has announced over there?
Sure, Mavina. So we have a 2 lakh rupee deduction in any case. In addition to that, for affordable housing, the FM had introduced an additional deduction of 1.5 lakhs for affordable housing where the stamp duty value was up to 45 lakhs. So it's a small ticket size we are looking at. And they have also defined the size for metros. So it's fairly for the small apartments in a metro where you can imagine the 45 lakh value will not get you a very large apartment. And what they've done is, this was expected. The cutoff for getting this deduction was where the loan should have been sanctioned by 31st March of 2021. And now that has been extended by another year. So you can get this deduction so long as your loans are sanctioned by March 2022. So a total deduction of 3.5 lakhs, 2 plus 1.5, which was already there, just extended.
So in total, basically, these individuals who are buying these affordable category homes will get 3.5 lakhs. Am I right, Alok?
That's right.
Till 31st.
Right.
Okay.
That's right.
Great. Well, folks, we are out of time, so we'll have to wrap up this tax Q&A session here. Alok, thank you so much for joining us today on The Money Show and, answering our questions and queries as well. We'll take a very short break on the show, but when we return, we will be addressing indirect tax with Deloitte India. Don't go anywhere.
From savings accounts to...
Or click on a link and then share with them your OTP and PIN to avail of the deferment. But once you do it, your money will be siphoned out of your bank account. They will send you a message with a link pretending to show you a location or a heat map of COVID-19 positive patients near you, or even say getting access to unemployment fund. Chances are, out of fear, you click on the link or even download the app. But once this app is installed, your smartphone becomes remotely controlled and people can have access to your OTP PIN and all your personal data that is stored on your phone. Some fraudsters may even create dozens of similar sounding UPI IDs to try and trick you into donating for so-called COVID-19 patients or charities. Make sure to check the fund details twice yourself from authentic sources before you actually donate any money. Stay home, stay secure, be alert. Times Network is fighting fear with facts.
Hi.
Hi, welcome back.
Thank you.
Coffee?
Yes, long day today. Very tired.
I'll just get it. Thank you.
Hey, you did not pick up Arav today?
His teacher texted.
Huh?
He has extra classes today.
Thank you. Really? Oh, is he still angry?
He is a little.
I think $1,000 के लिए ना we scolded him too much here.
Ravi, बात 1,000 रुपए की नहीं है. He needs to learn.
I know. I was actually thinking उसके लिए एक bank account खुलवाते हैं. What do you say?
Bank account? Why?
See, he's been hinting एक महीने से that he wants pocket money. So I was thinking, why not?
Ravi, he just spent 1,000 rupees on a random app. That too without asking us. And you want to give him more money to spend?
I know, Baba, but instead of punishing him, maybe we can teach him this way.
Teach him what? कि और पैसे कैसे उड़ाते हैं?
He'll have his own card and he'll learn early on that if he spends, he need to return it also. It's a good idea. Think about it.
Okay, fine. We'll try it. But
Welcome back. You're watching The Money Show on ET now. Well, we spoke about personal finance. We spoke about direct taxes as well. Now let's talk about indirect tax. Interestingly, this was one category where we actually saw quite a few tweaks and changes as opposed to what we usually see in direct taxes. This time around, in fact, the FM slightly tweaked the structure of customs duty as well. This will, have major ramifications of sorts, especially on, small manufacturers of some of these items. In fact, that whole table will come up for you in just a bit on your screens, because not only has the basic customs duty been cut, while that may be a positive, what's actually happened is that the FM has introduced a new cess. It's called the Agriculture and Infrastructure Development Cess. Now, as we know, a cess is usually directed towards a particular purpose. In this case, whatever proceeds will be collected from the cess will be used towards agriculture and infrastructure, as the name suggests. We have with us Mahesh Jaisingh, partner and leader for indirect tax with Deloitte India. Mahesh, thank you so much for joining in today on The Money Show. I think this was a budget that saw quite a bit in terms of indirect taxes as opposed to what we've seen in the past. So let's first, get in your sense on, what are the tweaks you've seen? How do you think they fare for manufacturers and importers?
Thank you. I think the budget's been an interesting one. In terms of the narrative, it's pretty much as expected, where the focus has been on Make in India and manufacturing, as well as ease of doing business and, in a sense, streamlining processes around the customs side. So to recap on the indirect tax, you have the customs law and the GST law. So as far as customs is concerned, as I said, manufacture and process simplification and fine-tuning has been the focus of the budget. The budget also covered in brief something about the GST law, and I'll cover that as we speak today. But GST, for the benefit of all, is not a budget exercise. It is administered by the GST Council, which is represented by the center and the state. Nevertheless, on the budget day, it's important to hear the directional points around GST, which the finance minister did cover, as well as some of the legislative changes that have happened on the GST front.
You know what? In fact, Mahesh, we've already got our phone lines ringing for you. Got quite a few questions for you coming in. So first is from Gaumati Narayan from Mumbai. Okay, that line just got snapped. Apologies for that. Perils of live television. We'll just try and reconnect with her again. Now, one interesting part is this imposition of this cess. Mahesh, how essentially does it change lives for manufacturers and for consumers alike? I mean, I remember when I heard, the FM saying that there's going to be the cess imposed. Firstly, okay, it's not a COVID cess, but it is this agri and infra development cess. Does it really change anything for the producer and the end consumer as well? Because the FM did say that, look, the net impact on the pricing for a consumer like you and me is going to stay the same.
Absolutely. So I think you answered it. And yes, there was this apprehension that is it a hidden tax or whatever. I think what has happened is that for certain products, agriculture products, liquor, and, certain other oils and specific products which were on the higher rate of duty, what the government has done is that they've split the duty into a normal duty as well as the cess. To give you an example, liquor was subject to 150% customs duty until the budget. Now the basic duty is 50 and the cess is 100. So the net price for that product remains at 150%. Apples as well was at 50% duty if you import apples. And now what's happened is the duty is split between a basic duty of 15 and 35 of the cess. So the first question that may cross our mind is, why was this done at all? What was the benefit of the split? The key benefit is that from an ability to use the funds, the amount which is assessed gets deployed for the specific element of what the tax has been collected for, in this case, it is the agriculture, infrastructure, and development. So headline message, cost of these products doesn't go up. I believe one or two products may have a marginal increase. Without sparing that, keeping that aside, total of about 25 products exist. The majority of it, the net tax and customs duty remains the same.
Okay, and in fact, that's the calculation as well that Deloitte shared with us on how essentially this rejig in the structure will not really move things a lot, just maybe by a few paise here and there on a per litre basis. Okay, we have a very interesting question coming in from Karthikeyan. He says, I'm a regular taxpayer concerned on the continuous rise in petrol prices. Well, unfortunately, all of us are. We are paying 92 rupees per litre on petrol today. Now comes the agri-infra cess of 2.5 rupees per litre of petrol, whether this is considered as a payment to farmer every quarter. Also, there's ethanol mixing in petrol is 20%, but petrol prices are rising. Are excise duty and other duties considered on the 80% part or the 100%, which includes the 20% ethanol mix? So he wants to know essentially how would essentially, that impact petrol prices, because he's right in saying that, yes, there's the whole ethanol mixing as well that comes in. Any clarification that you'd like to give here, Mahesh, or do you think we should wait? Yeah.
I think a little bit more details are waited, but let me start off first by saying, yes, it is. I see the question to have twofold. One is a reaction or a observation that the duties are getting prohibitive as the oil price and the rates of duties go up. Actually, it's important to note that the duties that are levied on any oil and gas, which you and I and the caller uses as a consumer, is subject not to the central levy of duties only, but also to the state duties. And that's why you see a litre of petrol or diesel varies between Mumbai, Delhi, Bangalore, Chennai and others, because that varies more often than not on the state duties and taxes. So, and this has been a trend that when the oil rates drop, the net duty increases marginally because they feel the consumer, price is in a sense not going to be significantly impacted. But because that's a percentage on a base price, and when the prices go back and bounce back up, the duties go up. So one does hope and believe that there'll be an overall review and rationalization of the duties of oil and gas. But as things stand, it's not only that the budget is the event where you would hope and believe that oil and gas would in a way come down. So that's something I hope clarifies.
All right. Okay. Fair enough. Once again, just as they did for direct tax, to a certain extent, they have done this for indirect tax as well. And that is the compliance process, because sometimes, and especially for small business owners, it becomes a little cumbersome. So anything on that front, maybe in the ease of return filing or in terms of documentation, when one goes through the entire indirect tax compliance process, right from filing return to payment, anything that's been announced over there?
Yes, it has. So we'll split this into two. One is, yes, it has evolved over the last few months, and there's some announcements as well. Point one for customs and point two for GST. As far as customs goes, what the government has done in the last budget was announced legal provisions where you could have faceless assessments so that you don't actually have to get your assessment done at each port. And over a short to medium term, your compliance becomes easier. This faceless assessment was formally launched only on September 2020. And there have been some teething troubles, but I think there's been some level of, streamlining of that processes, and companies are seeing the benefit of having faceless assessment. Coming to the GST law, as I mentioned, the budget ordinarily does not announce specific GST changes, but this time around we did have a GST announcement around the procedure of the annual audit, which is the 9C certificate of the 9C related document that you file. It would have to be certified by a statutory auditor in the past. That has been done away with. So to some extent, it's a bit of a relaxation. But other than that, the budget has not got into the monthly returns and others. And that space, we've been seeing a lot of action with the e-invoicing coming in from October 1, 2020 and Jan 1, 2021 for companies of 500 crores and 100 crore plus turnover. And we expect that the threshold will reduce to 5 crores from April 1, 2021. So without digressing too much, once you get the e-invoicing done, your return compliance process becomes far more automated, and that's what companies are seeing. So it has been a bit of a challenge to get into the e-invoicing mode, but once you're there, then things get automated and simplified on a regular basis.
All right. You know what? We'll just take a very short break right here on the show, but be right back with more.
Sure.
update, more exciting. You're his guardian, not me.
हाँ हाँ मेरा बेटा है, जल्दी समझ जाएगा.
अच्छा, वो जो तुमने आज तक नहीं दिए.
A wise decision is wise only if you pass on the advice. Teach your children the value of investing and compounding early.
The world has been forced into a standstill. Every day, the battle becoming more uphill. Now, more than ever, it's easy to believe all the naysayers who say the Indian economy will struggle to recover. All the doomsdayers who think it's time to look for an exit strategy and cower. Well, no one believed India could win the 1983 World Cup. But we did. No one believed a man from rural India could develop an affordable sanitary product. But he did. No one believed India could send a satellite to Mars. But we did. Every single time we were backed into a corner, we came out swinging against all odds. Despite every obstacle, it's time again for a rematch. You ready for it?
He knows the market trends today and has mastered them over the last 15 years.
Bringing greed and fear and business analysis together, I think that's what day in, day out Nikunj does.
He tracks the biggest business stories that impact the growth of your wealth.
Forces you to come up with a specific recommendation and not just give general answers.
His keen market sense.
Joining us now is the top boss of ITC, Sanjeev Puri, who is also the chairman of the National Council for Agriculture at CII. Mr. Puri, thank you so much for giving time to ET now. This is Nayanthara Rai, actually joining you from the CII headquarters. I want to begin by first asking you, the Union Budget 2021 has managed to smash all kind of records on the stock markets. A big thumbs up that's coming in from all stakeholders of the economy. Mr. Puri, do you think the finance minister, with all the announcements that have been made, has convinced industry to do a turnaround, to start investing? Have the animal spirits been unleashed?
Well, first of all, Nayanthara, thank you for having me on the show. And yes, this is indeed a visionary, a growth-oriented budget with focus on the 6 very important pillars to lay the foundation of sustained growth of the economy in future. It is very welcome that there has been an expansion in the fiscal space with a very clear glide path, and the quality of expenditure is also commendable. Last year also the capital expenditure has been better than the original estimates, and there is a significant enhancement going forward. So this investment in infrastructure is certainly going to not only create livelihoods, which is very important today, it's a very important requirement today, but also over time enhance competitiveness of the economy, and hopefully these investments will set the virtuous cycle of employment and consumption and investment. Industry investment will certainly happen when capacity utilizations improve. And the second factor is when, the corporate earnings are better, and that's already starting to happen. And some time back, the Honorable Finance Minister had also reduce the, the corporate tax. That also enhances the competitiveness of investment in India. So I think all this certainly augurs well. And in addition to that, I think the focus on inclusive growth, the focus on rural infrastructure, the focus on human capital deployment, on quality of life, I think this is also going to create social equity. So all in all, it's a terrific budget, takes care of growth, sets the growth cycle in pace, and also has the right levers in place to make sure that the growth is inclusive and sustainable.
In fact, Mr. Puri, because you're talking about the high quality government expenditure, the focus on infrastructure, the benefit of all of that will of course come in the years to come. But in the pandemic year, what we also saw was that a lot of growth was coming from the smaller towns and from rural India. But the kind of thrust that we're seeing, the lifetime hike expenditure that is being planned by the government, how is all of this likely to pan out in the immediate post-corona world?
See, while the competitiveness of the economy could happen over a period of time as the projects get commissioned, but the moment infrastructure development starts, that creates livelihoods, that creates consumption in the economy. And as far as the rural is concerned, it's been more resilient than urban during the pandemic year. I think the agriculture sector has performed relatively better. It has been quite resilient during these difficult period. And I think government also has extended timely support to this sector during the year. I think all this augur well, and with the investments that are also there in rural infrastructure and the better performance of the agriculture sector, I do believe that the rural demand and consumption is certainly going to be continue to be resilient.
But so, Mr. Puri, do you think your industry peers will start now making announcements even if they don't make announcements, will stop being stubborn when it comes to not investing? Will we see the private sector capex cycle being turned around post this budget?
I think private sector is obviously keen to invest. It's always keen to invest when there is opportunity. I think there is no I think it would not be right to say there is any stubbornness not to invest. When there is opportunity, certainly the private sector is very keen to invest. Now, as I said, investment depends on capacity utilization. And I think with the sustained growth of consumption, we will be soon coming to a point where investment cycles will come. I think it's a matter of time when investment cycles will come. And also, with the reduction in corporate tax, I think the investments are getting more attractive. So certainly investments will happen. I'm quite optimistic about it. And it is something that I think it's going to actually be, in my view, a virtuous cycle. As consumption picks up, investments happen, these will create further livelihoods and therefore further consumption, and it's going to be a virtuous cycle of employment, investments, growth, and it will be sustained.
Because Mr. Puri, while the stock markets, stakeholders are celebrating, as they rightly should, a stable tax regime. I think there is no COVID cess, there is no rich, super rich tax, there is no tinkering with the personal income tax slabs. You've got stability, and that's what everybody always wants, right? But on the flip side then, another way to look at it, and critics always look for ways, don't they, is that in a pandemic year when they have lost jobs and they've seen salary cuts, all of that, nothing has been done to put more money in the hands of the Aam Aadmi. And how will that impact consumerism?
Well, I think once livelihoods are created, automatically more people are earning. So that I think is a more sustained approach. And of course, I think we must recognize and credit the government for the timely action that the government has been taking during the pandemic period to provide help to those who need it. It's been, in fact, the reaction was very, very swift, I would say. And there are also incentives that have been announced to enhance employment. But in my view, the most important pillar to creating inclusive growth is to create sustained livelihoods. I think infrastructure is going to kickstart it. Let me also talk about another sector, and that is the agriculture sector. And if you, not merely the budget, if you go back and look at the last year, there have been a number of policy interventions in agriculture. And a lot of them are to do on the supply side, which is the formation of FPOs, cluster-based business organizations, the agri-infrastructure funds that provide the tools to actually make the back end more productive, enhance the quality of the back end, quality of produce in the back end. So these are strong interventions that have happened. And this budget accelerates the process because it has enhanced the funds allocated for such interventions. So it's going to create a lot of productivity, and this productivity in turn will help multiply farmer incomes. The second is there are also, other policy interventions that have happened for enhancing the market linkages, which has also been a problem area in agriculture. Then you look at the PLI scheme. The PLI scheme also provides the impetus to value addition in agriculture. So look at it, competitive agri-value chains, better market linkages, incentives to kickstart value addition in agriculture. These augur well, and agriculture is employing about nearly half of India's workforce. And when quality of incomes improve here, this can materially impact consumption cycles in the economy and kickstart a virtuous cycle. So both, the investments in for example, in infrastructure and the attempt to, or the interventions to make agriculture competitive, to multiply farmer incomes, I think both of it augur very well for the economy. And it's going to, over time, I believe, take India into a much higher trajectory of growth and sustained growth, which is very important.
So, Mr. Sanjeev Puri, I want to talk to you more about agriculture. Now, budget is, of course, a financial review, reform, but it's also a political message that goes out. And the Finance Minister, Nirmala Sitharaman, tackled it head-on. Look at the amount of time she spent on agriculture, the amount of time she spoke about MSP, for example. Now, all of this, of course, will have a rub-off effect on ancillary industries. Let's talk about FMCG, for example.
Well, FMCG's growth is dependent on consumption in the economy. So anything that boosts consumption will lead to further growth in FMCG. And as I've just said, that all the right levers have been pressed to create livelihoods, to make agriculture more productive, to enhance farmer incomes. So all this will certainly give a boost to consumption, and therefore FMCG should also benefit over a period of time.
From savings accounts to
simplifies financial jargon to make you market ready.
A market opening without Nikunj Dalmia, A, is clearly unthinkable, and B, it will clearly be less enthusiastic.
He is most trusted by market veterans and India Inc. alike.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing.
Nikunj, I must say you have good memory, or you're refreshing up from past recordings.
This is a sensitive question, a question which is absolutely critical to us.
No, beautiful question. Very good insight.
A name synonymous with Indian stock markets. Nikunj Dalmia on ET Now.
With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do. We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. Hello and welcome to Budget Day coverage live on India's #1 business channel, ET Now. In less than an hour from now, the Finance Minister would be standing on the floor of the Parliament and presenting the first budget of the decade.
I present the budget for the year 2021-2022. To ensure that the economy is given the required push, our BE estimates for expenditure in 21-22 are 34.83 lakh crore.
आज के बजट में आत्मनिर्भरता का विजन भी है और हर नागरिक, हर वर्ग का समावेश भी है।
Today is, of course, the D-Day. In conversation with Finance Minister Nirmala Sitharaman's A-team. Joining us now on ET Now is Secretary DEA as well as Secretary Banking. Sir, appreciate you both taking your time out as well as speaking with us today at ET Now. Mr. Bajaj, let me first come to you and ask you about the nominal GDP projection, something that I asked the Finance Minister as well. The budget is pegging the nominal GDP at 14.4%, but the economic survey says that we will grow at 15.4%, the highest nominal GDP that we're likely to see since independence. Why are the budget's nominal GDP numbers a little more tempered than the economic survey?
I think we were always blamed for the fact that we were always over-ambitious, something that we could never achieve. And secondly, as the Finance Minister said, and said it very rightly, that team works independently, so we also have a check on each other. So I would say that we are very close to each other, and I hope he's right and I'm wrong.
Let me also ask you, sir, and a lot of people are also asking this, the budget estimating, of course, the nominal GDP at 14.4%, but what is the, assumption that you're making for the real GDP deflator, and what kind of inflation numbers would you be pegging in? Because a lot of people say because the budget is giving such a big push towards infrastructure projects and, of course, a big stimulus for the economy, it is likely to have an inflationary impact as well.
I think the very fact that we are spending this money that we are borrowing from the market on infrastructure should not have an impact on inflation as much as you are mentioning. Nevertheless, we expect that the inflation should be somewhere 4 to 4.4. So the real GDP, as per our estimate, is 10%. But it could actually even be higher because we have increased our infrastructure spend this time by a mammoth 35%. And let me say that this is the highest that I have seen the figures. In 1 year it is higher, but I was also there in Ministry of Finance then. We pushed the money to Reserve Bank of India in the morning and got the money back from Reserve Bank of India in the evening on account of SBI, some change of shares of SBI. So this is the highest capital infra increase that has ever happened in the budget.
How hopeful are you that this will actually help you to meet that 11.5% target that the IMF is talking about, or the 11% target that the economic survey is talking about, given the fact that, before COVID, India was growing at a meager 4.2%?
So basically, if you see that we have now shifted somewhat our gears in terms of trying to spend our money more purposefully, and we are actually doing infrastructure spend. That is one. The second thing is, if you look at the reforms that we are trying to bring in, the reforms actually had started long ago, Even during COVID, normally you would expect that we would only be concentrating on health. We did not do that. We started doing a lot of reforms, and the reforms are actually continuing. And some of the reforms that have come up, I don't have to repeat them. I'm sure your programs have already carried them. So these reforms, along with the proper, useful spend of money, I'm sure will give us a GDP growth of what we have estimated.
Right. You know, since you're talking about reforms, let me shift to the banking secretary as well and ask, sir, the bad bank finally is something that we now are looking at, a national level ARC and an AMC that has been announced in the budget. But many people are questioning as to how helpful will this bad bank be in terms of resolution of stressed assets, because the RBI itself is pegging the stress in the system in terms of gross NPAs at close to 16.2% in the worst case scenario post-COVID.
You'll have to give me a little more time to explain the whole.
Yes, please.
See, let's begin with 2014-15 when the asset quality review started. So the stressed assets were recognized, recapitalization was done, which means capital was pumped into the banks, and the reforms agenda was also embarked upon. So the NPAs actually peaked in 2018 because the recognition almost got completed around that time. And comes December 20, if you look at the figures, they are all RBI figures, the NPA, the net NPA has come down below 3. So the balance sheet to a large extent has been cleaned. Why? The gap between the GNPA and NPA has widened because the provision coverage ratio has gone up to 85%. So which means the banks have provided for to a large extent. Now, what is this ARC, AMC going to do? Now, there are large number of legacy NPAs worth about more than 2 lakh crores, which are lying in the dumps. The banks are not able to realize that money. So even if you take the net book value, it will be more than 50-60,000 crores, and the net asset value could be much more. So the resolution has not happened because you'll ask, why not the existing ARCs? The answer